us, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should
Welcome, you're watching India Market Open, and yes, Sunday was a celebration of the champions. Such an exciting way to round off the weekend and the entire trophy. I'm sure you guys were glued.
Yeah, I mean, we need good news on the cricket front after the T20 World Cup. To my mind, this wasn't as big as the T20 World Cup. Now the next frontier is the 50-over World Cup, which will come in maybe another 2 years' time, 2027. Yeah. But this is sweet because it's a 50-over format. We last won in 2013. So 12 years hence, it's great. I mean, it's great to see.
And I think everyone got a good pitch except a Virat Kohli. I think that was the only aspect that I could consider on this front.
Yeah, I mean, he didn't play in the finals, but well, he was instrumental in a number of ways for us to reach the final as well, including the match against Pakistan. So all of that is great. I mean, yes, but you take it as it comes. This is great stuff. India now has 2 ICC events trophies back to back, and this should certainly be a booster for a lot of youngsters who are watching this game.
I think also a booster over the weekend for Swiggy, Zomato, Sapphire Foods, a whole host of companies.
Ola's and Ubers as well, because there was Lollapalooza, which was also happening, right?
Yeah.
So events and events, I think.
Events and events always adds to the economy as well. All right. So that was some good news. As far as the markets are concerned, will this week continue some of the uptrend we saw towards the end of the week? Maybe, maybe not. That choppiness and that uncertainty does continue. So a quick look at what the setup is. Now, look at Friday's session in the US markets. They did end in the green, but after a very volatile session. The Dow ended finally with about 0.5% gains, but it was a painful week on balance due to the tariff turbulence. If I look at the entirety of last week for US markets, the S&P 500 has closed 3.1% down over that week. The Dow nearly 2.5% down, and the Nasdaq 3.5% down. So that pain continues. Even in terms of Dow futures, and I'll just pull up Dow futures for you one more time. The uncertainty continues there, and now the big issue on the horizon is the R word. I would say fears of recession. The kind of data that has come in, and I'll go into it in detail, the jobs data, high frequency data is pointing to a bit of turbulence as far as the US economy is concerned. And President Trump was asked this question at a briefing. What do you think about US recession? And this is what he says. It's a vague quote, but an important one. He says, I hate to predict things like that. There is a period of transition because of what we're doing. It's very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time, but I think it should be great for us. I mean, I think it should be great. I mean, now read between those lines and all of that grammar. At the end of the day, to the conclusion of, he's not coming out and saying, no, there won't be a recession, there won't be short-term pain. You hear what the Commerce Secretary is saying, you hear what the Finance Secretary is saying, and that's the same thing, that you might see short-term pain till the US moves through this period of transition which Donald Trump is trying to put into place with tariffs, etc. He wants to push more manufacturing in the United States. It's going to come at a short-term cost. That's perhaps what we're seeing in the Dow futures. And then let's come to the data. Now, the Feb jobs data was what everyone was waiting for, came out Friday evening US time, Friday in the day US time actually. And it was disappointing. Non-farm payroll increased by about 151,000, more than the month before, which was about 125,000, but expectations were of 170,000 in terms of increases of jobs. So definitely a disappointment there. Unemployment rate was expected to remain steady at 4%, has risen to 4.1%. The benchmark 10-year climbed about 2 basis points to 4.3. And then look at what Powell has also said. Jerome Powell, the Fed chair, has said that the Fed is focused on separating the signal from the noise as the outlook evolves. We do not need to be in a hurry, and we're positioned to wait for greater clarity. So one sort of cloud thrown on the prospects of rate cut as well. Oil has also jumped because now even Russia has been threatened by Trump sanctions. So clearly there are no friends, there are no foes when it comes to sanctions. Brent was at about $70 a barrel. Let's look at Asia very quickly. Asia has been a mixed bag. All of last week, at the end of last week, it was all about bond yields in Japan hitting new highs in the hopes and anticipation of a rate cut by their central bank. That seems to have reversed. Nikkei has recovered, but Hang Seng Shanghai all down in the red. I also want to pull up the implied open before we get to the recap of Friday and last week in the markets. And you're looking like you're in for a bit of a rocky start, about 62 points for the implied open. So all in all, I would say, can't say very great news coming from the global front. Uncertainty, rockiness, patchiness continues.
Absolutely. In fact, when you mentioned about the jobs data as well, one of the aspects is that even March is expected to remain weak because there was a number which is not been taken into consideration in terms of the government job cuts, right? So that is something which will continue from February to March as well. So that could be one aspect that we should be considering from here on, Neeraj. Yeah. So again, that weakness to what Tamanna is pointing out to in the US is absolutely seen.
Yeah, and it's such a moving piece. So in fact, let's take all of those questions to our guests right today and try and understand what to make of all of this. Rahul Chadha, founder and chief investment officer with Shikhara Investment Management, joins us right now on the show. And it's always a pleasure to talk to Rahul because, I mean, he tracks not just what US does, but an active investor in India and has a focus on EMs as well at Shikhara. Rahul, great having you as always. Thanks for taking the time out. Good evening to you. If you're a cricket fan, even you must be happy with the India victory, but can't say the same for what's happening across the world because the number of moving parts, Rahul, with the US comments, China doing what it is doing, Europe looking like it's coming up. What's the sense? Is it a period of the end of US exceptionalism possibly and a move to EM, including China?
Yeah. So, Neeraj, we've been writing about this since last November, basically, that look, US had some of these long-standing issues which had to be fixed. First and foremost was, again, the fiscal deficit. Fiscal deficit here was running at close to about 6%. Last year, if you see at an average kind of an interest cost of 3.3%, US had 900 billion of interest outgo, which was 20% of government receipts, and that number would have gone to 26%. So obviously, those concerns were there, and as we saw with the Trump administration coming, them looking to reduce the inefficiencies or reduce the bloated government, the uncertainty came in. So markets always trade the second derivative, the delta. And if we go back to November, December, what was the narrative? The narrative was 60% tariffs on China, no rate cuts, just invest in US. I think that narrative is being questioned. We're seeing kind of a tariffs on China a lot lower than what were feared. What we saw with the launch of DeepSeek was China was not far behind in terms of catching up with the US on technology, etc. And now with the US slowdown, again, what is going to happen is rate cuts, which is good for all EMs. So near term, I may say a bit choppy, but again, our view remains that it's going to be a soft landing in US. No deep recession. There are no excesses like the way it happened in 2008 or 2000. So it's going to be a shallow downturn. US is coming from a 4% nominal GDP to about 2.5%, but that's good for the rest of the world.
Rahul, hi, good morning. Tamanna here as well. Just wondering from an emerging markets point of view and an India point of view, if you look at the FII outflow data over the last few days, and yes, FII outflow has been continuing, would you say that the quantum of FII outflows has also been coming down? Are you seeing this as the end of the cycle, of exits from India for global funds? Or is that
Absolutely.
maybe reading too much into the data?
Yeah. No. I think it's good to be an optimist today. But again, on a serious note, clearly one is sensing that. See, valuations have become a lot more attractive in India, and markets, again, as we were saying, trade the second derivative. So if you look at the Q and Q growth in fourth quarter, that was better than the previous quarter. In India, also we've seen the first kind of an rate cut, some bit of a stimulus from the government in terms of the tax cuts. So all these things will take a time to kind of work through the economy. And our view is that come kind of a second quarter of this calendar year, you'll see EM allocations kind of a pickup. Right now, what happened in Q1 was EM funds moved from India, which was a significant weight in the portfolio, to China because the valuations were cheap. There was this whole re-rating because of DeepSeek, etc. But come Q2, I think EMs as an asset class get money because a lot of the money over the last 3-4 years went out of international equities, went out of Europe, went out of EMs back into the US. If you see, US is very crowded, and people are yet to come around to the view that look, US will go through a 2-3 year course correction, and this is similar to what happened to us in India when we had DEM on GST. GST particularly was required. It happened to China when China tried to correct the monopolies of these internet companies, when they tried to fix the real estate bubble and kind of take care of these excessive spends on private education. It always takes more than 6 months. But look, these things are much needed from a 10-year perspective. It would have been a bigger negative for markets had US bond yields gone to 5% and caused a severe correction. So I think this is good that US kind of course corrects here and gives the rest of the world a chance to enjoy some capital inflows here.
That's an interesting point, Rahul. This is Hiral on this side as well. So clearly, when you're saying, there could be funds coming into emerging markets and you do see India attractive, would you be a buyer in terms of India at the current point in time? And if so, where would your bets be? Because clearly it's a game versus, if you have to look at large caps versus the broader markets.
So clearly, large caps in India are attractive here, and we've been saying that for a month or so. That large caps have bottomed. It's coming out. Look at price performance for banks. I think last month and a half, they've been fairly stable. You get seeing some bids in the likes of Reliance, etc. All these things. I think what one has to also grapple or think seriously in India is with this tech disruption hitting hard. Do you want to pay more than 30 times for most businesses? So that's one part of thing which one has to kind of think from a India perspective. And the other thing which is happening is particularly in consumer businesses, you're seeing heightened competitive intensity. See, what happened over the last 2-3 years was almost large part of a EM PE money went to India rather than go to China. So what we've seen in China is competitive intensity reduce, whereas in India that competitive intensity is increased considerably. So I think tech disruption and the competitive intensity aside, any companies, any sectors which meet the cut for these two criteria would be on our buy list.
Rahul, I have one final question, and this is a bit of a micro question, but this is something that is important that has happened in India, right? I mean, you don't often see PSU firms being headed by private sector head honchos, right? And Kearney's Vikas Kaushal being appointed as the CEO of HPCL. I mean, this is not something that we are used to. If anything, there are people who believe that private sector banks might get a PSU CEO, and that might be a structural derating, as is being spoken about for IndusInd Bank. But for HPCL to get a private sector CEO, it's a pocket that is long shackled with internal bureaucracies. Now you have a private sector guy coming at the helm of a PSU, which might actually have a great run simply because oil prices have come off and likely to stay lower. How important could this be in the journey or the life cycle of a public sector enterprises like an HPCL? I'm not asking for a buy or sell, but just this event and what it could mean.
No, I think this is clearly a positive. We've seen that with Modi government, and kudos to the government for that. They've not really interfered much with the functioning of PSUs. The appointees were fairly good over the last 4-5 years, and I think this is a move to the right direction. In fact, looking at what US is doing at Dodge, it would be a good thing if our government in India can also ease some of these bureaucratic hassles, etc., and extract the best in terms of productivity efficiencies from these PSUs which we have and the huge assets the state owns, basically.
Okay, thanks a lot for that. Thanks a lot for that, Rahul. Really appreciate your time this morning and your evening. Have a great evening or whatever is left of it, and talk to you soon.
Thank you. Bye.
Yeah, you know what I also find interesting is to see at the global end how this war of words between the United States and its partners go. And one big development there that we need to talk about is the new head of state in Canada, who is saying now that we will keep our tariffs on until the Americans show us respect. That's the word coming in from Canada's next Prime Minister, Mark Carney, who has taken over from Justin Trudeau, of course the same party, and he's won the race at the Liberal Party to take on the top job. But his profile is also interesting. He's a former central banker, and he's won the Liberal leadership race in a landslide. Let's listen in to what the next Canadian Prime Minister is saying about the ongoing war of words and tariff war with the United States.
The Canadian government
Le gouvernement
has rightly
canadien
retaliated
est allé
and
de
is
l'avant
rightly
avec ses mesures
retaliating
de
with our own
représailles.
tariffs that will
Nous avons
have
nos propres
maximum
tarifs.
impact in the
Cela aura
United
une
States and
incidence
minimum impact
importante aux
here in Canada.
États-Unis avec peu de répercussions ici au Canada.
My government will keep our tariffs
Nous
on
maintiendrons ces
until the
tarifs
Americans show us
jusqu'à ce que les
respect.
Américains...
America is not Canada.
Les États-Unis, ce n'est
And
pas le
Canada
Canada.
never,
Et
ever
le
will
Canada
be part of
ne fera
America
jamais
in
partie des
any
États-Unis
way, shape, or
d'une
form.
façon...
So interestingly, we've taken the one with the French translation on it. But he's a notable guy, Mark Carney. He's worked with Goldman Sachs for 13 years, was appointed as Deputy Governor of the Bank of Canada in 2003, appointed the Governor at the Bank of Canada in 2008, and then became the first non-British Governor of the Bank of England as well in 2013. He's the first person to lead two G7 central banks, and in 2020 became United Nations envoy on finance and climate change. So quite an impressive CV there for the new Canadian Prime Minister after Justin Trudeau. But doesn't mean his policies change too much, because at the end of the day, he's from a party which has got a certain political leaning, and that is what is going to come as at the forefront of clashes with Trump.
Absolutely, but what will all of this mean for India is going to be crucial from here on, right, Tamanna? Because if you see last week as well, it was an interesting week for the Indian markets. Clearly, a flat note is where we ended. However, this was after two good days, right? And we've seen clear resistance at around 22,500 in terms of Nifty 50 overall so far. Now, if you see in terms of the Sensex, we finished marginally lower on Friday, and it has been a quite turbulent session. I mean, you had global trade conflicts. That is what has actually made investors uneasy as well. Nifty succeedingly staying above the 22,500 mark overall. If you look at individual stocks as well, Reliance, Nestle, Tata Motors, Adani Ports, Tata Steel, Ultratech and Kotak Mahindra, these were a few of the ones which ended with good gains on Friday's session. However, declines were seen in Zomato, IndusInd Bank, NTPC, IT majors like HCL Tech, Infosys, and you had a HUL and ITC that pushed the indices lower as well. Apart from that, if you see in terms of the overall week as well, now we've continued the uptrend for a third consecutive session. A 3-week losing streak is what the markets have broken, and a rebound with Nifty rising nearly 2%. A fall in the dollar index plus the liquidity infusion that we saw by the RBI. Those are the two reasons what came in with regards to support to the Indian markets. In terms of sectors, you had Nifty Metal, which was the top gaining sector last week, wherein Vedanta and Jindal Steel were leading the race. Pharma, Auto, IT, as well as banks actually snapped their 3-week losing streak as well. And FMCG also snapped its 4-week losing streak. So clearly good momentum that has been seen. How sustainable it is, we have to wait and watch. And in terms of broader markets as well, you had the Midcap 150, which actually snapped the 4-day gaining streak. It ended in the green as well. And you had Nifty Small Cap 250 also, which gained for 4 consecutive sessions. So again, Neeraj, if you see, there is that respite that's coming in terms of markets. From here on, whether we continue that sustained uptick is what we need to wait and watch and see. Because if not, I mean, at higher levels, you're again seeing that selling pressure that's coming in.
Yeah, I mean, has the template changed to sell the rise? You could argue yes, but I like so there is a small data point, right? I like the texture of the market as it improved through the week. So look at this data point. The and the last week, 3rd to 7th March, the number of stocks which closed above 5% and the number of stocks which closed below 5% market wide. So on the 3rd of March, 46 stocks closed above 5%, but 274 were below 5%. The texture, look at it, look at how it's improved dramatically as the week went by. And all the rest of the days, the quantum of stocks which really gained dramatically and closed above 5%, way higher than the ones below 5%, so which is actually a positive. All indices ending in the week, also a big positive. And I would reckon that a retreating dollar index as well as lower oil prices could actually help this bounce back get extended. In fact, our colleague Chinmay has dug out data which suggests that the number of stocks witnessing short interest has spiked sharply since November, and such big readings were observed only in August 12th, June 22 and March 23 periods, which were followed by a big short covering rally. So do we see that is the key question. Jeffries, of course, has said that the big concern around central government capex is also wrong, because the capex rose 15% YOY in the month of January as well. We know December was strong. Now we know January has been strong as well. So things are looking at the margin, looking okay. And lastly, on this trade setup, the Goldman Sachs India strategy note, which also says that market technicals suggest that there are signs of bottoming out, technically at least. They are, of course, staying with quality and looking at the oversold screen for bottom fishing. So they're upgrading staples to overweight, and they're raising OMCs and financials to market weight. So if you want to follow Goldman Sachs, maybe technicals are suggesting bottoming out, and there are some pockets that they are mentioning as well. So the going is looking okay, not bad. Let's see if we see a sell-on rise.
Sell-on rise will also perhaps be determined by the whole lot of business updates we start getting in, because a lot hinges on Q4 and what corporates deliver in terms of performance. So let's start with exactly that. RB Infra, the first stock on my watch list this morning, they put a business update out. I'm giving it a thumbs up because numbers look okay on the face of it. Their gross toll collection in Feb, and this is the year-on-year comparative, is 14.5% at 529 crores versus 462 crores. The average per day collection is up 19%. At close to 19 crores versus 16 crores. The management says the continuous robust toll revenue growth in second month of the calendar year and second last month of FY25 looks reassuring. They aim to surpass the toll revenue of FY24. So they're on track for that guidance. So that's the case with IRB, giving it a thumbs up. Lupin, very quickly, Lupin again a thumbs up. They've launched a cardiac tablet. It's called Rivaroxaban. Okay, I'm not going to try this. In the US, the launch follows the US FDA final approval. It's a generic and it's a bioequivalent of a tablet which treats blood clots. The US sales of the equivalent were about 446 million, so which is why it's a big marketplace. Biocon got a similar nod also a few weeks ago. So thumbs up for a Lupin on that count. Want to talk about IndusInd Bank as well. Now, IndusInd Bank, this is an interesting story. The Reserve Bank of India has reappointed the MD and CEO, Sumant Katpalia, for 1 year. The announcement has come just 16 days before his tenure ends. But remember, the extension was sought for 3 years. So it's the second time the RBI has granted an extension to Mr. Katpalia, but for a shorter tenure. He's been leading the bank since 2020, and after the first 3-year tenure, he first got a 2-year extension in March 2023, which would have ended now at the end of the month. Now he's got only 1-year extension. Now, in previous cases where the RBI has given a shorter extension, those have been there. For RBL Bank, for example, in 2021, Mr. Ahuja was given a 1-year extension instead of 3 years. The stock has already been down about 35% in the last 6 months. Most brokerages are saying that perhaps this uncertainty is baked in, but in my view, this is a thumbs down because there's no clarity about who comes next. There's no clarity if Mr. Katpalia will hang on if he only has 1 year visibility to his tenure in such a high position. So this is what Macquarie is saying. They've maintained an outperform with a target price of 1,210 on IndusInd Bank. But they say that the RBI has announced extension of 1 year, which is a disappointment. A shorter extension than they expected. This creates an uncertain environment in the near to medium term, and the CEO may decide to hang up his boots earlier given the suboptimal tenure approval. Then there might be another appointment of a different CEO who, given the current trends, could be a PSU banker, and they believe that that would lead to a structural de-rating. There have been precedents where CEO has received an extension of 3 years post the completion of 1 year tenure. However, the likelihood of this is low in our view. So I would say that even though the stock has corrected thanks to this uncertainty, perhaps you will see more turbulence when it comes to an IndusInd Bank, because will the current MD and CEO hang on with just 1 year out? Yeah.
That's going to be an interesting one, because Friday it was one of the biggest losers as well, right? But apart from the names that Tamanna mentioned, the 3 stocks that are on my radar today will be first Neogen Chemicals. Now, this space has been absolutely important and the street has been watching out for, because in terms of the third quarter, there has been disappointment. But now, on the back of the fire that happened at Dahej, they've gone ahead and cut their FY25-26 revenue guidance. Now, in terms of the FY25 revenue guidance, that has been revised to 765 to 800 crores from 800 to 825 crores. If you talk about their FY26 guidance, that has been lowered to 775 to 850 crores from 950 to 1,000 odd crores. And clearly, this facility was established in February 2022, and this was for the inorganic chemicals. Now, there have been no casualties or injuries that have occurred, and they've said that the reconstruction is expected to take nearly 9 months to a year. So that's one of the major reasons why the revision in terms of the guidance goes, and they will be shifting production of critical specialty products to other sites. Which sites and by when, those are details that are still awaited. But clearly, this is a thumbs down. Stock ended with cuts of around 4% on Friday. There could be further selling pressure that could be coming in on that one. The second one, again from the chemical space, is a Bodal Chemicals. Now, India has gone ahead and imposed anti-dumping duty, I beg your pardon, on TCCA imports, and this is from China and Japan. Now, TCCA is trichloroisocyanuric acid, and this is mainly used in water treatment as well as food processing. In India, Bodal Chemicals is the sole producer of TCCA. And this anti-dumping duty will actually add 50 to 60 odd crores to companies' annual turnover. And this will be effective the 7th of March for 5 years. So a thumbs up coming in for Bodal Chemicals is from the chemical space. And very lastly, IRDA is another one, again a thumbs down, and this is because RBI has denied the company's request for equity investment for hydro project. And this is going to be a 900 megawatt hydroelectric power project in Nepal. But what the company has indicated is that it is not really going to dent their balance sheet or P&L. However, they will represent again to the RBI with regards to this. What's interesting with the IRDA is that it was launched in November 2023, as we know, issued at around 32 rupees per share. It went and made an all-time high of, I think, 310. And from the peak, the stock has nearly come down by 50 to 60%, right? So again, there could be pressure coming in terms of IRDA in today's session as well, Neeraj.
Yeah, so could be interesting, these names as well. So keep an eye out. Very quickly, I'm talking about 3 names. The first one is Narayana Rudalaya is going to establish and operate a network of healthcare centers in India. It's a thumbs up. Now, the reason I've given it the thumbs up because they're still embarking on the plans, but the margins for operating such centers are very high. There are 2 or 3 chains like this in the private sector which operate at very high margins. Narayana has the brand image to also get in more customers for something like this. So keep an eye out for this one. A conversation with Dr. Devi Shetty at some point of time in this week is something that we will do. While IT's been a bit on the sluggish side, I take a brokerage note from CLSA on Infosys as the second stock in focus because they've upgraded the stock to an outperform. They say discretionary demand revival across key verticals and geos remain intact. So clearly CLSA in their conversation with Infosys or otherwise might have seen that there is the discretionary demand revival, and they say with the correction, the Q4 seasonality is priced in, the on-ground demand resilience remains intact according to CLSA. So multiple reasons, of course, but these are the two key things, which is why they've done this. So watch out for Infosys. Let's see if IT has a bit of a revival. It's had a very sluggish last 1 month, and which is what CLSA is saying, negatives are priced in. The third one is HPCL, and I bring this up despite the fact that the stock, the announcement maybe happened during Friday market hours, but the news is big, and we were talking about this with Rahul Chadha earlier. But what's happened is that government has finalized a new CMD for the company. The new CMD is ex-Kearney's Vikas Kaushal. So a private sector person has been appointed as the MD CEO for 5 years. This is after a search of nearly 7 months. I mean, you've gotten a long tenure for a private sector CEO in a PSU name at a point of time when oil prices have come off and marketing margins for HPCL might look very strong. Now, of course, remember, there are lots of pulls and pressures, inventories, etc., so on and so forth. But on balance, fundamentally, this might work well. So keep an eye out for HPCL in the session today. That's the third stock on my radar.
I found that a very, very interesting story. I mean, that's amazing. I just hope that we haven't had this in a company like HPCL, but previous instances of lateral entry from the private sector in various levels of government and government bodies have had a mixed outcome.
Yep.
I mean, I go as far as to say, okay, look at the recent SEBI tenure. So it can be a mixed bag, but yeah, nevertheless, excited to see how this goes.
Yeah,
And what happens with the other PSUs as well? Because I think I think 3 or 4 of them have been lined up for a reappointment as well.
So it could be very
So
interesting
it could be an
see.
interesting story to watch out for.
Could be an experiment that really works.
But we need to slip into a break, guys, very quickly. Producers command, so we get into a break, come back, talk about all of this. Stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
my view, we are already out of that slowdown.
Back with India Market Open right here on NDTV Profit. Now, let's take stock of course, what the implied open is suggesting. Let's get that up on the screen to see how will we start. Likely about 70 points lower. Let's see. The last few days, the implied open has ceased to be the right indicator of how we start. Forget how we end. So keep that in mind. The rest of the Asian screen also a bit mixed, if you will. Nikkei is about 0.5% higher, but the others are a mixed bag. Forget China, even the others, ASX, Kospi, etc., are a bit of a mixed bag. So bear that in mind. Now, keep in mind for our markets, there are a lot of newsmakers in today's session. So let's start off with the first one. Tamanna marked IndusInd Bank in a list of stocks. What's happened is that the RBI has gone ahead and allowed only 1 year of extension to IndusInd Bank's current MD and CEO, Sumant Katpalia, after the bank had sought the 10-year extension for over 3 years. Harsh joins in to tell us what could this mean for the stock, what is it that brokerages are saying as well. And Harsh, interesting that Somit had pointed this out, I believe, last Thursday or Friday, that the stock was probably reacting negatively in anticipation of something like this, that there will be no extension. Now that there is a small extension, does it alleviate the pain or does it remain painful for IndusInd?
Not at all, not looking pretty at all, because just 16 days left for the tenure to expire, and likely RBI's stance is cautious with regard to the way in which they've given the extension, but it's also keeping in mind that there's just 15 days left now. So very little that they can even do in terms of a replacement, but a 1 year tenure clearly is setting the context or setting up shape very well for an early exit for Mr. Sumant Katpalia as MD CEO. Mind you, he's been MD CEO as of date only for 5 years, and the typical tenure of the MD CEO in the banking space is capped at 15 years, and therefore this kind of truncated tenure will definitely put most investors as well as analysts have put analysts in the cautious basket. Now, in terms of what analysts are suggesting, I'll start off with Macquarie. They're calling the extension a disappointment, the shorter extension. They say that it was shorter than even they had anticipated. It creates uncertainty with regard to the bank, and it also leaves the door open for an early exit for the CEO MD. It also could mean that a PSU CEO could come in, which could lead to a sharp de-rating in the stock, even though that's a low probability item. They've given it a 1210 rupee target price and they've maintained their outperform rating. Mind you, most of these brokerages are maintaining the outperform because we've seen a 35% correction in the stock in the last 6 months, a 12% correction last week. The other one, Citi. What they're saying is that it clearly signals discomfort from the RBI. They're saying that all other banks have received extensions while IndusInd hasn't, and therefore just doesn't merit a good enough reason why the CEO extension hasn't happened, other than the fact that the RBI is cautious. Third is Goldman Sachs. They've maintained their neutral stance, target price 964. This is one where target price is below 1,000, one of the very, very few. And they believe that the management transition will be top of investor mind. Bernstein giving it a target price of 1,300, 1.3 times price to book is what Bernstein is valuing this at, FY26 expected price to book, and therefore believe that also that this is in general trading at a very deep discount to other players or peers, and that could be one of the reasons why a lot of brokerages have maintained the target prices and ratings.
Okay, so it's interesting. We'll wait and see how it goes. I mean, in my watch list, it was a thumbs down, but it's already seen quite a bit of a hit. Uncertainty is not something that the street likes. Uncertainty and then promoters selling at a tough time is definitely not what the street likes. We're putting the focus on a company that has been in the news for all the wrong reasons and will be closely watched by NDTV Profit through the day. Gensol Engineering is a stock that has seen sharp corrections all of last week. The stock shed almost 40% in the last 5 trading sessions, and this is on the back of an ongoing debt crisis that has put pressure on the promoters, who recently, over the weekend, in fact, even pledged their shares, putting further downward pressure on the stock and severely impacting investor confidence. I have now Somit and Mehika joining in to break down the story. Somit, let's start with what has happened over the weekend, the latest when it comes to Gensol.
Well, yes, if you look at what has happened over the weekend, the first announcement that came in was the promoter selling shares of close to 9 lakh shares on the open market, and these shares are worth around 30 crore rupees, that is nearly 2.37% of the equity. But on the positive side, what the promoter has said that they will be infusing this amount into the company, and even post the stake sale, the promoter holding stands at close to 59.7%. Now comes the key question of how the promoter will be infusing these funds into the company. For that, we need to go back to the past. Now, in June 18, 2024, the company had issued close to 61.84 lakh warrants to promoters and other investors. Now, out of the 61.84 lakh, 15.3 lakh warrants were subscribed by the promoters, while the remaining was done by other investors. Now, as per the warrant subscription terms, 25% of the amount has to be paid upfront, and that is what has been done, while the remaining 75%, company has a time period to get this amount till December 2025, and we believe that there could be a company could prepone this fundraise going forward. So that's how the company will get this fund. Now, if you look at this table here, you can clearly see June 2024, they had announced this warrants of around 61.83 lakh at 871 rupees per share, which comes to a total fundraise of close to 539 crore rupees. Of this, they have already got 135 crore rupees, and the remaining 404 crore rupees is something that they will be getting from the promoters and other investors. Now, of this 404 crore rupees, promoters will be putting in 1/4 of the amount, that is nearly 100 crore rupees, while the remaining 304 crore rupees will be coming in by the other 107 investors whom they were given the warrants issued. Now, this issue will happen at 871 rupees because it happened last year, and that time the share prices were around this level. But you compare it when the current market price, it's nearly 2.7 times the current market price, which is close to 320 rupees. So the company will hold a board meet now on March 13 to decide on fundraise. So this is something that we need to closely watch of how this fundraise goes ahead for the company. But the key question now here is the 400 crore rupees. Will that be enough for the company? Now, this 400 crore rupees depicts nearly 35% of the total debt. So given the fact that it's 35% of the total debt, and if the company is successful in raising this 400 crore rupees, it could at least help the company repay some of its debt and fund this capital expenditure. Now, company's gross debt stands at close to 1,150 crore rupees, and 400 crore rupees fundraise is nearly 35% of that amount.
Moving on to why, Gensol Engineering has been in focus and under pressure in the last 1 month. Just to put into perspective, the stock is down 57% in the past month. That's a 1,600 crore market cap loss. Now, why? Well, credit rating agencies like CARE and ICRA have downgraded the short-term and long-term bank facilities to a default. The downgrade was due to multiple reasons. We had ICRA also suggesting falsification claims about their debts servicing, and defaulted in payments of debt obligations, as well as promoters selling 11.15 lakh shares in the past month. There are also some other concerns. The total debt of the company stands at 1,146 crores versus the last 12-month EBITDA, which only stands at 330 crores, and this puts a leverage of 3.5x. The cash flow from operations is also low. It's range of negative 98 crores to a positive 115 crores in the last 3 years, and 86% of the shares held by the promoters are pledged, and that also operate in a challenging as well as a competitive market of electric vehicles. But there are some positive and key triggers that were mentioned by the company when they responded to all the defaults. The order book stands at 7,000 crores. They have going to sell 2,997 vehicles for a total of 315 crores as a part of their divestment scheme, and proceeds will be used for debt reduction. They've also pre-booked 30,000 electric vehicles, and the production will start from FY26, which will start next month itself. And they've also secured 2 battery energy storage system projects from Gujarat Urja Vikas Nigam, and the execution is expected in FY26. So they have a lot of help coming in that will start from FY26.
What's interesting over here is that Gensol actually was a SME company listed back then in 2019, and post that, the way it performed, I think 2023 is when it came to the main board. So initially a lot of investor interest, but now the key is what is getting investors nervous basis what Somit and Mika have actually told us. So I think this is going to be a classic case of a know your company that NDTV Profit usually does.
Yeah, and we'll hope to speak with Gensol in detail today and ask them all the questions that need to be answered. But on that note, Parag bhai, very good morning. Welcome to the studios. Coach, great to have you here as always. Sony, very good morning to you as well. Let's in fact start the conversation with the company we've been talking about. And Parag bhai, let me come to you first. I see that smile there. But you know, people need to understand if there is an inherent problem with the company, or is this a momentary crisis that needs to be tided over?
No, so basically we don't have this company under our coverage or in the portfolio. So I would refrain from commenting on a particular company. But what I would advise investors is just to at least, you know, if you invest in a company, at least do a little bit of homework in terms of how many shares of promoters are pledged, what is the net debt level, and what is the history of the company, right? Even if you are tracking a new company, it has a history. It has got listed recently, but it has a history, right? So I would say that do your homework and or rather trust the investors who have been doing this work since last 20-25 years.
You know, all the investors trusted this company. It was a investor darling. so which is why the question today, and a lot that needs to be answered.
Yeah, and the another thing which has actually which is happening too much in the last small and mid cap rally, that thing happened was everybody was catching narrative, right? So wherever you saw green word, solar word, wind word, you know, everywhere people just latched it onto it. So that is a problem. Don't just focus on the narrative that this sector is doing well, so I'll buy every stock in this sector. Yeah, you do your work, you see the PE multiples which you are paying, see the ROC which company is making, see if promoter shares are pledged or not. I think these are very basics.
And
now it is very easily available. We are in a very, very informative world. It is very easily available.
Yeah, but it's just very difficult to believe that this will have a V-shaped recovery, simply because, I mean, if this had happened, if the market was at 26,000 and everything else was expensive, you could argue that people will go down the value curve to search for bargains. Right now, a clutch of companies available at good bargains. Very difficult to see that. This is the classic case of falling knife, right? Because you know that there is an issue. Why would you want to go and fish there? But in a lot of other non-issue wala companies are available at good valuations. Seems a bit difficult.
Yeah, maybe another tough week for Gensol. But let's get to the technicals of the morning and the view there. Kush, let's start with your take on the indices. Is this looking like we're going to have some reprieve this week? 22,500 becoming an important factor there.
Reprieve already underway, isn't it? I mean, from whatever we've had for the last 5 months, you know, and the last month was something.
But it shouldn't be short-lived, is the question, you know, because Friday, you saw some of that energy flagging.
Don't read too much into that. I wouldn't. The only reason being that it was a Friday effect, and we've had good 3 days of an up move where the markets had rebounded from intraday sell-offs as well, if you can call them that, right? So intraday we tested lower levels and then we ended at the high points of the day. It's happened a couple of times in the last 3-4 sessions. So I wouldn't read too much into that. But before all of that, if you are an Indian cricket fan who also happens to invest in the Indian stock markets, you can't ask for a better Monday, right? Back-to-back ICC trophies, recovery underway, what more can you ask for?
Yeah.
I think the broad message for me from the market and the cricket perspective is that you can't write off India. So yeah, there you have it.
Yeah, but that's okay. So you know, these are the things which everyone is going to agree with you on. But then our viewers are also expecting, Kush, that you will tell them what is the call today.
Oh, absolutely. No, I think, see, even like it happened in the Champions Trophy, right? The stars are aligning for the Indian market recovery also. Crude down below 70, dollar index below 104. A lot of these factors, and we've started to, we did see and discuss these trends for the last 2 weeks, right? Around 75 crude and around 105 odd dollar index. So we were seeing these trends build up. Now, even from a near-term perspective, coming closer or going further micro, the FII short position is now at 82%. It's still high, but it's still off from those 88-87% short positions that they had on index futures. What's also interesting is that the 22,500 straddle that we saw play out is now actually becoming more of a 22,500 put base. So for me, this recovery is very well underway. There was a falling channel that started in February. Nifty is still trading above that. So as long as the 20-200, 20-300 zone is maintained, you could stay long on the Nifty, or you could take this dip also as an opportunity to create long positions. My target on the upside, the first one after this 22,500 mark being conquered, remains 20-800. Now the only caveat that I want to put into all of this is something that I heard you guys talk at the start of the show, which is the US recession. While the data suggests that the crude is going down, dollar index going down, all looks great, but if the US recession, which is now started to creep into the chatter, if that happens, near term might be good for India, but long term maybe not so. So that's the only caveat. Other than that, stay long on Nifty. 22,200, 22,300 is a good support zone.
Just the only point out there, Kush, and we'll get in Sony out as well, because India's best bull runs actually happen after a global slowdown. So actually, if there is a global slowdown and if there is a small, fundamentally, I don't know about charts, fundamentally, if there is a small term pain as well because of the global slowdown, once we emerge out of it, India could actually have a really good run. So the medium term would actually be much better than what the short term might be as well, fundamentally. Historically.
In fact, that is also one thing that is playing out in our favor. It's just that there will be a brief period of pain that we will go through because of the global recession. We are not entirely decoupled, of course. We will have a better run, but one of the factors why India wasn't doing well is because back home, US was doing well and the funds were going there, right? Yeah. So that's also a factor that was playing out. If it doesn't happen, which it seems like that Trump trade is sort of unwinding now, of course it's a good thing for India.
So Kush, what will your top picks be today?
Two of them, and as has been the case for a while now, I'm going on both the trades on the long side. SRF is one stock which is doing well, has actually seen a bit of a profit booking but recovered from there. That is also an indication of the strength that the stock has. So from a near-term perspective, 3,000, 3,065 your targets, 2,870 is the stop loss. The other one is Gabriel India. Very sharp moves on the last couple of days, but what's interesting is that it's held on to those sharp up moves and even built on to those. So Gabriel India for targets of 535, 555 with a stop loss around the 495 mark.
Okay. Sony Patnaik with us as well. Sony, good morning. Are you constructive or do you believe this is a sell at higher levels? Good morning. Oh my God, Sony, you're looking very pretty. Good morning.
Good morning, everyone. Thank you, Neeraj. Thank you for having me on the show as well. So, see, what I would believe is that the 22,600, 22,650 mark may act as a minor resistance for the next 2 to 3 days. We may see a range between 22,300 to 22,600 odd level. So this 200, 300 points range may remain for the next 2 to 3 days. But if you're asking about the entire March series, I see that 23,000 should be the peak for March series. I do not see it heading higher above that. The levels that we are all hoping for and waiting for, levels like 24,000, 25,000, I see that it may take 2 to 3 series for those levels to reach for now. But yes, as of now, 22,300 and a crucial series support of 22,000 seems to be holding. So we may see some profit booking when the resistance approaches. That's how the play can be taken. So any dip that you get on intraday basis towards 22,500, 22,400 odd levels, I think that level could act as a good support. Maybe keep a stop loss of around 22,300 on a closing basis. It bounces from those level again to 22,600. So I think these are the levels to watch out for on an intraday. Positionally, I still think that 23,000 should be the peak for March series. And, we'll see how the data builds up. Interesting over here would be Bank Nifty, which is still consolidating in a very in a very tight range between 48,000 to 49,000. And Bank Nifty, although it is consolidating, it has not moved either of the ranges. And any moment it crosses the 49,000 mark, there can be some strength in Bank Nifty, which can lead it towards a 50,000 mark. So I think more eyes on Bank Nifty for this week than Nifty, and stock-specific action can play out better than indices.
Right, so 48,000 becomes crucial as well to watch out for, and the action on Bank Nifty with stock-specific moves is what we should be watching out for. But Sony, quickly in terms of the current market setup, what would your top picks be?
So I'll have both on the buy side. The first buy is from Berger Paints. I think it has given a strong close around the 500 mark. 4-5 days ago, again, it had tried to break above the 500. It did not sustain quite as much, but there's a strong support that is building around a 490. Decent enough put writers building that base. I think it can hold the level as a support of 490. So one can buy Berger Paint around 500 and keep a stop loss of 490. The targets from these levels can be seen towards 530. Any move above 530, you can see it heading on a positional basis towards 550 as well. So I think Berger Paint is the first buy pick, recommendation for the day. The second recommendation would be from the banking space, which is ICICI Bank. Now, I've taken a contra buy from these levels. ICICI Bank, after the correction, it is holding on to a very strong support of 1200. 1200 put also has the highest open interest for March series. Decent enough put writers defending that zone. So it's a good support. If ICICI Bank manages to hold on to the 1200 support, a decent bounce towards a 1240, 1260 levels can be seen. So one can buy it on slight declines towards 1215, 1210, that range. Keep a stop loss of 1200 and a target of 1240 plus levels can be seen.
Okay, so ICICI Bank there on radar. Parag, I'm wondering if you've been tracking the IndusInd Bank developments and how do you see this? I mean, we've had different views here in the newsroom as well. Is the pain priced in? Is 1 year of an extension acceptable for the street or more questions there?
Yeah, definitely. The valuations at one time FY26 book value look appealing, but the problem is this, right? That earlier the problem was that microfinance lending, right, which was 11% of the book, and that was under stress. And now this thing has come that the extension of 1 year actually means it's a mixed bag. So I would
extension of 1 year is basically no extension, it's just cursory.
So I would avoid it definitely, and definitely we have ICICI Bank in our portfolio, which is very large weight, and so I would so generally also as Kush said that this narrative of over bullishness on US has played itself out, right? And that's why we have seen dollar index correcting from 110 to 100 below 104. Yeah. We have seen US 10-year also coming off. So I would say that I'll be more constructive on quality large caps like ICICI Banks of the world, or for example, I would say Pidilite. I think Sony was mentioning about Berger Paints. The same thing applies to Pidilite, right? They import oil-based derivatives like VAM, Pidilite imports. Now that oil is coming off, oil is at $69. And rupee has also appreciated from 88, above 88 to below 87. So their costs are coming down. Even if demand recovers, which I feel that if every industry which is domestic focused will see some recovery, because now the rates are getting cut, liquidity is getting infused into the system, government focuses on economy. I think the stocks like ICICI Bank, Pidilites of the world in quality large cap basket, which are domestic focused, should be in focus area.
So, if I had to take that extension forward, with the crude rupee focus, what about an Asian Paints? What about then an Indigo? Again, in the same theme of consumption.
I would say go on, but Pidilite is one of the most structural, I would say, with a very less competition, highly moated business, about 25% ROCE business, and excellent management, I would say. Now they are talking about coming back with the products which are adhesives for electronics and EV, right? They have done a tie-up with Coltech, and that is a very big opportunity for them. So they are always a solution providers. They are always upping their game, to create entry barriers, as you call it. And now, if I see the EPS numbers, it looks at trades at 45 times FY27. So now it has come off a bit also. So I think it's a good buy. Even just to complete my thing. On the small cap company which you mentioned in the beginning, for example, I met a small cap company which is in public domain. We have announced that we are meeting them on Friday. We met a small company called Arcade Developers, 38 years of history, debt-free company with only 2,650 crore market cap and excellent execution on redevelopment side and greenfield side. One particular project of that Filmistan studio can fetch them 500 crores cash flow in 5 years. Yeah, so good. So I think that is how it comes. That you have to do a lot of work and a lot of research to find out.
We will do it for you. So you should watch this channel.
And putting a disclaimer, we
it.
have it in the portfolio to a very small extent, but we are deep diving into it, and we are very impressed as of now, up till now, whatever research we have done. And so I would advise all the investors strictly to take your financial advice from your financial advisor, and not buy from short-term perspective. It is a long-term 2 to 3 year view, because in any small cap company, which is, see, the company has 38 years of history, but for stock market, it's a new company.
Correct. No, so you know, we're not dispensing any gems as stock advice here on this channel. We're giving you ideas, and then you need to go ahead and do your research yourself. So that's one point that we also make. We'll take a very short break, but we're coming right back with the pre-open session and a lot more.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American.
Welcome back. You're watching India Market Open. Clearly, you know, from a technical perspective, you have Bank Nifty that continues to remain in focus in today's session. 48,000 is the level that we're tracking. However, if you see in terms of valuations, what's interesting is individual stocks, the valuations have come down. So probably there is some bit of comfort coming in there. A quick one, Parag Bhai, in terms of banking counters. Valuations are cheap. Would you be a buyer at current levels? And if so, which would be your top picks?
So we'll be very selective. So we have, I'll tell you, we have ICICI Bank in our portfolio. SBI is our top holding, and followed by Federal Bank, and something in a very small weight of DCB. Because DCB, if you see, just 0.5 times book value, 5-6 P, you cannot go wrong. You know that the one problem which all banks will have face is NIM pressure, right? Because the margins will come down when the repo rates are cut. But against that, you have, as you very rightly said, the valuation comfort is huge. And economy is going to look up because of government spending and because of RBI's liquidity infusions. So I would not be very negative on banks, but very, very selective, where I feel that asset quality is very good. And within the financial space, another thing which I would like to mention is housing finance companies like Awas, like India Shelter, like LIC Housing, this is also a space which we are constructive on, and we have in our portfolios also very large weights, because we feel that valuations again there are very attractive. It is a completely 100% secured lending versus and our collateral is a self-occupied residential property. So I would say that that is also a very interesting space within the financial space.
Okay, I want to focus a bit on what has really been the center of attention somehow for me this morning, and maybe since Friday market hours, as Somit said, that the government decided to bring in a private sector person for the CEO's position of HPCL. We don't usually see this. So I want to talk about it both from a charts derivatives perspective as well as from a fundamental perspective. Now, it's had a big rally already. I wonder if there is more in store. So, Kush, can I start with you technically? Can HPCL give higher returns from here?
So, Neeraj, never been a big fan of, the entire space, this plus the city gas distribution companies. What happens is when you get a trigger, there is this rally and then it fizzles out rather quickly. That's not the kind of trades that I personally want to get into. And, it's played out time and again. Even now, as you rightly said, it's already seen a bit of a rally, right? I mean, more than a bit, more than 10% up move on the last 3-4 sessions, right? It's already seeing some resistance around the 340 and then the 350 mark. So for me, the risk reward ratio from here on does not justify a trade. Maybe it could perhaps stretch the momentum that it's seen over the last couple of sessions. But from a fresh trade perspective, I wouldn't really be too excited about the kind of setup for HPCL.
Okay, that's the charts. Now, Parag bhai, fundamentally, oil being what it is probably anyways a kicker for oil marketing companies, and HPCL, a high share of marketing margins should augur well.
Sure.
The fact that there is a private sector guy, it will not be what a consultant coming into Mahindra & Mahindra can do M&M, because it's a private sector company, etc., etc. But still, how big and how important could this be?
So I would say that my observation is same as Kush said, that this companies generally are trading buys because depending on your view on crude oil. So if crude oil is going to go down, you have to buy them, and if crude oil is, but crude below 70, it is below 70 already, right?
Yep.
And Saudi Arabia's budget goes for a toss if it remains below $65 or so. So I would say that I would not like to take that punt beyond a 1 or 2 day trade, and so we cannot buy in the portfolios.
Yeah, sorry, Kush, you want to add?
Yeah, one point that I want to add to that, which is a very good observation. Crude has already been on the way down from 85 to 80 to 75 to now under 70. And the stocks have also gone down. Now, we can argue that, that is because the sell-off that the Indian markets were seeing, all of that, put together.
Yeah.
But these stocks haven't really seen that kind of move. So whatever we've seen in the last couple of sessions has actually been in line with the markets. So crude being very low has also not really been a positive trigger, at least in the last couple of months for these stocks. So again, just making that same case, which is probably the best of the rally for the near term is done for these. I would rather find some other more trending stocks rather than something like an HPCL or even a BPCL for that matter.
Just want to take a look at some of the auto players. Interesting BofA report on auto companies this morning. M&M also had its numbers out. M&M's target price has been cut by BofA, maintained by though, stock about 0.5% down. New target price is 3385. Cut on target price for Bajaj Auto, Tata Motors, Hero Motor, Hyundai, across the board. So basically, for most companies, BofA has cut its target price, except for a Maruti, where they've also maintained buy and not really cut the target price. Same for Eicher. So M&M, Maruti and Eicher are the key buys that they have also mentioned. Just wondering if you're seeing, when we're talking about a recovery, and Parag, I'll come to you with this, recovery overall in consumption, are you penciling in autos as well, which have been seeing quite a bit of pain?
Sure. So we like TVS and Mahindra, and we have it in our portfolio, and we'll continue to own it. Because what we feel is that TVS is doing wonderful job in all segments. This month, if you see, they crossed Hero Motors in terms of total volumes, 4,03,000. It was led by exports, which grew by 26% YOY, recovering exports to Africa. So I think they are doing all within their control. They are doing everything. Now, of course, the stock is a little bit expensive, and of course, there is a pressure from US to bring down tariffs, and that creates a sentimental negative for all auto companies, right? For example, Mahindra & Mahindra, in spite of reporting now very good numbers month after month, is under pressure because there is a pressure that you have to bring Tesla at lower tariffs to India. So that's a sentimental pressure which is playing out.
But look at all the auto angs today. So just one second, look at a JBM Auto, look at some of these companies, even a Sonakoyo, and all of them are doing pretty okay. Maybe
so that is the case. Now, if Tesla comes, people again build a narrative, as people built a narrative on US that when Trump comes, everything will be fantastic in US. That same narrative, that Tesla comes, so auto components will benefit, auto OEMs will suffer because they are.
Why will auto components benefit if Tesla comes? Because that will come as a CBU, completely built unit with its, everything in it.
But market builds on narratives.
Yeah.
That, okay, Sundaram Fastener, it's a great company, by the way. Sundaram Fastener or Suna BLW, this kind of companies will supply to Tesla. The narratives just keep building up. We don't, I don't own these stocks in the portfolio because I just don't buy into narratives.
But what's going to be interesting over here is, see, M&M, the numbers look fabulous right now in the month of February, but that's because of that 30,000+ bookings that did come in, right?
Look at their export numbers. The export drop is huge. It's nearly 48%.
But now once they start stabilizing and the bookings, depends on what the booking numbers look like, that's what we will have to watch out for. But yes, as of now, EV M&M is the clear play because no new model additions are coming in from a Tamo or a Maruti, and that's what people are worried about. And that's one of the reasons why you could see a bit of a downtick there. But again, M&M is a play on the premium side of the EV and not on the mid segment, right? So that's another factor we need to consider here.
Yep. So much to unpack on that space. But let's go to the top brokerage call of the morning. Harsh is joining us on why CLSA has turned outperform from hold on Infosys. That's an interesting one this morning, Harsh. What's the rationale?
Well, Tamanna, 2-3 reasons. So to start off, 17% upside is what CLSA sees on this one. They believe the stock is mispricing the medium to long-term tailwinds for the industry as a whole, and especially with regard to discretionary demand revival. They believe that Infi is placed very well to capture that demand revival if and when it were to come. They also believe that Infosys is big when it comes to Gen AI and the possible benefits that could accrue from Gen AI. So that's one component of it. The second piece is with regard to tariffs, and they believe that tariff-related measures and uncertainty could in fact benefit Infosys because cost control and cost optimization deals could well see a bit of a ramp up. They have had discussions with delivery head Mr. Satish HC, and he underscores the delivery strength that Infosys inherently possesses, and that gives them the confidence that this could well be a year FY26 where you could see good tailwind with regard to that particular space as well. Now, in terms of Q4 and more near term, seasonality is largely priced in, is what they feel. On-ground demand resilience remains intact, and margin headwind in the short term could well be the case due to wage hikes. But when you're looking at it from a medium to long-term perspective, extremely comfortable. 4 to 7% constant currency growth guidance is probable for FY26 is what they are saying, and valuations are palatable given the medium to long-term prospects.
That's CLSA on Infosys. A target of 1,978 is what you're watching out for. Thank you, Harsh, for that. Let me go to Sony as well. Sony, let's look at the tech space itself. You have a CLSA which is coming on Infosys. What are charts indicating? Any topics coming in from here?
I think, the entire sector has sort of underperformed and, not exactly the sectors showing any sort of signs of any recovery, especially when it comes to large cap. But perhaps if we can look at some of the mid cap space like Persistent, which is showing a small sign of recovery from the lower levels. I think that stock can be kept on radar, and, it's holding on to a decent support from 5,100. It's just bouncing back. It's hovering around a 200 DMA resistance. So if it's able to take out the levels of 5350 odd levels for the day, a bounce back towards 5600 can be seen. So it's a decent risk reward favorable as well from current levels. 5150 as a good support. If that holds, it takes out the resistance, and above that it can head towards a 5600 plus level. So I think this stock can be kept on radar.
Okay. Keep this one on radar from the IT pack, says Sony, as the pre-opened rates have settled down. Wonder what IndusInd Bank is up to. That should be brought up. Nifty is flat. IndusInd Bank 4.5% lower. No surprise there. Is there a chance of covering here is the question, because remember it's been getting sold off for the last few days. It's not just right now. Bring up the 1 month chart of IndusInd Bank and you'll see, much unlike what the Bank Nifty has done, IndusInd Bank has actually corrected quite a bit. So bear that in mind, but the announcement is not positive. So I don't think there's any case of a re-rating despite the fact that this is a cheap stock. So keep that in mind. The other one is HPCL, should bring that down up. And the third one is PVR, because Karnataka, interestingly, has capped the prices of tickets. And is that a big negative? Remains to be seen. Are you an investor here? If you were an investor here, Parag Bhai, would you stay invested in a PVR, Inox or a multiplex chain, or would you look for better sectors or other sectors?
I'm not invested right now.
If you were?
But see, the point is that ultimately it's a business where we know that terminal value is at risk. And that is why we have actually avoided this space, because the terminal value we don't know. It's one movie comes, then it's a bazooka, and then again it fizzles out. So we actually don't know the structure, because of this OTT thing, and movies coming on OTT within 21 days. The trend, whether people will go and watch movies in cinema, that itself is under little bit of question mark, and it is a very difficult thing to take a bet on.
When was the last time you went to a movie theatre?
No, I am a frequent movie.
You're a frequent I thought I'll have dipstick.
Just on this 200 rupee cap, because this is something that I was looking into. Tamil Nadu has had this for a while, Andhra Pradesh has had this for a while, and a lot of movie theatre owners there say it increases volume. They make up the rest from F&B. So it's not really killing them. Plus what they do is then they manage to have a differential if you have a different format, you do an IMAX, etc. So 200, 250 rupees is not the death knell as it seems for movie theatre tickets, and maybe the volume increase will help, because the fact is with 1,000, 1,500 rupees a ticket, apart from a few pockets in South Bombay, no one is filling up those seats.
And the price is at COVID low. The stock price is, I think they raised money during QIP at this or above current price. Although I'm not holding it, I'm just saying that, there are negatives in terms of long-term terminal value, but there might be a short-term opportunity, you don't know.
Short-term opportunities in terms of where, the media space goes, and it's going to be an interesting one to watch out for. Sony, clearly, we're just a minute away. Any stock that comes to your radar currently that you would be a buyer?
So for a positional buyer, yes, not more like an intraday. So the stock is Tata Power. The stock actually has been holding above its short-term moving average of 10 and 20 DMA for quite some time. And, the put writers are forming a base around 340, 350 range. So I think that range itself is holding quite strongly. Small, maybe buy and dip decline structures is forming, for Tata Power on daily chart. So anyway, towards a 350 being a good support, one can accumulate from those levels. A positional target towards 365 to 370 can be seen, and a stop loss that has to be maintained from these levels has to be around 342. So one can buy, but it's a positional call for in Tata Power.
Right. Thanks, Sony. Kush, at open, your topic now.
PG Electroplast is a stock that we discussed on Friday. Hit the first target at 895, saw some profit booking. I think that call continues. The volumes are staggering on this one for the last week or so. So 895, 925 targets. You can now up the stop loss close to about 855.
Okay, so PG Electroplast is one of the stocks on Kush's radar or top call. Here's how the markets are starting off this Monday morning. Are we seeing a deep gash of red? No, not really. It's a flattish start. Like we said, the implied open these days has ceased to be an indicator even for the open. Forget the rest of the day. Banks a bit tepid, led by IndusInd Bank, I would suspect. It's not a heavyweight, but keep that in mind. IT is a bit sluggish as well. Mid caps and small caps, let's see what they are doing in trade. Well, small caps are up 0.7%, mid caps 0.44%. Not bad a start, I must say. Let's get the heat map up on the screen. Tamanna would have better luck than me for sure in terms of stocks, but I have one. IndusInd Bank, 4.5% lower with reason. The MD CEO gets just a 1-year extension, and that is not great news for the stock, which is already sold off. but 4.5% lower again today. M&M slightly sluggish, maybe because of the export data not looking as great for the month of February for itself. L&T, ITC, Bajaj Auto, Trent are amongst the others, but a lot more green than red on open itself as the indices bob between the red and the green. What's doing well? Sun Pharma, an acquisition that they've made, $335 million if I'm not wrong. The stock is up about a couple of percentage points. BEL, there's a Jefferies note in addition to multiple others that have come in saying that they'll probably announce orders worth 12,000 crores by the end of March to meet the guidance. BEL is up because of that. Adani Enterprises, Cipla, JSW Steel, Bajaj Finance are amongst the others that seem to be doing okay. Coal India is chipping in too. But, well, the news from the center, and not quite the match now because that is over, is that IndusInd Bank is the top draw, but followed very closely in terms of newsmakers like M&M on the downside and BEL and Sun Pharma on the upside.
The IndusInd call is something that we talked about, that even though some of the pain is priced in, the 1-year tenure extension for their top boss is just not perhaps cutting it. But let's take a look at the broader indices just for a second. Let's see if the small cap index has held up. No, not the mid cap, about 0.25% up. Not really held up. Small cap is doing okay. Also come off what those first ticks look like. Sensex and Nifty now in the red. So let's pull up the heat map very quickly, the sectoral heat map, to give you a sense of what's happening. Unfortunately, more red than green, at least over here. It's going to be a tough morning. We have to see if there's any kind of a sell-on rise. First of all, the rise has to sustain. VIX is about 4% up. Now, what is going to be weighing on market sentiment? Maybe US economy, recessionary concerns here. Look at the Nifty Auto, the big pain point here. We were telling you about that BOFA note, and maybe we'll get you a more detailed report on it. Most key companies have seen a target price cut from BOFA. Nifty Auto down, so is Nifty Realty. So you're having a bit of a tougher morning than it seemed in the first tick or so. But let's go to specific stocks and see what's happening there. RailTel, I'll pull up. They have a new order win, small amount, but 48 crores, 47, 48 crores. There, but showed some movement in the pre-open session. Is RailTel holding up? Yeah, okay, 2.5%. Not half bad in a market which is quite shaky. I wanted to look at IRB Infra. Their biz updates are not bad at all for the month of Feb. In fact, they have a 19% increase on their daily toll collections year on year. So 1.5% up there on the stock. Let's look at the Tesla impact, and I would count M&M also in the Tesla impact. JBM Auto, Sona BLW, the whole auto pack, Auto Ank pack looking a little shaky today. We talked about IndusInd Bank, but I'll pull it up once again and see if the losses have deepened there. Yeah, I mean, nearly 5% down right now as leadership concerns continue. Will the MD CEO hang around for another year if that's all his tenure is? And then does a PSU banker come in at the lead? That's the primary concern that you're seeing reflected in that stock price right now. Tata Power, let's look at whether anything has happened for Tata Power, considering that they have had a 49,000 crore investment announcement. Yeah, not half bad. Lupin has launched a new drug in the US. It prevents blood clotting. About 1.5–2% up really at this point. Shyam Metallics, their volumes have declined in the month of February. They came out with business updates, but stock's doing okay, at least positive territory, if anything else. HPCL, I want to see. We've been talking about lateral entry, change of guard, private sector individual at the helm. Stock seems to have reacted positively, 3% up right now. But a little tough to spot big winners this morning, Hiral. It's a bit of a shaky start.
I mean, because clearly you're seeing some bit of stock-specific action, but not to that extent as well. It's a very narrow move in terms of individual stocks. But one stock that even Neeraj pointed out to was a BEL. Let's look at that one. That's continued that uptrend. 1.5–2% up move is what we are seeing currently with this one. Kush, coming to you, what are charts indicating? Because fundamentally a lot of positives, a 12,000 crore order book that it could be clocking in the month of March itself. But what are charts indicating? A good buy?
For sure, Hiral. In fact, if you'll recall, we've had this conversation time and time again, which is in this space, the one stock that you need to buy you must have in your portfolio is BEL. It consolidated in this broad band of 270 on the downside and about 310 on the upside. Briefly gave that away because of the market reactions and the kind of fall that market saw, but was rather quick to gain those levels back. So for me, this is a good buy. The only thing that was missing was momentum, but now after the kind of moves that you've seen in the last week or so, even the momentum indicators have turned positive. Resistance comes in around the 290 mark, the 200-day moving average, but with the kind of volumes that are shaping up, don't be surprised to see that taken out. So a test of 310, which is the upper end of the range that we've been speaking about, is very much on the cards. Just a quick word on the stock that we discussed just before markets opened, which is PG Electroplast, a good 2.5% up move. That is already on the back of about 1.5% kind of an up move that we saw in the last couple of trading sessions. The volumes that I'm seeing on this one are, as I said, staggering. There is a very strong accumulation happening. I won't be surprised that, in the coming weeks or so, this stock actually moves by another 7-8%, maybe even 10%, testing those 990 highs that it made recently. So this is one stock that I have on my radar. If you did buy this stock on Friday, as we discussed, or this morning, suggestion would be to hold it with a trailing stop loss.
Okay. What else? High frequency stocks that might be standing out. Sony, come in, anything that's standing out for you in the first 6 minutes of trade?
So Neeraj, it again would be from the power energy space, and I think last week also we saw very strong momentum in the entire sector. It's continuing. Stocks like maybe Tata Power, JSW Energy, Power Grid, these are the stocks which are still standing out, and of course metals would be the other space. But for intraday basis, I think JSW Energy is a stock that can be kept on radar. Now it's again trying to cross above the 500 5-watt mark, and if it manages to do so for intraday, you can see it again heading towards 520 odd levels. It has given a decent breakout on weekly basis. 490 seems to be a decent support. So anywhere between 490, 488, if it holds on closing basis, the stock can head towards 515, 520 levels.
Sony, what about an Aavas Finance? We had a view coming in from Parag Bhai and Kush as well. I'm wondering what you think about Aavas on the charts.
So Tamanna, on charts, I think the stock is looking strong. It has given a very good breakout, gap up breakout today. Overall, any move towards the 1730 mark seems to be holding that. But however, on closing basis, it should hold on to the levels on closing basis. Some profit booking, of course, from higher levels towards 1780 is getting witnessed right now on live, but the volumes and the kind of breakout it has given, the stock continues to be strong. There's a possibility that on a positional basis, 1900 is a level that may be seen, and if it continues to hold above the 1720 on a closing basis, one can hold accumulate at this levels, but with a very strict closing stop loss of 1720.
Okay. Well, the unequivocal commonality in terms of most notes and trend watchers for what could do well over the slightly more than a short term is metals. And everybody seems to be pointing there. Now, fundamentally, Parag Bhai, if a safeguard duty is not coming in, are metals still looking good because of the China stimulus, valuation, so on and so forth? Or would you take a step back?
A very, very good question. I was, basically, if you noticed, 2-3 shows ago, I pointed out that Jindal Steel and Power promoters bought worth around 900 crores. They have bought, actually, I have totaled it up, they have bought around 1 crore 5 lakh shares in last 20 days, 20 trading sessions. And we all know the promoter knows the intrinsic value of the business. So I would say that, yeah, I completely agree with you that if safeguard duty is not coming, then from this prices, there will be some correction in the metal stocks. By the way, just as a disclaimer, I own Jindal Steel and Power and Tata Steel in my portfolio. My point is that dollar index coming down from 110 to 103, one. Second, Europe inventory reducing, which has taken ArcelorMittal stock up by 15-20% in last 20 days. And third is China reducing its production of steel. All three are fundamental positives apart from safeguard duty. So if there is any retreat, 10-15% retreat because of safeguard duty narrative getting postponed, I think I would use it as a buying opportunity. I would not sell into the news that safeguard duty is not coming.
But with this as well, you just have, I think, almost 2 price hikes that the steel mills have taken right now. I think beginning of February and now. Now, does that also tell you that the demand is coming back? Because at such a scenario, taking a price hike, the recent one was almost 2,000 per ton. With that, which would your top picks be? Because clearly from Tata Steel, SAIL, JSPL, JSW Steel, all in the last 1 week have already been up 5 to 10%.
That is why you cannot rule this out that they can correct 5-10%, 5-7%, I would say. And as Neeraj rightly pointed out, if the safeguard duty narrative is delayed or say cancelled, there will be some retreat for sure, because they have rallied into the expectation, because of this expectation of a safeguard duty. But actually the prices have also gone up. If you see JSW Steel's business update, the capacity utilization was 93.5%. Right? So already they are doing well. It's a consolidated industry, right? Like cement, it is getting consolidated. And the Ultratech is also one of my top buys, and I feel that this 1800 crore investment in cable and wire business is peanuts for them. It is 3 months profit. Sure. And you cannot...
But does it make sense as the investment, I think, was the big question. But we have to wrap. Thank you so much, Parag Bhai, Coach. Thank you so much, Sony, for joining in today as we end this leg of India Market Open. But don't go anywhere, because the next conversation is an exciting one. Mahesh Nandurkar, Head of Research and MD, Jefferies India, is joining in. Mahesh, pleasure to speak with you as always, and great to have you with us this morning on NDTV Profit. Thank you so much. Let's start by, getting your overview on the kind of underperformance we've seen from the Indian markets. Have we hit the bottom of that cycle, in your view?
Hi, thanks for having me here. Always a pleasure. So I do believe that from the near-term perspective, I think, we have hit the bottom, according to me. We have underperformed the other emerging markets by almost 16 to 22 percentage points, if you look at it from a last 3-month or 6-month or 12-month basis. And history suggests that after such kind of an underperformance, Indian markets have usually bounced. There are very, very few instances of further underperformance from the current levels that we have seen. And there are other factors as well. But even if you look at just like one statistical factor, it looks like we have hit a near-term bottom.
Okay, so we've hit a near-term bottom is music to the ears. Just wondering if you see that trend as far as FII outflows are concerned as well. And we've been discussing since this morning, dollar index looking more favorable to India, fears of whether that Trump trade really lasts in an American context. Does that point to perhaps a reversal of those flows from an Indian perspective? Because if money is coming back to emerging markets, where is India in that pecking order?
Yeah, that's true. So I do believe that the FII flows, the direction, at least the selling intensity will reduce or has reduced to some extent. Ideally, it should reverse. So when we are looking at the FII flows, we are already seeing flows increasing into Europe and also in China. So it's essentially not just the emerging market trade, but it's basically a non-US trade, in my view. We believe that there's a high probability that the US markets have peaked out from a near-term perspective, and you should be seeing more flows into the non-US markets. And yes, we have already seen that with a couple of markets I mentioned, Europe and China. Haven't really seen inflows coming into India just as yet, but my sense is that we should be looking to such a kind of a scenario over the next I would say 1 to 3 months, and that's also one of the other reasons why I believe that from a near-term perspective the markets have bottomed.
Mahesh, good morning. And I wonder if you believe that having multiple other markets doing well is a net positive. So the US extension not being there, but Europe is on a roll, and we're seeing China being amongst the best performing markets, or probably the best performing market. Can that continue at the expense of India? Because I heard you say that flows might reverse in the next 2 or 3 months. And can that continue at the expense of India? And would that cap upside? So we may have hit the bottom, but are we likely to see some selling at higher levels, and can that cap upsides?
See, if you look at the valuation history of Indian markets, I mean, if you look at some of the broader based indexes, whether it is Nifty, whether it is MSCI India, we are now trading at about last 10-year average levels. And I can say that of the 200 odd stocks that we cover here at Jefferies, more than 100 stocks are now trading at below their last 10-year averages. So from the valuation standpoint, things have become more attractive. So if we kind of bounce, if the markets bounce from here, if some of those stocks bounce from here, some of those stocks will go above the averages that I just mentioned. And maybe from that level, we will need to see how the global situation is panning out and what is happening to DXY. So a lot will depend, in my view, on the on how Indian markets perform on the basis of many of the other global factors. But what I'm saying is that from a near-term perspective, there should be a bounce. From the medium to, let's say, long-term, and when I say that, basically talking about the next 12-month view, that would be a function of some of the global factors, including whether, let's say, the tariffs that Mr. Trump is talking about, whether those really get implemented or not, whether India is able to stitch a bilateral agreement with the US or not, or whether the DXY continues to stay weaker as it has been the case for the last 1.5 months or so. So I think the performance beyond, let's say, the next 2 to 3 months would be a function of all these other factors. So one cannot really take it for granted that yes, the markets have bottomed and the next 12 months, we will see a rock solid performance. We can't assume that at this point in time, but I would say that from the next 2 to 3 month perspective, things are definitely looking better.
Okay. What, Mahesh, interesting note today as well, right? Wherein you guys have noted that the Jan capex number is also up about 50-51%. We know December was looking strong as well. If the budgetary estimates are to be met, then presumably Feb and March on the capex front might also be okay. Does it bring the capex plays back into reckoning, or do you reckon that, or do you believe that maybe the best of the times for the capex beneficiaries are behind us?
Well, see, what we are seeing right now from the government capex perspective, this 50% growth, etc., whether in December or Jan, and most likely I think it will continue in Feb and March as well. This is very much in line with what the revised estimates that the government put out in the recent budget. So to that extent, these numbers are on expected lines. But yes, the fact that it is happening, it definitely gives some confidence. But if you look at the next year, FY26 numbers, the government's total capex growth for FY26 on a year-on-year basis is about 10% or so. It could be a little bit lower than that if there were to be some revenue shortfall, which I think is likely in my view. So I think a lot will depend on whether the government kind of upfronts the capex expenditure for FY26, and we see more of such strong numbers flowing through into April, May, June, etc. as well. But if it happens, obviously the remaining, let's say the second half of FY26 will be a weak, because on a full year basis, I think it's going to be an 8 to 10% kind of a number. So I would say that one needs to take a more calibrated approach on the capex plays. I think the government expenditure or capex growth is going to be, as we discussed, say about 8-9% or something like that for FY26. There could be some time differences, whether that gets upfronted or not. But my sense is that the market today is, quite cautious on the private sector capex plays, and I believe that the private capex is already happening. And we are seeing that in many industries like the cement, the steel, the hospitals, the real estate, and so on. So I think it makes sense to look at the names which benefit from that side. Also, a couple of other verticals where we have seen a weaker capex. One is especially roads. Now, what we understand is that the government is looking to revive the BOT road projects. And we'll have to wait and watch whether the private sector really jumps into that segment or not. The initial feeler that we are getting is that there are certain private sector players that are showing incremental interest in the BOT road projects as well. So if that actually turns out into reality, that one segment of the private capex which has been weak can also start to show some improvement. So to answer your question, Neeraj, I would say that one needs to take a calibrated view that the government capex growth numbers are going to be weaker, say about 8 to 10% type of a thing. But some of the private sector capex plays, especially on the power side, especially on the real estate side, look pretty strong to me.
Mahesh, I'm wondering on the BFSI side, what are the ideas that you're finding interesting? And I was looking at your fresh additions to buys, including an HDFC Bank, a Bajaj Finance, a Max Financials. Is that a space that you think will continue to be solid going forward? All of the pressure on NIMs, etc., profitability, cost of funds, is that now allayed in your view for now?
I think banks, and I would say broadly speaking, the lenders in general, including the NBFCs as well, looks like the best sector to own from the risk reward perspective. Whether you look at it from a short-term perspective or whether you look at it from a 12-month perspective, in my view, the valuations are very, very reasonable, well below the historical averages. The growth has been a bit of a disappointment over the last 12 months or so, with the credit growth in the industry dropping from 16% down to 10-11%. But I think from where we are today, both the deposit growth and credit growth, in my view, has bottomed out. Thanks to some of the measures taken by the RBI as well over the last few months, we can clearly see the intent of the RBI that they do wish to maintain ample liquidity in the system. We can see that the overnight liquidity deficit, which earlier used to run in the range of 2 to 3 lakh crore, is already down to, I think, about 50-60,000 crore as we speak. And over and above that, the RBI has already announced last week a pretty big 1.9 lakh crore of further liquidity infusion through the OMOs and through the dollar swap, etc. So I think this is a great news for banks and for NBFCs and generally the lending space. I think the things, on the growth should be improving from here on. The valuations, are pretty attractive. So very constructive, I would say, on the banks and NBFCs. And as I mentioned, if I were to kind of pick one sector today, it would be that.
I know you might not want to get stock specific, but just because this caught my eye, Mahesh, while I was going through the report, the inclusion of an ITC Hotels as a story, because that has been out of the radar quite a bit.
Yeah, so as you rightly guessed, I cannot comment on individual stocks. But yeah, travel, tourism, and hospitality as a space, we quite like. And I think that there is a good chance that we actually get some positive surprises, in the March quarter, on the back of some of the strong, indicators that we are tracking as of now. So yeah, so we are quite positive on the hotel space, airline space, broadly speaking, the hospitality space as such.
Got it. Mahesh, where would you be, let's assume that if this is the bottom and things were to move up higher, right? The almost consistent or constant or common thought is that large caps are reasonably priced, mid caps are not. I heard an interesting perspective that if you strip the large caps of PSUs and banks, then the valuations of large caps are not necessarily that cheap, right? So if you were to make an ideal portfolio of 20 stocks right now, would it be entirely large cap dominated, or do you find pockets of great value in mid caps? I mean, your note has some mid caps as well, which you guys have mentioned, the likes of Amber, etc. But I'm just trying to understand, what would the bias be out of a 20 stock portfolio, if you will? Just argument's sake, I'm using the number 20. I mean, it could be anything.
Yeah, so, at a very broader thematic level, Neeraj, I would say that the bias would be towards large caps, but I wouldn't really take, a very harsh view on mid caps and small caps, because many of those stocks have corrected quite a lot. And there are certain verticals, which I mentioned. Real estate has corrected quite a lot. Power and related plays has corrected quite a lot. And there are several interesting mid caps and small caps in that space, in those two sectors. So would definitely look at some of the names in those two sub-segments as well, other than the large caps. Now, if you're talking about the large caps, I just want to bring out one point, which is that the IT services sector, I think that is really pulling up the large cap valuations on the higher side, at this point in time. And the stocks have done pretty well over the last, say, 6 months or 12 months or so. And that is, on the back of some of the slowing growth numbers that we are seeing from the domestic markets, and pretty encouraging numbers being seen in the US markets, in the US economic outlook perspective, dollar being strong, etc. as well. But what we are seeing at the margin is that, if you see the economic data or the outlook from the US is weakening a little bit, and that is already getting captured. If you look at the 10-year US bond yield, those have gone down from 4.7 to 4.3. That's a pretty reasonable 40 basis point reduction in the last 1 month itself. If you look at the market expectations on the Fed rate cuts, those were as low as 25 bips, say a month and a half or so ago. Now it's gone up to 75 basis points as we speak. So these things indicate that the outlook for both the DXY as well as the US economic growth is not as strong as was thought, say, a month or 2 months ago. And there are many reasons for it. I don't want to go into all those reasons, but suffice it to say that the outlook over there seems to be changing. And in the context of where the IT sector valuations are, which is pulling up the overall large cap valuations, could be a sector that that might not do so well, going forward in the near future.
Point well noted. Okay, you're giving the counter argument to the two sectors stripping out and making the valuations look expensive. You're saying that IT is actually doing that, and therefore viewers hear this answer. Mahesh Nandurkar is saying that IT may not necessarily be a sector that might outperform well. I have one question, Mahesh. The opinion on metals is very divided. Some people say that because of the tariff wars, metals are a no-no in addition to pharma. Maybe you guys have said that too. I'm just trying to understand. But if China stimulates, etc., if safeguard duties come in, then metals might actually do well. Where are you on that argument?
No, so I would agree with the second part of your discussion. I think metals have a good chance, of doing well, and with the safeguard duty, etc. But also, I would say the investors that are looking to play the China recovery story from an Indian portfolio perspective, I would say metals, could be a good way to play that. The valuation itself is not really, very expensive to start with. Plus the safeguard duty, plus the possibility of playing the China story through an India portfolio. Those are 2-3 positives that one can look into for the metal sector.
I'm just wondering, Mahesh, how you are looking at this whole tariff conversation from an Indian perspective. And let me drill down to impact on auto, and then I'll ask you about pharma as well. Current conversation that tariffs will be lowered on the Indian end to accommodate a Tesla or, that space. How would you then rate a Tata Motors, a Mahindra and Mahindra? I know Tata Motors is on your list as well, or any of the auto ancillaries.
Yeah, see, the thing is, with the things, changing in the US from the tariff perspective, almost on a daily basis, right? It's very difficult to take a firm view one way or the other. And I guess we will need to wait and watch until there is some, there is either some announcement or there are some concrete developments on, what kind of bilateral understanding that we are developing, with the US. But I guess from the sectors that are probably getting impacted, I mean, you named those, auto anchs or pharma. we don't really know, how exactly things are going to be panning out. I'm sure it's going to be, a give and take. If India gets, some concessions on the implementation of reciprocal tariff, there has to be something that, we have to offer as well. So as I said, I don't know, exactly which way, it is going to go. There seems to be some demands from, if you go by some of the media reports that, there is some, asking from the US side for India to lower the agri tariffs and so on. So as I said, it's a difficult call to take, and I don't know whether one can really take a firm view on that just as yet.
What about pharma? If I were to pick a sector which would be relatively shielded from tariff impact, just because of the nature of the business, would pharma be there?
Could be, but I'm not so sure. One cannot take it for granted. Maybe I think one could argue that, even if there were to be tariffs that would get levied, then probably, it will be a pass through. So, maybe the profitability of the companies do not get, impacted in an adverse manner, even if the tariffs are, are implemented. But I think that will definitely hurt the investor sentiments for sure if that were to happen. So maybe the EPS doesn't really get cut, but the PEs could get negatively impacted.
All right. Okay, I just want to squeeze in one last call on IT. Since we've been talking about this, uncertainty focused stuff, what is that one space that you think will be shielded through all of this tariff war and everything happening globally with a domestic focus, Mahesh?
As I said, the one sector that I will choose at this point in time is banks and NBFCs, basically the lenders. I think that seems to be the best place to be invested in.
Okay. Thank you so much, Mahesh Nandurkar. Obviously, and always a pleasure speaking with you and getting your view on the show. Since we're talking about financials, one big upside for financials has been RBI's liquidity infusion. Are good times coming for banks? Before we get Jaideep Iyer of RBL to speak on the broader issue, let me get Harshin to set up the context.
Well, so a couple of key overhangs at the start of this calendar year that we saw with regard to the banking system as a whole was that liquidity was stretched. You could also see that deposit growth largely was lagging with versus advances growth, even though it was improving as the year 2024 ended. We could still see that lag, and pressures with regard to deposit growth was extremely solid on the system as a whole. With the new governor coming in, we saw a slew of measures being taken by the RBI. You saw good amount of liquidity being pushed through. At the end of January, you had 1.1 lakh crore in cumulative announced, 60,000 crore of OMO purchases right off the bat, and then there was a 56-day variable rate repo auction which was also conducted for 50,000 odd crore, so 1.1 lakh crore infused immediately. Another lakh crore has also been infused or part of the pipeline now with OMO purchases again lined up to the tune of 1 lakh crore. You'll have, of course, a couple of overhangs with regard to liquidity. Mid-March, you'll see advanced tax suck out liquidity a bit. GST obviously does that as well at the start of every month, and therefore all of this liquidity is important. Around 2 to 3 lakh crore is the liquidity deficit at the start of this calendar year. Now, hopefully, that starts to trim down. Will it lead to a lower cost of funds for banks and therefore lead to better margins going forward? Have FD rates really peaked? Some things that I'm curious to know.
Okay. Well, thanks a lot for that. And Harsh, and those are some of the questions that we posed to Jaideep Iyer, Head of Strategy at RBL Bank, who joins us around policies to try and nuance it for us what the immediate impact of the RBI decisions are. But Jaideep, between the policy, or maybe even before the policy, at the policy and post the policy, there is lots that the Reserve Bank of India has done, right? I put out a tweet that when the tide turns and when the things settle, people will realize that the RBI did a lot in the last 2 months, right? I would love to understand, how do you think of all the actions done, and does that kind of buffet the issues around liquidity that may crop up in a busy season and otherwise?
Yeah, thanks, Neeraj. Good to be on the show. yes, you're right that the Reserve Bank of India has taken significant amount of measures over the last month and a half. But I think we should just try and make a subtle distinction here to look at the difference between durable liquidity, which comes when there are OMOs that happen, and to some extent maybe long-term dollar-rupee swaps. Even that arguably is for a tenor of 6 months or so. Whereas the variable rate repo auctions are relatively short term. I mean, you could have overnight to weeks or to maybe a couple of months. So what the system is really looking for, and I think a lot of that is also, another 1 lakh crore of OMO announced, is that we need durable liquidity. It's a little peculiar that the RBI is now on a, let's say, on a rate cut cycle, or at least, one is ruling out rate hikes unless something dramatically changes. And therefore, we need to have as much accommodative liquidity situation for us to be able to, for bankers and customers to really benefit from the rate cuts. So currently, as we speak, despite the actions taken, we haven't really seen even bulk deposit rates or short-term CD rates really come off. In fact, they are marginally higher as compared to pre-repo rate cut. So I think the system is still looking for comfort from the regulator or from RBI that that there will be enough and more that will be done, and that confidence needs to come back in the system. I think we are getting there, but not yet there.
Okay. So, okay. So, Jerry, that is one in terms of rates, but in two in terms of, okay. So let me ask this question: when do you think that comes about? Because if this would have been a natural consequence and it's still not happened, is it a factor of time, or is it a factor of an event or two that need to happen for this to materialize?
See, I think it's a question of time, and the banking system getting confidence that durable liquidity will continue to be there for a while before rates start getting cut by the system from a deposit standpoint. I think it's a question of continuous liquidity, durable liquidity being infused by RBI. And some level of time. I don't think there is an event. I think there will always be the short-term challenges where government deposits with the RBI goes up quite materially, whether it's advanced tax, whether it's GST inflows that we discussed. But so those can be managed through short-term liquidity measures like DRR. But the durable liquidity has to materially and consistently be up, which I think should happen beginning the next financial year.
Hi, Tamanna here. The point you make about durable liquidity is very interesting. I want to understand from your perspective what you think the biggest challenges to durable liquidity are. Because many people still on the fence in terms of what is the quantum of rate cuts we can see. And it's understandable with so much uncertainty around. What do you think are the key challenges there?
No, see, the RBI has to keep in mind the FX situation is continuously evolving. We've seen fair amount of uncertainty with on that front. I think we've seen FIs take a lot of money out, which has put pressure on the rupee. And RBI has always taken a stance that while they don't necessarily control the level, but they would prefer an orderly movement of the rupee, and that has resulted in them managing. When you manage dollar rupee, you obviously sacrifice liquidity in the short term. So I think we will need to see some settlement of sentiments change on that front as well. And I think ultimately that has been one of the challenges for RBI. But I think this should begin to change from April. I think March will be tough, like it always is for liquidity. We've also seen cash in circulation for some reason go up, which is unusual given the massive adoption of UPI that we've seen. But that, unfortunately, is always a drag on liquidity. Nothing one can do about it right now, but that's also a factor.
Just in terms of pass-through, Jaideep, from bank's end, And also things like deposit rates. Do you see that at the retail level changing anytime soon before there are more signals from RBI, or do you think enough has been done for this to now percolate to a retail level?
No, I think the first step would be the bulk deposits to come down, which has not yet happened. Logically, when rates get cut and when the system is comfortable with liquidity, we will first see the short-term rates, which are largely bulk, and CD rates come off. That has not yet happened. And once that happens, materially is when we will expect retail deposit rates to come down. I think that is probably at least 2 to 3 months away, if not longer.
All right. Thank you so much, Jaideep Iyer. Always a pleasure to speak with you. The tussle for the RBI to manage liquidity and rates definitely continues. We'll take a very short break, but on the other side, we bring you all the top action of the markets right now. We also have an interesting conversation with Quadria Capital's Amit Verma lined up on what the big picture is. Stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. All right, quick look at the markets as we move forward. Staying steady, but definitely not a massively bullish kind of day. All right, good recovery there on the Nifty actually. Look at that, about 0.5% up in the last 10 minutes or so. I want to pull up the broader indices as well if I can quickly and look at what Nifty Auto is doing as well. So small cap, mid cap, let's look at that just for a second. Mid cap completely flat, but in green. The small cap index about 0.5% down, so a bit of a tumble there. Let's pull up Nifty Auto just for a second before we set up our next conversation. That's important. Nifty Auto has been under pressure. Some would call it the Tesla effect. It could be a whole host of things. M&M's update numbers not great on the exports front. That stock, that sector also in the red. M&M about 0.5% down right now. Here's what Bank of America is saying though. They have several top picks in the space, but they've cut target price as well on many key stocks. Puneet is joining in with the details.
Well, thanks for that. So they've actually cut target prices on 6 out of the 10 stocks in terms of the OEM coverage. And that's one of the main points of this particular report, apart from 3 key highlights that they're mentioning. So, in terms of certain cuts which have been seen in stocks like M&M, target price is now 3385i. But it's been cut from 3650 earlier. The same has been visible. It's a sharp cut for Bajaj Auto from 11,000 to 8,900 right now. And Tata Motors being the other one from 850 to 735 currently. Apart from that, they've been, what's interesting is they've maintained their view across these stocks, which was there before, but the target prices cuts have come right now. The main part they're mentioning is that, in this particular report is that two-wheeler volume trends have been very negative in the second half of the fiscal year compared to the first half. From roughly about 8 to 10% double-digit volume growth has gone to negative now in the month of February, and that's a key negative. They say that this is also because of tighter financing, which has seen because of what we've been seeing in terms of banking finance. Apart from that, the approval times have also been taking a lot of times. They mentioned that portfolio at risk has risen to 8% versus 4.7% the same time last year, so that's a key risk. In terms of the second key aspect they mentioned for two-wheeler volatility is the subsidy schemes which were there as part of the state elections that have gone away now, and those volumes are now dwindling. In terms of one interesting trend that everybody's been pointing out, that scooters have been doing better than motorcycles. That's why they prefer someone like TVS, and premium are doing better than the middleweight segment, and hence their preference towards Eicher Motors as well. They also prefer something like a Maruti. They maintain their view on the stock based on the 3 key aspects of SUV launches, the electric vehicle launch of the e-Vitara as well as the export. And they see that while Tata Motors might have limited downside from the current levels, but the weak momentum across business continues, and with the tariffs, with JLR sales at 25% from the US itself, that could be one of the key triggers to watch out for. So M&M, Eicher and TVS are their top picks with some positive view on Ashok Leyland as well. But across the other two-wheeler packs such as Bajaj and Hero, they maintain the negative view.
Okay, all right. So Nifty Auto under a bit of pressure. I want to see what Gensol Engineering is doing. This stock lost about 40% in the last 5 trading sessions. And promoters have sold stake over the weekend. So you're seeing a very volatile kind of a session, still about 4% down. Now, what exactly has been happening with Gensol Engineering? We're trying to break it down for you and explain what the issue there is. Samit and Mihika joining us for more on that. Samit, let's start first with what the latest is and what has happened over the weekend as far as Gensol is concerned.
Well, for Gensol, if you look at what has happened over the weekend, the company's promoter did sell close to 9 lakh shares in the open market. That is close to 2.37% of the stake and worth at around 30 crore rupees. But this, whatever the promoter is generating by stake sale is something that the promoter will be using to infuse back into the company. That's what they are claiming in the press release that has come out on the exchanges. And post this stake sale, the promoter holding stands at close to 59.7%. But the key question here is how is the promoter going to infuse these funds back into the company? Now for that, back in 2024, June 18, 2024, the company had issued close to 61.84 lakh warrants to promoters and other investors. Now out of this 61.84 lakh warrants, around 15.3 lakh was subscribed by the promoters, while the remaining was done by the other investors. Now as per the warrant subscription terms, 25% of the amount was paid upfront, while the remaining 75% the company had aimed to get this amount by December 2025. However, they might choose to prepone this fund infusion, and that's how the company and the promoter would infuse funds into the company. So if you look at this table, back in June 2024, when they had announced it was 61.84 lakh warrants at a price of 871, which means that they were looking to do a fundraise of close to 539 crore rupees. Of this, 25% is already received, that is 135 crore rupees, while the remaining 404 crore is something that the company is looking to raise from investors. So out of this 404 crore, nearly 1/4, that is around 100 crore rupees, is something that the promoters will be infusing in the company, while the remaining 304 crore rupees is something that they are looking to raise from the other 107 investors. And this will be done at a price of around 871, which is nearly 2.7 times the current market price. And 871 is a predetermined price that was decided back in June 2024. Now the company will hold its board meet on March 13 to decide on the fundraise. So that is something important to watch out for. And the most important question here is this 400 crore rupees, will it be sufficient for the company? Now if you look at the current debt of the company, that stands at close to 1150 odd crore rupees, and this 400 crore is nearly 35% of the total debt. So if the company is successful enough to raise this 400 crore rupees, then it seems that it might be sufficient for the company for time being to repay its debt and to fund its capital expenditure, given that it's nearly 35% of the total debt as of 31st December 2024.
Well, but you know, when you talk about a bigger picture in terms of what started this, well, the stock is down 57% in the past month. This is 1,600 crore rupees of market cap wiped off. Why? Well, the initial trigger was a credit rating downgrade by both Carriage as well as ICRA ratings. All the long and short-term facilities were downgraded to a default rating because of concerns of debt obligations, with ICRA even making falsification claims in terms of what they were receiving by the company. Now, there are certain key concerns. While the company has reduced debt in FY25 so far over 200 crores, their total debt stands at 1,146 crores versus a 330 crore EBITDA in the last 12 months, and leverage stands at 3.5 times. Now the cash flow from operations is also low. It's in the range of negative 98 crores to a positive 115 crores in the past 3 years, and 86% of the shares held by promoters are currently pledged, and the company also is in a challenging and competitive EV market. There are some positive or key triggers. They have an order book of 7,000 crores. They do plan to sell 2,997 vehicles for a total of 315 crores, proceeds from which will be used for debt reduction. They're also going to sell a subsidiary for 350 crores, aiming to reduce debt by 655 crores as per the latest statement. They also have pre-booked 30,000 EV vehicles. Production is expected in FY26, and they've secured 2 battery energy storage projects from GUVNL, which is also expected to be executed in FY26.
Okay, so a lot of questions on the company, and we hope to speak with the company and understand more on what really is going on. So more on that through the day. But let's focus on Infosys just for a bit, because interesting note from CLSA, where they have now put an outperform rating on Infosys from hold. Why that upgrade? Harsh is joining us for more on that.
This is discretionary demand, and if that were to come back, CLSA believes that Infosys is best placed among large cap IT to capture that ability to be able to capture the growth which is going to come through is extremely important, and they believe Infosys is going to be a big beneficiary of that, as well as the fact that there's going to be Gen AI and democratization of Gen AI, and all of that will likely aid Infosys more than others, is what they are saying. Infosys has a great set of capabilities and best placed for capturing this revival is quote unquote what they are saying. That's the first part of it. The second part is with regard to tariffs. They believe tariff-related uncertainty could well lead to wider growth. How will that happen? They're saying that cost optimization as well as transformation deals also will likely start to pick up in this uncertain environment. And they, post their discussions with delivery head Mr. Satish HC, believe that Infosys is actually well placed to score on that count as well. That being said, in the near term, Q4 weak seasonality is priced in, but weak seasonality nonetheless. On-ground demand resilience remains intact, but margin headwind could well play a bit of a spoiled spot given wage hikes in the short term. And that could also impact the numbers, but just in the short term. Expect a 4 to 7% constant currency growth guidance probable in FY26, and Infosys well placed to capture it. Valuations decent.
Okay, well, certainly watch out for Infosys. Though, remember viewers, Mahesh Nandurkar was on the channel just half an hour ago, and he mentioned that the one sector that he believes might actually struggle over the course of the next 6 to 9 months might be IT. But of course, for every buyer, there'll be a seller, and vice versa. That's true for pharma as well, by the way, or healthcare as a sector. But within healthcare, pharma is in news on the back of the Indian pharma market data as well, IPM data as we call it. To tell us more, we have Varsha joining in. Varsha, good morning.
Good morning. Thank you for that. So yes, if you see the IPM growth slowed down to 7.5% in Feb 2025 versus 8.5 to 8.7% in Jan 25. Now the growth of 7.5% that we are seeing is led by price and new launches, which drove the growth, while the volumes fell for Feb month. Cardiac, gastro, neuro and derma outperformed. These therapies outperformed, while anti-infectives, respiratory and gynec underperformed for the same. If I were to talk about the volume, so volume decreased 0.2% while price rose 5.2%, and there was a growth in new launches of 2.4%. Now FY25 IPM growth is expected around 7.5 to 8%. Now this is as per India Rating and Research. If I were to talk about the outperformance, who were the outperformance? You have Zydus Life Sciences, which grew almost 13% leading outperformance. Ajanta Pharma and Torrent Pharma also showed strong growth, while Mankind and Glenmark grew 7.8%, which is in line with the IPM growth. Cipla and Eris Life Sciences grew slower, underperforming the IPM. While lastly, if you see Sanofi India, the revenue for Sanofi India, the growth for Sanofi India declined as well.
Okay, yeah, lots of moving parts to this, and I think nobody better to put all of this into perspective than Dr. Amit Verma, Managing Partner at Quadria Capital. He joins us right now on the show. Dr. Verma, good having you. It's been a while, but thank you so much for taking the time out. And this is Neeraj here. Good morning.
Always a pleasure to speak with you, Neeraj. Thank you for having me.
So I would love to understand, how have you viewed at the last 6 odd months for the healthcare space? Because one, select businesses have actually traversed well, diagnostics, etc. and stuff like that. But on pharmaceuticals now, the jury is out with all the comments from Donald Trump around tariffs, and the impact is not quite clear as yet. How have you thought about this?
So thank you for the question. And as you can imagine, there's nobody who knows what's going to happen with all the uncertainty that comes out of the US at this point of time. I think most businesses are taking a slightly more pragmatic approach to what may finally happen. Our belief is that our business continues to grow really well, and the fundamentals of the pharma market in India and the manufacturing continues to be positive. And that's for all the other sub-verticals. What we are doing at our end is staying away from the distraction of all the noise. And we are making sure that we stay core to our fundamental, which is we believe that there is still optimism, there's still growth. And as long as we stay core to our basics, we will continue to do well.
Yeah, interesting. So in the case, okay, here's my question, Dr. Verma. The two overhangs that a lot of people say exist for Indian pharma companies which are exposed to the US, that one, that the tariff issues are a bit of an unknown entity, and if they adversely impact, then that's an impact on earnings and valuations. And two, that Revlimid earnings or Revlimid-led earnings, which have been a big center point for a clutch of these US exposed companies, will actually go off the cliff in the next couple of quarters. In Natco's case, it was visible already in the quarter gone by. And therefore, is that a thing to worry about when it comes to Indian pharma companies operating in the US majorly?
I'll answer the first question first. At the end of the day, yes, there's a lot of rhetoric and noise about the tariffs coming into play. But please remember, it's easier said than done. You just can't take manufacturing capabilities and suddenly switch them across into the US. Just the entire value chain, and more importantly, the integrated supply chain approach, very, very hard to pull it off. That could be a medium to long term. Having said that, it's very, very hard to replicate the cost and price efficiencies that we've developed now in India and just migrate it across. So if you look at the way we are looking at our businesses, we don't see a near effect. Having said that, let the rhetoric play out, but I do believe genuinely that it's easier said than done. On the second, that's a bit more incisive, and NATCO is a good case in point, that there is going to be some effect, especially when we come to niche or specific products. And that is something that people will have to now make their evaluations on, whether those specific products are going to be in that kind of a zone which could hit. Don't know the answer yet, but I think if you were to do N-1, N-2, I think a lot of the pharma companies you would find an answer to of who's more exposed than the others.
Dr. Verma, I'm going to actually pose that same question to you. Tamanna here, and great to speak with you. I'm sure that evaluation has been done. And let me just contextualize the question. I spoke recently with Dr. Havil Khorakiwala, and he said that if there are higher tariffs, we'll just pass it on to US consumers. They will pay more. 4 out of 10 prescriptions filled in the US is from Indian companies. Is it as simple as that? Or there are some companies which will get hurt? And have you identified any of those?
Yeah, I wish you hadn't mentioned the name, because it's hard for me to contradict the personality. But having said that, I do not think that it is going to be that easy to just pass on the cost. The US market is going through its own trials and tribulations. And as you know, that the selling of pharma in the US is now almost cartelized. There are 3 or 4 large distributors who control the entire market. My belief personally is that we should be able to pass along some of the price increase, but not all of it. And that will then put pressure back on us to get even more efficacious and more efficient on how we deliver these drugs. Having said that, the jury is still out in the next 12 months. And I do believe that right now the rhetoric coming out of the US is overly simplistic. And my view would be to wait it out, play to our strengths, and don't let the distractions affect what we need to do, which is be the most efficient manufacturer of drugs for the US market out of India.
Okay, so then let me put it this way. When we talk about reciprocal tariffs, India has about 10% on imports from the US. US has none, largely, on a lot of Indian exports. If there is now a conversation and a negotiation, and then the Indian government has to now tweak some of its tariffs, what is the impact then domestically on Indian pharma companies, or is that not a concern?
It's not a concern, and I'll tell you why. We are talking about many different types of products which will come under the tariff regime. But do remember, at the end of the day, we are supplying life-threatening drugs, which the US consumer will need at some point of time. If all of this gets into a mess where the supply chains start to get affected, there is going to be a huge hue and cry in the US market of making sure that we circumvent it. So take that 0 to 10% for a minute, and let's assume that something does happen. That is the kind of price increase we should be able to pass along. Now, if it gets into dangerous territory of double-digit tariffs, then it's something that we will have to take a look at, and it will affect some of the balance sheets of Indian companies. But we are less worried about the impact at this point of time.
Got it. Okay, Dr. Verma, the other aspect is around this whole CDMO plays, CRO, CDMO, CRDMO, all these three, and at the start of the Trump administration, the Biosecure Act being put behind, led everybody to believe that the juice in the near-term juice in the space is gone. But the long term might still be attractive. How do you see this particular aspect for companies that operate out of India specifically?
Back to the same. At the end of the day, these are long-term contracts, which are very, very hard to change. Which means that if I've locked in contracts for the next 2 to 3 years, it's going to be very hard for a US customer to now get out of it. We also believe that our cost efficiency and price efficiency is unparalleled. So there may be a marginal dip in margins if the worst comes to happen, but I don't see US customers being able to pivot away from the contracts that we've already signed, not just because, it's contracts, it's because of the price efficiency that I keep harping about.
Okay, I'm moving tracks now to the other aspect of the healthcare vertical and divvying it up between hospitals and diagnostics. Now, I'm starting off with diagnostics for a change, Dr. Verma, and simply because the conversation that we had very recently with a couple of diagnostic companies, including Metropolis, they've done a small acquisition, and they are now talking of moving into areas which they hitherto were not present. Uttar Pradesh, a prime example, but others too, and talking about sustaining growth rates for the foreseeable future, because that common argument that was true 2-3 years ago, that 15% is organized, 85% is unorganized, still kind of holds true. Maybe it's 20% organized and 80% still unorganized, and therefore they are seeing long runway of growth. The COVID-led disruption is out of the way, and therefore you can look at the terminal value and figure out how valuable the businesses might be. How are you marrying the doctor within you with the investor within you when it comes to analyzing diagnostic companies, sir?
We've been long proponents of tier 2 and tier 3 cities becoming the new bulwarks for our growth. And we've been playing it in both services, whether it's diagnostics or hospitals, by saying that the industry is going to get more and more organized. I think the biggest benefit that COVID gave us is that it taught patients that they want to be treated where they live, and they don't want to be treated as external forces. So clearly there is a huge rampway of growth for diagnostics in tier 2 and tier 3 markets. And there is a huge runway now for two other characteristics. One is point of care testing, so making sure that the tests are getting done where the patient is. And the second, I see this huge jump in preventive and wellness medicine, where just getting preventive health checks is going to go off the roof. So clearly there is immense growth in diagnostics, regardless of who you are. And remember, if I take all the platforms together or the organized players together, I still believe we are not even 10 to 15% of the market.
I'm wondering, Dr. Verma, what your take is on the hospitals space, because while growth seems to be unlimited in the context of India, there is always that overhang of intervention, judicial intervention or state intervention coming in. We've seen some of these cases in the last couple of years as well. Do you see that as a worry at all for the space?
Let me answer it two ways. Number one, I think there is, again, immense scope for consolidation in the organized hospital space. Again, all the platforms together are less than 10% of the organized space. And as you start to go into tier 2 and tier 3, there is enormous potential for organic and inorganic growth. So to me, at least for the next decade, the runway for creating more and more bed infrastructure or hospitals right now seems to be, again, a very long runway. Now, there's always rhetoric around regulatory and judicial intervention when it comes to pricing. It's quite clear that as a country, we always believe that over profiting in healthcare is morally unclear. Having said that, I think if I look over the journey over the past 10, 15 years, the industry has now grown and become a lot more mature. We are a lot more organized, that we are now able to go back to the regulators and the judiciary and explain to them why price caps may not be the best idea. I do believe that there is going to be some noise around exactly what you asked me about, but I don't see it come to fruition as long as we as an industry are also mature enough to make sure that we are not overdoing the whole margin business or our profits.
All right, thank you so much, Dr. Amit Verma there. And what a detailed perspective on the healthcare and pharma space, often seen as a defensive play, but rock steady as you look at how inelastic the demand is for all of these services. Thank you. Pleasure speaking with you. With that, it's a wrap on India Market Open, but stay tuned. Up next is Ask Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
a life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
Hello and welcome. You're watching Ask Profit. I'm Anushi Vakharia and with me is Soumit Sarkar. Now, this is a show where you get all your stock related queries answered. But before we do that, let's take a quick look across how the markets are faring right now. So let's go across to where the benchmark indices are. Now, in terms of where the Nifty 50 is, it's holding strength as compared to the broader markets. They're currently up around 0.27% of levels. In fact, let's look at Nifty Bank also to see how that is faring in trade today. Nifty Bank, we are seeing about, okay, it's currently flat in red. That is what we are looking for Nifty Bank. But coming back to the benchmark indices, now if you are seeing what is happening, let's pull out the point contribution table to get a sense on what are the key laggards and the stocks which are gaining in trade today. So in terms of where the point contribution table is, Infosys, Bharti, Airtel and ICICI Bank, we are seeing right at the top. However, L&T Trent and IndusInd Bank is in pressure. Now, IndusInd Bank, there have been concerns on the reappointment of the CEO for the extension of 1 year as compared to the expectations of 3 years. So there is uncertainties building around that front. So IndusInd Bank in pressure on that front. But also let's get a sense on how the overall market breadth is trading like in terms of where the advanced decline ratio is for the overall market. So currently for Nifty, we are seeing about 30 advances as compared to 19 declines. So while for the benchmark, it is in favor of green. Overall, if you take the broader markets, that's where we are seeing pressure, about 1400 declines as compared to 800 or 900 sort of advances that we are seeing in trade today. Now, this is in contrast to what has been happening prior to a couple of sessions where we are seeing broader markets outperforming the benchmark indices. So there is some pressure that we are looking here. Nifty Midcap 150 about flat today. In the last half an hour or so, we've seen a steeper fall over here and currently they're about at the levels of 18282 in terms of where the small cap 250 indices. Let's look at that, how that is faring. Okay, we are looking at cuts of around 0.47%. But, you know, Soumit, let's address some of the stock-specific action that we should be watching out for. Which are some of the stocks which are in focus today?
This has not much of an action when it comes to the index, but stock-specific, a lot of action that we are seeing specifically when it comes to power stocks. Names like Adani Energy, Power Grid are the top. F&O gainers in trade have gained more than 3% in trade. Apart from that is the real estate stocks that have also been buzzing in trade like Phoenix Mill, that's up around 3.5%. Torrent Power, again a power stock, followed by JSW Energy. Then there are metal stocks that have been buzzing, JSW Steel, JSPL, both are up in trade. Industars has gained close to 2% in trade. Then there is Tata Power, again up 2%, in HUL up 1.5%. Then there is Bajaj Finance, which has gained. FMCG stocks have been buzzing in trade. On the loser side, it's Titagar Rail, which has dropped the most, down around 4% in trade, followed by Kalyan Jewellers, down again 3%. IndusInd Bank down 2.5% on the back of lower than expected extension of the CEO. Then there is Trent, which is down 2.5%, and this is post Kotak has downgraded, or not downgraded, has cut the target price on the stock to around 5,100. Then there is Paytm, which is down again 2% in trade ahead of the expected block deal by the market. CG Power down 2%, Max Healthcare IEX down anywhere between 1.5 to 2% in trade. So in short, it's the power and real estate stocks that have been buzzing higher in trade today.
Right. So now this is the overall sense of the markets that we are seeing in terms of the broader market, the benchmark indices, and which stocks are in focus. But with that, let's introduce our guest for today. Joining us today here on Ask Profit are Brijesh, Head Technical and Derivatives Retail Research of ITBI Cap, along with Saurabh Jain, the Equity Head Research of SMC Global. Hi, thank you so much for joining us on Ask Profit again. I'll start off with you, Saurabh. I want to understand your sense on the markets for this week. What is the expectations like?
Overall, if you say in the last 4 or 5 months, we have seen consistent selling by the foreign institutional investors. I mean, the growth is dipping down the earnings season so far. If you look at the select industry, select pockets, that was not commensurating with the valuations at which we were trading. Now the valuations have subsided, but I think some room is still left, especially in the mid cap and small cap space. I think maybe the bounce can be seen as a relief rally. What we feel, and we think going with the Trump, talking about the tariffs and all, I think in the next 30 to 60 days, things will get pretty clear. Till now, what we are advising our clients to be selective in pockets like FMCG or maybe utilities, buy selectively, especially in the large cap category for the long term.
Okay, so that's as far as the view is for, what the current markets are doing. But yeah, Samit, you wanted to add something more on that, yeah.
Well, it's the first query that has coming in. Let's start with that. It's coming in from Himanshu. He's from Udaipur and it's on Gensol Engineering. Now, that stock has been in focus. A lot of news flow that have come in over the weekend. The fact the promoter has sold close to 9 lakh shares in the open market, which is close to 2.37% of the equity, valued at close to 30 odd crore rupees. But this fund, whatever the promoter is getting by selling this shares, is something that the promoter will be using to infuse back into the company. They are looking to do a fundraise, which will be crucial for Gensol Engineering. So keep an eye out for that. Now, how will the promoter infuse these funds back into the company? Back in June 2024, they had issued close to 61.84 lakh warrants to promoters and multiple investors. Now, of this 61.84 lakh, around 15.3 lakh warrants were subscribed by the promoters, and as per the subscription terms of the warrants, around 25% is the amount that has been paid upfront, while the remaining 75% the company had an option to call for this amount by around December 2025. So most likely the company might look to prepone this call for this 75% of the balance amount, and that's how the promoters and other investors could infuse funds back into the company. So close to 404 crore rupees is something that is pending amount that can be called for this warrants, and of this 404 crore, nearly 1/4, that is around 100 crore, is something that the promoter will be putting in, while the remaining 304 crore will be infused by the remaining 107 investors, and this will be done at a price of around 871 rupees, which is nearly 2.7 times its current market price. And the company will hold the board meet on March 13 to decide on this fundraise. So this is something that we need to watch out for. What is the outcome that comes ahead from this board meet, and will the 400 crore be sufficient for the company? At least at this point, it seems like, given the fact that the company's debt stands at close to 1,150 crore rupees, and this 400 crore it defies nearly 35% of the total debt, which should be sufficient for the company to repay its near-term debts and to fund its capital expenditure. But let's get in. Firstly, Saurabh Jain, who's the equity head research with SMC Global. Sir, any view when it comes to Gensol Engineering? Is it a good opportunity to buy Gensol Engineering post the 57% drop that we have seen in the last 1 month? Is the main query coming in from Himanshu.
I don't think so. I mean, the numbers which you have talked about, like if the capital infusion will be happening at a price of 800, I don't think so. If you look at the financials and the credentials of the company, I think it is a bit clumsy. And now with the stock tanking, I think future doesn't look. I mean, something is likely to happen which maybe street doesn't know, and which we come to know later on. So I think one should be on the sidelines if someone is considering Gensol.
Okay, so that's the view for Gensol Engineering that we are looking at. But next we have the caller joining us, and this is Dheeraj from Hyderabad. Hi Dheeraj, welcome to this show. How can we help you today?
Hi ma'am, good morning. This is Dheeraj from Hyderabad.
Yeah,
I'm holding 1100 shares of Senco Gold.
And at the price of, if you can describe us, give us the price range and how long have you been holding the stock?
At 367 rupees, ma'am.
Okay.
I have been holding since last 1 month.
Okay, you've been holding this for a month. So you want to understand, is your view for a shorter term or for a longer term that you're looking at?
For a short term, ma'am. For next 4 to 6 months, if I hold the stock, would I be able to make some profits, or should I add more at current levels, or should I exit the stock?
Okay, let me take your query across to Brijesh. Brijesh, your view, he is currently facing a loss of 80,000 on the counter and wants to understand a 4-month picture on this stock, whether he should add more or hold on this.
So, yeah, hi, morning. So specifically from the trading perspective, I think that he can just hold on to the position and eventually about 300, 310, if it's sustained, then I think he can add up some more little bit of long trades. And eventually I'm saying this because there has been a gap in this, falling gap has been there in this particular stock. So more or less that gap can get filled. Time frame will be a little bit difficult to be to do the prediction, but then I think somewhere close to 400 that bounce back trade is much more possible. So eventually on the way up, whenever it crosses 300, 310, he can add up a little bit more and it can average it out. And more or less towards his cost is what I can look at as of now. So I think advising to hold the position, and on the way up on a little bit of confirmation, he can add a little bit more.
Right. The next caller query coming in is from Yashwant from Andhra Pradesh, and he's holding around 150 shares of Mahindra & Mahindra, bought at a price of 2,500. Yashwant, you can go ahead and ask your query.
Yeah.
Right,
Hello?
Yashwant. So, do you want a long-term view or a short-term view when it comes to Mahindra & Mahindra?
Mine a long-term view, nearly over 3 to 5 years.
Right. Brijesh, can you give your long-term view when it comes to M&M?
I think from the long-term perspective, this 2,500 is a very decent support. So we are of the opinion that it can see a very good bounce. On the 4 to 5 years, it's quite a big time frame. But definitely it can it can easily see 3,500 level plus in the next couple of years. So it's a demand zone. So as long as it is about 2,500, there is no worry to be seen. So it looks good on chart. Long-term perspective will remain positive.
Saurabh, how are the fundamentals looking like for M&M?
If you look at the M&M, they have a great portfolio. I mean, it is the only company which is doing above average than the four-wheeler automobile available in the industry. I mean, their SUVs are in demand. The tractor segment is likely to good. In the Rabi season so far has been good, and there is expectation that there will be a good monsoon this year too. In the commercial vehicle side also, they are doing good. The stock has been re-rated in the last 3-4 years. It is not cheap if you look at the valuation, but considering the fact that the investor has a long-term perspective, like 4 to 5 years, I don't think so. There is any kind of a worry. I think it is a portfolio stock. It should be a hold.
So that's the view for M&M that we are seeing, but shifting focus back to the WhatsApp queries. Next query is from Srujan from Hyderabad. He holds about 5,000 shares of Northern Arc Capital, and this is at an average price of 230. Wants to understand whether he should continue to hold or sell on the counter, given his time horizon is for the next 6 to 12 months. Brijesh, I'll come to you on this stock. Now, currently, if you see, he's facing a loss of 3 lakh. It's a substantial number that we are seeing. What is your view on this counter?
Madam, structurally, the stock is making a lower top, lower bottom formation. There has been no reversal as of now. So I think it would be a little bit difficult to predict how exactly the things will turn out. But then on the way up, 190, 195 is a resistance zone. So technically, if those levels are taken out, then there can be some confirmation. So as of now, I would ask him to hold the position and then review it a little bit later, whenever there is a small bounce.
Right. The next caller query is coming in from Murli from Bangalore, and it's on Dixon Tech. Murli, you can go ahead and ask your query.
Good morning, sir, and thank you for taking up my query. I bought Dixon Technologies about a week back at 60 shares at 14,147, hoping that the summer is expected to be very, very hot, and all AC companies will be doing well. Can I hold the shares from a point of view of, say, 1 year? Or alternatively, can I switch to Blue Star?
Right. Saurabh, any views on whether he should continue to hold Dixon Tech or move to Blue Star?
If you look at the Dixon Technology, there is no issue with the order book they have. They are consistently growing, while the growth rate is also tapering off. If you look at the profitability, the company is making just 2% on the PAT side of the total revenue that they are making. So in terms of valuation, it is trading still. I feel it is valued highly. I mean, 36 times to price to book value, more than 100 times to multiple. He has also asked about the Blue Star. I think if you look at the Blue Star, it is a much stronger company. With, yes, the summers this season are going to be much hotter than the last year, and all the air conditioner players are likely to good. First, and moreover, Blue Star is also on the commercial side, and the business is really doing good. Out of the two, I would prefer Blue Star. I think he should go with the Blue Star.
Okay, so Blue Star a clear pick as against Dixon Tech is what we are seeing. But next we have a caller joining us, and this is Paramjeet from Himachal Pradesh. Hi Paramjeet.
Hello ma'am, good morning.
Good morning. Please state your query.
I am having 6,000 shares of DAM Capital at the rate of 202.
Okay.
I want to know long-term as well as short-term view.
Okay, so you want both the views, and I understand that this is the price of IPO that you received, this subscription.
No, bought recently.
Okay. So can you just say when was the time that you bought DAM Capital?
Sorry ma'am, pardon?
How long ago did you purchase the stock?
Only a few days back.
Okay, only a few days back. Okay, let me take it across to Saurabh first. Your view on DAM Capital?
On the valuation front, I think it is expensive. It is a very small company trading at, in the valuation terms, it is richly valued compared to its peers also. With the kind of market activity which is happening, I think the volumes are drying down. Even on the exchange, if you look, the volumes are drying down. And the brokers are also experiencing the same pain. I don't think so going this quarter or maybe going forward, the earnings will be earning will see growth, that the kind of growth they have seen in the past. So in my sense, I think he has bought at around 200. The stock is trading at 220. I think he should book profits and stay away at least for the short term.
Rajesh, your view as well. I understand that it's a recent listing, so the the viewpoint or the information point in terms of charts would be limited, but just want to get a sense on this company.
Yeah, so I think it looks like it has been correcting a lot, and recently it has taken support, and we have seen some good amount of bounce. So this bounce can continue to the level of another 20 points. Still to 240 is what I can see. That continuation of the trend can be there. The bounce can be seen. So I am of the opinion that closer to 235, 240, he should be looking to book profits and stay away.
Right. The next query is coming in from John from Mumbai. He has close to 772 shares of Bank of India, bought at a price of 107 rupees per share, and he's saying that he can continue to hold this counter for the next 2 years. Saurabh, any view when it comes to Bank of India? Should he continue to hold this counter or exit?
I think if you look at the PSU Bank, it is relatively well priced. I mean, on the valuation fronts, I think all the PSU Bank stocks can be basketed into the value stocks. If you look at the Bank of India, the numbers are good. In the last quarterly earnings, we have seen that there was a decent amount of growth, and with the cleaner balance sheet, low NPA, and the margins less than net interest margin less than 3, I think it is quite a good pick. For the next 2-3 years, I would suggest a hold.
Okay, suggesting a hold on Bank of India, that's the view on the fundamental side. But next we have a caller joining us, and this is Kamath from Bengaluru. Hi Kamath, how can we help you on the show today?
Madam, good morning. I have 1,000 sequence scientific at the rate of 160 rupees.
Right.
So I just wanted to know whether I can add at this price and average it.
And you want to understand whether you should add or average it out. Okay, so let me take this. And what's your horizon period, if I can know more about this as well?
Maybe 1 to 2 years.
Okay, 1 to 2 years. So let me go across to Saurabh. Saurabh, what's your view on this counter?
Not in coverage, won't be able to comment.
Okay, so let me take it to Brijesh. Brijesh, your view on Sequence Scientific?
Yeah, so this counter is slightly seeing some reversal. So 160 is the trigger price, whereas the 250-day moving average is placed. So I think once it crosses 160, there can be some technical reversals can be seen. So on the way of 180, 185 can be seen on the chart. So it's advisable to hold the positions and do more averaging or maybe adding fresh longs above 160 levels.
Right. The next caller query is coming in from Sumit Sharma from Delhi. Sumit, you can go ahead and ask your query.
Hi, this is thank you for giving me the opportunity. So I have one question. I am holding Raymond shares, approximately 300 shares, from the rate at their average rate is 1846, and I'm having approximately 2 lakhs of negative losses in this.
Right, and I assume you want to hold this share for long term, and that's what you want to know, whether you should hold this counter or sell?
I can hold it for longer period, yes. Right. I just want to know whether it's to hold or, accumulate more on at this price.
Right. So Saurabh, coming to you, do you advise Sumit to continue to hold Raymond shares, or should he buy more to average the counter at this price, or should he completely exit?
See, the stock has already corrected a lot, and I would put, if you look at the valuations now, I don't think so. Here one should sell, but at the same time, I think the company has two business. One knows that the Raymond is all about the clothing, and the wedding season have just passed. I think the number this quarter would be good. With respect to the residential business in which company is operating in, I think the best of the real estate cycle, in my opinion, has peaked, and the growth is also in terms of volumes, sales is tapering off. So all the real estate players are experiencing the same. With respect to the whether it is good to hold, I would suggest a hold for the next 2-3 years, but don't average it.
Okay, so that's the view for Raymond that we are seeing. Next query is from Ranjan from Bangalore, and he holds about 720 shares of Jio Financial, and this is at an average price of 350 that we are looking. So currently facing a loss of around 92,000 on the counter. Wants to understand whether he should accumulate more now or average the price further. So let me take it across to Brijesh. Brijesh, your view on Jio Financial?
Yeah, we are not too much keen on the Jio Financials, so we are not recommending any fresh longs. So since he's already taken a position, he can keep the positions long with the last week low as the stoppers, which comes at 198 level. So with that base, he can hold the trade, and closer to 250 levels, I think he need to review it, and maybe possibly if he needs to exit, he can make an exit.
Right. The next caller query is coming in from Sudhakar, Hyderabad. Hi, Sudhakar. Thank you for calling us. You can go ahead and ask your query.
Good morning, sir.
Good morning.
Hello.
Good morning, Sudhakar. You can go ahead.
Yeah, I wanted to ask regarding Anantaraj, sir. I am holding at 796, sir. 79 shares.
Right. And you want to hold these shares for long term or short term?
Actually, sir, I had an intention of holding it long term, but what happened after DeepSeek, suddenly it had dropped actually.
Right, sir.
I don't know what is the relation between DeepSeek and Anantaraj. I'm really surprised. I was very comfortable with that actually.
Right.
Anantaraj, but suddenly it has dropped, sir, actually, after DeepSeek.
Right.
Now I am on loss, whether should I hold it or not, because I am around 39 to 40% loss.
Right. So Saurabh, coming to you, I believe that the fall after DeepSeek was because DeepSeek warranted the fact that the requirement of data centers would be less, and given the fact that Anantaraj has some exposure to data center business, the fall might have been triggered by that. Saurabh, what's your view when it comes to Anantaraj here?
Even after the fall, I think data center does infuse the huge rally in the stock price. I think after the recent correction also, stock is decently priced at about 4 times to book value, 44 times trailing earnings. There is expectation that after this DeepSeek and what is happening in the AI arena, that the margins which markets were perceiving will not be there. So in my opinion, I think the stock is still richly priced, and and in terms of valuation, and the market is quite apprehensive on the margin outlook going forward. So I would suggest better to get out in case you find any rally in the market.
So not a positive view that we are looking in terms of Anantraj, but let's shift focus to the consumption space. And the next query is from Ajit. In fact, let's talk about two stocks which are in focus. One is Titan and Kalyan Jewellers alongside with it. So Ajit wants to know whether he should hold Titan shares. He's holding Titan shares at a price of 2,900 and he holds about 25 shares in the counter. Wants to understand whether he should book profits or wait for a dip on this. Alongside, we also have another query. This is Arjun, and he has bought about 50 shares of Kalyan Jewellers at a price of 542. Wants to understand the long-term picture on this. So, Saurabh, let me come to you on both of these counters. Your view, if you prefer Titan more to a Kalyan Jewellers, and what is your take on the overall space?
If you look what is happening in the gold prices have seen a phenomenal up move. This year also the gold has seen a good amount of up move, which is led to buyers waiting on the sidelines. The sales outlook is for all the jewelers. I think the sales is plummeting. I mean the kind of growth but they used to see is not happening, and it does not likely to happen because of the US stamp tariff safe haven buying is still continuing. And now a lot of competition has also come up during this season, this quarter also. A lot of jewelers are coming up with steep discount to push up the sales. So in terms of margins also, there is likely to be a good amount of pressure. So I would suggest better be sidelines from investing in the jewelry stocks. With respect to the Titan, I would suggest him to book some small profits. With respect to Kalyan Jewellers, I'll suggest better take money off the table in case you find any value.
Okay, so that's the overall take that we are seeing in terms of the consumption space. But it's time to slip into a short break. But before that, Brijesh, thank you so much for joining and solving all those queries. But more stock queries on the other side, so do stay tuned in.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction.
Welcome back. You're watching Ask Profit on NDTV Profit with me, Soumit Sarkar, and my co-anchor Anushi. Well, before getting into the next query, let's welcome in our technical guest Ajit Mishra from Religare. And Ajit, coming to you directly, firstly on this question, it's from Gul, one of our regular viewers of the show. They want to know whether to buy Coal India or not for the next 6 months to 1 year time period. He wants to know what would be the right price, entry price for Coal India. Any views on the technical charts?
Yeah, good morning, Sumit. So, see, most of the PSUs named, we have seen decent correction in the last 4-5 months, including Coal India. Means the stock was quoting around 525 in good times, around the record high area. And we have now, from the last couple of months, hovering in this band 350 to 380. So it seems like a short-term bottom for the stock, which could propel, further recovery towards 420, 425. So roughly around 8 to 10% is something that definitely one can vouch for from the current levels. So if you're okay with that, definitely you can go ahead and start accumulating at current levels with 360 as a closing stop loss.
Okay, so that's the view for Coal India that we are seeing. But before we move to the next query, you can call us and ask your queries on the numbers flashing below on your screen. But with that, let's take the next query which we have, and this is Vino from Kochi, and he wants to understand the view on Zomato. He holds about 500 shares of Zomato, and this is at a price of 270. Wants to understand whether he should continue holding this for a longer period. This time horizon is for up to 3 years and more. So Saurabh, let me come to you for Zomato. Now we've seen a correction in not just Zomato but on Swiggy as well. Want to understand your take overall for a longer term picture. Are you still bullish on this counter?
I think a lot of competition is happening in the segment in which company is operating called Blinkit. Blinkit having some competition with the Flipkart Minutes, Zapto, with the Amazon coming in. I think what market was perceiving is that there is going to be likely a good amount of profitability going in the next few quarters. But I think it is still away, and that is why this correction is happening. I would suggest avoid on it.
Right. The next query is coming in from Babu Varghese from Thrissur, Kerala. He owns around 100 shares of Shriram Finance. He hasn't mentioned at what price he has bought these shares, but he's saying that he's a long-term investor and he wants to know whether should he continue to hold this counter or switch to some other name. Actually, in fact, he has just edited his message. He's saying that he has bought Shriram Finance at a price of 614. Saurabh, coming to you, what would be your view when it comes to Shriram Finance? Should he continue to hold this counter or switch to some other NBFC name?
I think it is a very good company. If you look at the balance sheet, it is quite clean. The NPAs are within limits. I mean, if you compare with the other NBFCs, if you have a long-term perspective, I think you can hold it.
Okay, so that's the view for Shriram Finance that we are looking at. But next query is from Sankar from Chittor, Andhra Pradesh, and wants to understand the view on red tape. Now, he does not have a reasoning behind the fundamentals and the technicals, but recalls the stock on the basis of its brand value. Currently, if we see, red tape is down about 3% in trade today. But, let me understand from Saurabh on a 4 to 5 year perspective, what's your outlook on this counter?
I think in the footwear segment, what we like is a company called Metro Shoes. I mean, in the red tape segment, the average price per piece is quite less, and there is a very good the demand is lower in the lower and middle class segment. I think in the premium segment, companies like Metro brand is likely to do good. But in the next 4 or 5 years, I would suggest a buy on Metro.
Right. The next query is coming from Pradeep Paul from Vijayawada. He wants to know whether PB Fintech, that counter looks good on charts and should he buy at current levels. Ajit, any views on PB Fintech?
So Samit, after this correction from 2200 to 1400 mark, we are seeing a bit of a pause, but it's too early to say that we are set for the reversal. So as of now, it seems like, again, a rebound trade in case if he's planning any with the 1350 as a stop loss in the first area of resistance. The short-term moving average placed around 1510 to 1520 would be his target zone. So the risk to reward is 1:1.5. So if he is okay with that, definitely he can go ahead.
Okay, 1510 to 1520 is the targets that we can look forward to PB Fintech. But next we have a caller joining us, and this is Rajiv from Noida. Hi Rajiv, how can we help you on the show today?
Yeah, hi. So I just wanted to know, I just wanted to invest some money in the stock market right now. So I'm looking for the two stock like like Bajaj Finance or L&T. So which one should I go for, like in short term?
Rajiv, any particular reason that you're bullish on these two counters only in the large cap space?
No, I just anyone suggestion if you can give good stock which we can buy.
Okay, let me take this across to Saurabh. Saurabh, what's your view on both these counters, whether you prefer a L&T over a Bajaj Finance, both in completely different sectors, or any other counters in this space that you are optimistic on?
See, both companies are good, but out of the two, I would suggest to go with the L&T. I think the capital goods space, I think industry is likely to do well. The company has a good order book, and they have guided for they have retained the margin guidance also. Going next year, I think the government capex and the private capex is likely to do well. And which will help L&T to grow its business and the order book. The other stock which he can buy is maybe he can go in the banking space for the ICICI Bank. In the utility space, we like NTPC, and maybe he can go with the Reliance for the next 4 or 5 years.
Right. The next query is coming in from Pankaj Pitroda. He wants to know whether is it a good time to invest in Ola Electric, or should you wait for much more correction when it comes to Ola? Saurabh, coming to you first on Ola, any views? Is it a good time to enter the stock, or there could be more correction here?
I think they are all negatives with respect to the Ola Electric. Today also I have heard some statements on your channel that some raids are going on. I think a lot of exits were there. A lot of customer grievances were also there. The stock has derated in the last few months. I would suggest a sell on Ola.
And Ajit, what would be your technical view when it comes to Ola Electric?
So Sumit, we are at record lows, and on every uptick we are seeing that the stock is facing pressure. So as of now, there is no sign of reversal in the short term as well. So one should avoid.
Avoid on Ola Electric as per the technical view is what we are seeing. Next, we have Suresh joining us from Hyderabad. Hi, Suresh. Morning.
Yeah, hi.
Yes, please state your query.
I am holding Switzerland 1000 shares at 52.
Right.
So I am having a long-term outlook in next 1 to 2 years. Can I add more now? 1,000 more? Can I add it now for target of 80 rupees in the next 2 years?
Okay, and how long have you been holding on to this counter?
Recently, I bought it at 52 and it's bounced back from lower levels around 48. So I entered it into 52 just a week back.
Okay, right. Saurabh, your view on Suzlon Energy. Now, this is one counter that, there's a lot of investor interest in terms of whether retail spaces. Want to get your perspective.
Our view is quite constructive on the utility segment. I think Suzlon has seen a good amount of turnaround in the last 2-3 years. The company has now good order book with the debt positioning, debt coming off from the balance sheet. I think for the next 4-5 years, it makes sense to hold Suzlon. And in fact, if you look at the wind business, I think it is more profitable than the solar one. So then, the return ratios are quite higher in this case. So I'll suggest yes, he can buy more in a staggered manner and can wait for next 2-3 years.
Right, buy more and continue to hold Suzlon is the view coming in from Saurabh. The next query is from Kadir Sheikh. He has around 300 shares of V-Guard Industries bought at a price of 180 rupees per share. He's currently sitting on a handsome gains and he wants to know whether should he continue to hold this counter for long term. Saurabh, any views on V-Guard Industries?
I think it is a very good company. It's largely into the water heater space and the lot of consumer durable items. I mean, the company is doing good, and largely it is a player which has more business in the south. I'll suggest a hold.
So hold is what we are seeing for V-Guard Industries. But now moving to the next query, this is in the real estate space that we are seeing the next query. This is from Madhu from Bangalore, and she holds about 150 shares of Sobha, and this is at a price of 1,336. Currently, what we've seen in the real estate space is a lot of correction. She's facing a loss of 17,000 and wants to understand whether she should continue to hold or sell on this. So let me come across to Ajit for this one. Ajit, what's your view in the overall real estate space? Are you also bearish on this counter? What's your view on a Sobha Limited?
Right. So actually, we have seen in line with the other sectors, the reality index or the stocks, they have also fallen sharply in the recent months. And now at least we have started seeing some sign of exhaustions when it comes to the sellers. Means we are not seeing any fresh lows in most of the names. In fact, some of the names, they have rebounded swiftly. Shubha, we are seeing currently some base formation going on for almost 1.5 months. In fact, it made an attempt of recovery towards the medium to moving averages around 14 mark, but couldn't sustain. So as of now, I would definitely recommend her to stay put with 1100 being the fresh base for this, and 1450, 1500, that would be the probable target in the next 1 to 2 months.
Right. Well, the next caller query is from Akhil from Pune. Akhil, you can go ahead and ask your query.
Sir, I have 50 shares of Electra Green Tech. I bought it at an average of 1,555.
Right.
Now I'm at a loss. Should I hold or sell for the long term, at least for 3 years?
Right. So if you want to hold, you can hold for 3 years. Is that what you're saying?
Yes, sir. I can hold if it gives me a profit. I can hold for 3 years. Or if I should sell at least loss book, and I should get out of the stock.
Right. Saurabh, coming to you, would you advise him to continue to hold Electra Green Tech at the current levels, or would you advise him to exit this counter?
Yeah, on the valuation front, even after the correction, it is still trading at on the higher side, more than 9 times to book value and maybe 30-40 times to trailing earnings. They have a good order book, but we have yet to see the execution and the profit margin guidance. I think he should wait for a quarter or two, see how the things are shaping up, and then take a call. I would not suggest to average more. I think the next season, I think he should look for the management guidance and then take a call.
Okay, so that's the view for Electra Green that we are seeing. Next query is from Lavanya from Tamil Nadu, and she is quite optimistic on the pharma space as what she wants to understand, and this is for a long-term outlook. So Saurabh wants to understand in the pharma space any counters that she can check out or view, and which are the counters that you're bullish on.
I think it is very tough to take a call as on the pharma because no one knows what kind of levies would be put by the US administration on the Indian pharmaceutical and what are the outcomes of them. I think some of the industry veterans have said that maybe if some kind of duty would be imposed, then it would they would able to pass on. But I think it will be a tough call to say what is likely to happen. But few of the pharma companies that we like, maybe Netco Pharma and the DVs, he can go for.
Right. The next query is coming in from Jashwant from Mangalore, and he seems to be an intraday trader. So Ajit, coming to you, any views on IRFC? How's the stock looking like on technical charts?
So Sumit, after this recent rebound, we are seeing that the stock is struggling to hold above its short-term averages. So if the view is very short-term, I would recommend him to avoid any fresh position until the stock sustains above 125 mark. And for the existing trade also, I feel that after this rebound, there is a possibility that the stock might again witness some consolidation before the next leg of the up move. So in both the cases, avoid fresh buy, and for existing position, 118 should be a stop loss. On higher side, 130 will be the first area of resistance. So that should be his target area.
Okay, so that's a view for IRFC. But Ajit, I'll stay with you for the next query as well. And this is from Ekambara from Hyderabad, holding 20 shares of GE Shipping. And this is at a price of 1,320. Wants to understand whether it's the correct time to average this, because in the last 2-3 sessions, we've seen that the stock is looking upwards from the support zone. Do you also have a similar view on this counter?
So yes, we have seen decent recovery in the passing week, and there's a possibility that this recovery may further strengthen. But as of now, I wouldn't recommend adding to your loss-making position. See, mid-cap and small-cap, we are still not very confident about that, whether these kind of recovery attempts will sustain or we are going to see the reversal. So comparatively, larger mid-caps and large-cap is something that one should be focusing on. And for the existing position in the broader markets, one should keep on trailing their stop losses on rise. So for GE Shipping now, 850 should be a stop loss, and 1,000, 1,025 you should review again.
Query is actually an international query coming in from Nagendra from Tokyo, Japan. He has around 5 lakh rupees to invest in the Indian markets, and Saurabh, he wants to know one stock each from mid cap and the small cap space that would be a top picker as per you.
Very tough to give a call, but yes, we have been our view is quite constructive on the capital goods and the power generation segment. In that context, I would suggest companies like KEC Transmission, which lies in the mid cap and small cap space, and the other company which we would like to suggest is maybe Sectoral Jal Vikas Nigam, because we have a quite constructive view on the utilities.
Okay, so KEC International, and another stock is SJVN, which is in focus right now. But you know what? The next, we have a caller joining us, and this is Kalpa Ranjan from Guwahati. Hi, Kalpa. Welcome to the show. Please state your query.
Yeah. Good morning, madam. I'm Kalpa from Guwahati, Assam. I have brought Tata Power shares of 250 shares at 380.
Right.
I want to buy right now. So is the right time to enter the market, right, madam?
Kalpa, any particular reason that you plan to add more to this position? Are you looking for a longer term outlook on the stock?
Yeah, I'm looking for longer term, 3 to 4 years.
3 to 4 years. Okay, Saurabh, let me come to you on this one. What's your view on Tata Power?
The view is positive on the Tata Power, but rather than buying more Tata Power, I would suggest him to buy companies like maybe SJVN and NTPC and build a portfolio in the utilities.
Well, the next query is coming in from Satya from Hyderabad. He has around 25 shares of Adani Enterprises bought at a price of 2,430. He wants to know whether should he continue to average this counter at lower levels or continue to hold the quantity it has currently has around 25 shares or exit. Saurabh, any views on this?
I would suggest avoid to average mode.
Right.
Okay, so that's the view for Adani Enterprises that you're seeing. But a quick disclaimer that the channel that you're watching is a part of the Adani Group. So NDTV is a subsidiary of AMG Media Networks. Again, moving on, next query is from Padmandan, and he wants to understand Kane's technology view, whether the share will regain its value. Ajit, I'll come to you. What's your view on Kane's tech?
So actually, it's a very sharp cut the stock has experienced in the last 2-3 months, and now we are seeing some sort of base formation around the medium-term moving averages on the weekly charts. So as of now, indications are mixed because the volumes are dry and we are not seeing any decisive move either. So in the near future, this consolidation might continue. So if the view is, let's say, for 1 to 2 months, this consolidation might continue to extend. So one should avoid for short-term trades. And if you have made investment in the past, 3,500 in the closing, this should be your stop loss. In case of recovery, around 5,500 is something that might act as a strong hurdle in, let's say, a quarter time. So, one should plan their trades accordingly.
Right. The next is a caller query coming in from Ishwar from Bangalore. Thank you, Ishwar, for calling us. Could you go ahead and ask your query on the show?
Yeah, this is Parmeshwar from Bangalore. I'm holding IGI Limited at around 560 rupees, almost 200 shares. So I wanted to know which the holder booked the what I read.
Right.
Because I am looking for 6 months time period of that.
Right, 6 months. So, Ajit, coming to you, any short-term views on IGI? How's the stock looking like?
So Sumit, initially post-listing, we saw that the stock inched higher, but it's been almost 2-3 months now that we are seeing this gradual drift. The stock is trading at the 52-week low, record lows. So as of now, at least I would recommend to reduce its position and wait for some sign of stability and reversal. So as of now, these indications are in the favor that this decline may continue to extend further. So it's prudent to at least book partial profit and wait on the sidelines for fresh entry opportunity.
Okay, so that's a view for IGI Limited that we are seeing. But next query is from Lakshmi Kant from Hyderabad, holding about 51 shares of BSE Limited, and this is at a price of 5,093. Currently sitting on a loss of 51,000 on this counter. Wants to understand whether she should continue to hold or sell here. Saurabh, let me come to you. The outlook is for a 1-year period. What's your view on BSE?
The volumes for both the exchanges are different. There a lot of competition is coming from the NSE also. In my opinion, I think on the valuation side, the stock is quite expensive, and in my opinion, I think one should avoid investing in the BSE. I think the numbers are likely to. On the operation side, I think we are likely to see dip going forward.
Okay, so now we are at an interesting part of the show, which is the rapid fire round. So we'll be asking queries and request the guests to keep their answers pretty short on this one. So the first query is from Dinesh from Gurugram, holds about 250 shares of Ganesh Housing, and this is at a price of 800. Ajit, I'll come to you whether she should hold, add or sell on this counter.
I would recommend to hold with 950 as a stop loss and 1200 as the immediate target.
Right, the next query is from Surendranath Yadav. He's holding Motherson Sumi shares, bought at a price of 127. Saurabh, should he continue to hold or exit?
Exit.
Okay, so the next query is from Vijay, holds Equitas shares 358 units at a price of 90 and wants to understand the long-term 2 to 3 years picture on this. Saurabh, your view?
View negative, better exit.
Right, the next query is from Sarjit Shekhawat from Jaipur, Rajasthan. He wants to know, he holds around 1,000 shares of Ixigo, bought at a price of 172. He wants to average this counter. Saurabh, should he do this and continue to hold for long term?
Hold but avoid average.
Okay, next query is from Tejas from Nagpur, and he holds Tasty Bite shares, bought it at a price of 11,000. 15 shares is what his quantity is. So whether he should average it out, Tasty Bites is the share price that we are seeing. Ajit, I want to come to you on this one.
Avoid averaging, but maintain a stop at 7,500 for the complete position.
Okay.
The next query is from Nanda Kumar, and it's on Power Grid Invit. He has around 95 units, around 2,000 units bought at 95 rupees. He can hold for 5 years. Should he do that, Saurabh?
Continue holding.
Okay, next view is from Madhu from Hyderabad and holds about Wari Renewable Technology, 80 shares at a price of 1,210. Wants to understand a 2 to 3 year outlook on this. Saurabh, your view?
Avoid.
The next query is from a long-term investor whose name is B. Mehta, and he has around 10 shares of Coforge bought at a price of 4,310. Should he buy more or hold the current number of shares, Saurabh?
Book profits.
Okay, so this brings us to the end of the show. Thank you so much, Ajit and Saurabh, for joining us on the show and solving all the queries, but we have a lot more lined up on the other side. But with that, we are short on this segment of Ask Profit. But thank you so much, viewers, for tuning in and asking your queries.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure from
Hello and welcome. This is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. Well, today we're talking about Aptus Value housing finance company, and as the name suggests, it is essentially into housing finance. Well, this is an NBFC. It's a relatively smaller NBFC, at least in terms of market capitalization with respect to several others, but it does seem like it has done its part in terms of growth of late. That said, let's take a look at how things have panned out and what the company in fact does. So, of course, it offers loans for home construction, home purchase, renovations, as well as home extensions, and it's focused on self-employed, low and middle income families, primarily from semi-urban areas and rural areas. And that perhaps at this point in time, it does look like it has its strategy in place, and what kind of markets it wants to target and what kind of clientele it's looking for, what kind of borrowers it is looking to focus and target as well. Now, the average ticket size for this particular company is about 10 lakhs. So the sum itself is also not significantly large, and a lot of the targets here will likely have a ticket size of less than just 10 lakh rupees. But in terms of product mix, how does that pan out? Now, at the end of the third quarter of this financial year, if you consider how things were in terms of your loan, well, 61% of your home loans, rather 61% of your revenues, or rather your loan mix was home loans, and that was followed by another 21%, which is small business loans, and quasi-home loans comprise about 14%. So that's as far as your split's concerned. What geographies are they in? Well, they are in 6 states currently, in one union territory, and they have a little less than 300 branches. 298 to be precise is where the number of branches is, and it has seen a significant shift in the number of customers it has catered to since FY20. In the last, well, a little less than 5 years, it has seen its customers move from a little less than 44,000 all the way to well over 1,52,000 customers. So, like I said, it has seen a lot of growth, even in terms of your branches, which has gone from 175 back in the end of FY20 all the way to 298 precisely at the end of the 9 months ended, FY25. So this is as far as the company is concerned. We do know that Aptus Value is in a space which is there's a lot of competition here. Now, this is a 15,000 crore market capitalization company. So, and there are plenty out there in terms of competition. It's something that we're going to address as well a little later on in the show. But for now, this is what the company does, and this is to give you an idea about how things have panned out. Now, you know, as we always do, we take a look at the fundamentals of all these companies and see how things have, in fact, panned out for the company in terms of your income statement, your balance sheet, your operational metrics, as well as asset quality. These are some of the most important aspects as far as you know, an NBFC is concerned, an NBFC catering to housing finance is concerned. But moving on, we look beyond and we take a look at shareholding as well, valuations, street credentials, as well as street coverage too, to give you a better idea of how the company has done and has panned out. Well, in order to do that, as usual, I am joined by Harsh, who's also going to help us shed more light into what the company has been doing of late. So, Harsh, good morning and thanks for joining in. I reckon that income statement, as usual, would be the good place to start off with.
Yeah, absolutely, Agam. You know, largely when you're looking at the kind of trajectory that the UM has taken, it's roughly a 30% kind of CAGR that they've done over the last 5 years. And I'm just trying to zoom out a little bit here, just for better context. And net interest income growth also equally healthy. We've seen a 28% growth both on NII as well as profit after tax when I'm looking at the 2-year CAGR of this company, or near 3-year CAGR as well. So healthily placed on that count where the growth numbers are concerned. The trajectory looks good. Yeah, I mean, a little bit on the OPEX front, you've seen OPEX grow at around 25% despite top line growing at 30-odd%. And therefore, you're seeing a little bit of OPEX play also starting to play out on that P&L number on the profitability metric. So just those couple of things to be kept in mind. How much will that ramp up happen, etc., will also be interesting to understand. But yeah, that's how it is.
Okay, so well, pretty healthy income statement from what we see and what we can make out. So it's certainly a thumbs up there. I'll quickly take you through the balance sheet, and perhaps Harsh can give us a little bit more color on the balance sheet as well. But well, they have seen their AUM grow. This is of course on expected lines, because back in FY22 they had an AUM of around well, you know, little less than 5,200 crores, has grown to 10,266 crores to be precise right now. In terms of their borrowing as well, moving in tandem from 2,700 crores all the way to little less than 6,500 crores. And this particular number is perhaps something what Harsh can shed light on, also give us the full formula. So yeah, what are you going to tell us about this particular ratio?
It's the capital and risk-weighted assets ratio, which generally typically determines how well capitalized the company is. Of course, all NBFCs and banks need to have adequate capitalization, and generally that's between the range of around 15 to 20% and 20 to 25% for certain fast-growing NBFCs. This one is sitting at 65% and therefore very well capitalized, at least in the medium term. It's of course growing at a healthy clip as well. But that capital ratio of 65% just kind of signifies that there is just adequate room available for it to grow.
Right. So no concerns about the fact that it has moved from 81% to 65%, because other than that, ratios in general are sub 25%.
That's correct.
Okay, so there you have it, which is why we're giving this the balance sheet, you know, a thumbs up as well. But what about the other key operating metrics, Harsh? What can you tell us there?
Well, yeah. So when you're looking at your margin number, again, some of these numbers may well change because it's so well capitalized, and therefore there's so much scope for the borrowing number to go up and interest expense also to go up. If both of those numbers actually go up, you'll see margins come off, and therefore the better way to look at it is spreads. What's happened with spreads? And let's zoom out also a little bit. From 9.2% spreads have come down to 8.7%, but also it's an environment where the borrowing rate has gone up substantially for NBFCs. From FY22, we've seen the repo go up quite sharply, 2% plus, and therefore some of that also reflecting on your spread number. But nonetheless, they've been able to maintain their spreads. Of course, a slight bit of dilution, but they've been able to maintain it. Question is, can they continue to maintain it? And now, with the repo rate cut coming into play, what do you expect in terms of spread? So that's one number I'll be very keen to know. The other piece is with the ROA. The ROA has come off for 9-month FY25, and therefore the ROA trend, how does that go, is something that, again, we would be keen to know. But a near 8% ROA for a company largely lending to the housing or with housing as the collateral doesn't look bad at all, right? Your OPEX to assets also have remained healthy between the 2.5 to 2.7% range. So that's how it's kind of stacking up. You look at borrowing costs going up, that's largely impacting spreads. That's how it is.
Okay, so that's as far as the operating metrics are concerned. Again, this is a tick mark is there as well. We'll talk about asset quality. Now, what's happened here is that there has been a little bit of an up move in terms of your gross NPA ratios. Back in FY22, it stood at around 1.19. It's currently standing at around 1.28. Now, let's not get this wrong. This certainly is an increase. That said, these numbers are relatively lower at this point in time. In general, if you compare it to several of the other NBFCs. So while they may be increasing, the numbers are not terrible. It's the same for the net NPA ratios as well. Back in FY22, that stood at around 0.88, and it's moved up to around 0.96. Do remember that when a company is on a growth path, what usually happens is that as you take on more of the business, oftentimes you do see a little bit of an up move in terms of these numbers as well. It does not mean that the asset quality is at a concern at this point in time because of the absolute numbers are a tad low. But Harsh, you want to come in and add something here?
Yeah, it's interesting, right, Agam, because what you're seeing in terms of that net NPA ratio, and when I'm looking at the 5-year trend, over the last 5 years, this is probably the point where asset quality is sitting at its worst point in the last 5 years.
Yeah.
So whether that's a concern, and why is that so? And the other piece that I'd be worried about, even in terms of asset quality, is 40% of its book comes from a single state, which is Andhra.
Right.
And therefore, that may also be a risk and a concern.
Right.
They're going into Odisha, they're going into Maharashtra. Those are two states they're venturing into. But those are also states that they will know less about in terms of customer cohort.
Right.
And I include this as part of asset quality only from a perspective that there could be these emerging risks come up when it comes to your asset quality. Of course, the little bit of slippage that we've seen, or the little bit of slip that we've seen on asset quality, probably sitting at 5-year lows in terms of quality, is the other concern. And hence we give it a neutral, because not entirely comfortable with the way that's gone by.
Fair enough, fair enough. So that's, talking about asset quality. If you, Harsh, want to talk about shareholding as well.
Yes.
An interesting promoter holding here.
Yeah, absolutely. So we've got 53% promoter holding currently, but out of that 53%, nearly 29% sits with Westbridge alone. That's of course, it's an LLC. But it will eventually exit at some point. 7% already they've exited in the quarter ended June 2024. After which they've diluted maybe another % or so, but not significantly. So over the last maybe 3 or 4 quarters, if I look at it, the dilution has been roughly 6+%. And that is also reflecting on the number on your screen, the % of dilution over the last quarter or so. But the 6 to 7% otherwise is a large dilution. And Westbridge held around 34.5% in the company at the start of the financial year. And therefore, it's a large chunk in terms of the overall equity of the company. Outside of that, you have, of course, one of the promoters holding around 19%, which is okay. Wouldn't be too worried about that. But moreover, this little bit of overhang, Agam, and we've seen this, it could well be that the overhang goes away.
Yeah.
But it could well be that it remains as well.
Right. No, absolutely. Point taken. And, at the moment, besides, of course, that particular, private equity holding stake even if you look beyond in terms of FIs and DIIs, for the size at which it is, it has reasonable amount of holding from institutions, which gives you a little bit more of a backup, but that overhang will remain. It remains to be seen as to when Westbridge will look to shed more weight, and when it does, what kind of institutions will come in and will buy into this particular company. So neutral rating on that one. It will also be a neutral rating on valuations, and I'll take you through that quite quickly as well. If you consider the 1-year forward price to book, and this is as per the Bloomberg consensus, this gives you an price to book of around 3 times. And this is more expensive than Aadhar Housing Finance, which is at around 2.5 times, and PNB Housing, which is at around 1.2 times. It's understandable that I think that the third name out there should be Punjab National, PNB Housing, which comes in at around 1.2 times, which will also need to be corrected. Well, it's understandable that PNB Housing Finance is at around 1.2 times, but Aadhar, which is considered to be a slightly higher growth path, can be compared here, not taking anything away from Aptus, because as you can see, and as you've already spoken about, it is on a significant growth path to, in fact, showing a lot in terms of what it has done, which is why I reckon that markets would probably want to ascribe a higher valuation to something like an Aptus or Aadhar Housing. But given the fact that it is the most expensive of these three at the moment right now, well, it's going to be a neutral rating here as well. Street coverage, Harsha, we have plenty out here as well.
Well, yeah, very healthy in terms of street coverage. 16 analysts cover it, and a 30% upside from here that the average analyst estimate seems to suggest. 394 being the target price, all of which indicates a buy on the stock for sure, and therefore a thumbs up on this one very clearly. 3 things. 1, 16 analysts cover it, 13 have a buy, and 30% average upside.
Okay, and I'll also tell you about how the stock has panned out. So firstly, in terms of the listing back in 2021, from those levels, the stock is currently lower. So that's not exactly encouraging. On a 1-month basis, it has come down 5%. Last 6 months, correction has been, again, 5%. And last 12 months, the stock has, come off by around 11.5%. Look, we must realize and understand that, in tandem with something like a mid-cap or a small-cap index, it has outperformed to a certain extent. But overall, the gains have not been satisfactory. In fact, if you consider the 3-year performance, it has moved up only 21% over the course of the last 3 years. Then this is as the markets moved from strength to strength over the last 3 years. So the share price has not moved significantly. Perhaps this is because of valuations, because we do see that growth pan out for the particular company. So some of these factors are playing in favor of the company, but that the valuations have not in fact have provided some sort of a headwind for the share price here. But let's take this conversation forward. We are now in conversation with Balaji P, the Managing Director at Aptus Value Housing Finance. Welcome to the show, and thank you for joining in. My first question then comes down to your view and what you anticipate with respect to growth, because we've seen very strong growth over the last 2 to 3 years. Can we expect growth to come through at the same clip, even as you expand to newer geographies here?
Thanks for having me on the show. Good morning, all. Just to talk about the growth, what is happening is, if you look at the overall market opportunity that is available in the affordable housing, one is the mortgage penetration in the country itself is very low at around 11% of the GDP. And also the housing shortage is more acute in the areas where we operate, basically the tier 2, tier 3 and tier 4 locations. So this makes us very confident of having to grow at around 30% for the next 3-4 years. And what is happening is the support that is being given by the government in terms of PMAY and the tax benefits that are available both for the company and also to the customers and the housing loan customers. This makes us really confident that we are having a huge runway for growth. And despite this market size can support more competition as well. plus the healthy growth for Aptus housing, which we are projecting around 28 to 30% in the next 3-4 years. So that is what is making us really confident about this. Yeah.
Point taken. So this is Harsh also joining in the conversation. While I take the point that growth is extremely strong, also want to understand context from you. You're growing solidly within two key geographies. One is Tamil Nadu, one is Andhra, and maybe not geographies but states. You plan to grow Odisha, you plan to grow Maharashtra in a bigger fashion now. Moving into a different geography, would that impact your asset quality metrics, and what gives you the confidence, if not, that it will not impact your asset quality?
Sure. Good question, Harsh. See, if you look at it, our strategy for growth is this way. See, I select a particular state and go deep into it. So if you look at it, every 50, 60 kilometers in a particular state, I'll have a branch. So this we have done it in the states of Tamil Nadu and Andhra Pradesh, which is contributing to the growth. We'll be doing this in the states of Telangana and Karnataka as well. And also the same thing will be replicated in Odisha and Maharashtra. See, if you look at the genesis of this company, first, this company has been there for 15 years. First 5 years, we were mostly in Tamil Nadu only. So we ventured into other states of Andhra Pradesh and Telangana, where we were able to get this growth and still maintain the same asset quality. So we are very confident that even in Odisha and Maharashtra, this credit quality will be maintained, because the primary philosophy of this company is a credit driven company rather than a growth driven company. For us, the quality of book is more important than the growth. So with the result, we are very confident that we'll be able to do the same thing. We have replicated from Tamil Nadu to Andhra Pradesh, Telangana and Karnataka, and we'll be replicating this in the new states of Odisha and Maharashtra also.
So Balaji, when it comes to quality, as you mentioned that there's going to be of prime importance, considering we are looking at a slight edging up in terms of your net and gross NPA ratios, do you think that we're likely to see a stability around here, or do you think that as business grows, we could see a little bit more of an inch up in these numbers as well?
It might not be so. If you look at it, we closed last financial year with a GNPA of 1.07%, and this has increased to 1.28% as of December. But December quarter was slightly affected because what happened was some cyclical factors affected the industry. In the southern part, normally in November, the floods come in. And in October, there were some holidays which was bunched up because of the festivities. So that had slight impact on the collection efficiency. But we are seeing great traction in this quarter. With the result, there will be a good improvement in the asset quality and also the GNPA, which might be lesser than what we reported in December. So we are not seeing that kind of a problem in any of the states in terms of asset quality.
Okay. Sir, the other key overhang, and I know maybe you're not completely in control of this one, but I'm sure you're having conversations with Westbridge. They've diluted around 7% in this financial year. And to that extent, it will continue to be one of the overhangs on the stock price. And that's clearly reflecting as well. Is it one, a concern for you as management as to who comes in as the other shareholder, because it's a substantial chunk? And second, is there any visibility of how quickly they leave and how quickly they exit? Is there any visibility of that?
Right now, if you look at Westbridge's investment, they came into the company as a private equity investor sometime in 2014. And they have been supporting this company till the IPO time, where they were holding almost 47-48%, and at the time of IPO they sold around 10%. And as you rightly told in your commentary, around May-June of this financial year they sold around 6-7%. So after that, Westbridge, I don't have any information on what is their plan or when they are going to sell. And if they sell, to whom they will be selling. So as of now, I don't have that information. And definitely, as you rightly told, this would have played as an overhang, but I'm not able to. I don't think I can control it sitting in the company.
Okay, understood. So, what about sustainability with regard to both spreads as well as how do you see margins evolve? Because you'll take on more debt as you go by, you're very well capitalized, and therefore what do you give as guidance for both margins, how do you view it, and spreads, are they sustainable at this kind of near 9% kind of level?
Definitely, we feel that we'll be able to do this because if you look at our yields, our consolidated yield is around 17.37%. This is not because we are charging high rates of interest. It is basically the product mix. On a consolidated basis, we have around 62% as housing loans. The other thing being the non-housing loans. Again, that is getting classified into some of quasi-home loans, and the other one is the small business loans. And because of this product mix and the interest rates we charge, it is at around 17.37, and our cost of funds is at 8.68 as of now. So that is resulting in an 8.7% spread. Going forward, if you look at my total borrowings, around 53% of my borrowings is variable, and of that 53%, 23% is linked to external benchmark rates. So obviously this 0.25% of that 23% rate of interest that can come down maybe by 0.05% immediately. And also for the MCLR linked borrowings, it might take another 6 months to come to get this rate cut benefit. So with the result, the spreads are likely to widen and it is likely to increase. And if you look at but what will happen is, as you rightly told, there will be no equity infusion into the company, and all the growth which we are projecting is going to be funded out of borrowings. So with the result, the leverage will go up. Because of that, the absolute cost of the interest cost will go up. Actually, the debit in the P&L will go up. So to that extent, the ROA, which is at around 7.7% as of now, another 2 years down the line, it can come to around 6.8 or so. But ROE, which is at around 18.5 as of now, will go up beyond 20%. So this is the plan with which we'll be doing. Yeah.
Right. Right. Well, Balaji, we leave it at that. Thank you so much for joining us and taking us through your views on, the business that we can expect to come through over the course of the next few years. We wish you the best.
Thank you. Thank you, Harsh.
Well, there you have it. Well, before we conclude, a very quick look at the overall ratings that we have given the company at the moment based on its fundamentals. So it's very strong income statement, balance sheet, and operational metrics. Moving on to the next set. Overall, not a lot to complain about, which is why we give you a total rating of around 5.5 out of 8. Well, on that note, we're completely out of time on this edition of KYC. Stay tuned in, and we will be back in just a bit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs.
Hello and welcome. Good afternoon. This is Markets at 12 and I'm Malika Mishra. Let's take a look at how the markets are faring first. Now, after the market snapped a 3-week long losing streak on Friday, which is March 8th, they opened flat today and continue to hover slightly up in the green. Now, while Nifty is around 22,600 at the moment, you would see Sensex is trading around 74,600 levels, so not doing pretty bad as well. Let's zoom in and check how the broader markets are faring at the moment. Nifty Midcap 150 is flat but trading with a negative bias. Nifty Small Cap 250 is down about 0.4 to 5%, so the broader market is clearly at the moment in a bit of pain more than the benchmarks comparatively. Let's turn to see what's adding some pressure to the Nifty basket. You would see stocks like, although there's more green than red, but you'd see stocks like L&T, Trent, RIL, IndusInd and ONGC, dragging down the market and, darkening that red. However, and IndusInd clearly is reacting to the CEO's one-year extension. On the other hand, you would see stocks like Infosys, HUL, Power Grid, Bajaj Finance are pulling up the index, and Infosys in the green after CLSA upgrades the stock to outperform. Now let's take a look at the sectoral picture to get a sense of which sectors are performing and which sectors are not as much. More than greens for sure again, but more greens for sure. But metals, FMCG and media are leading the pack, while PSU, oil and gas and auto, they're trading with a negative bias at the moment. Lastly, let's get a sense of the broader market breadth. And you'll see that it stands skewed in favor of the declines with lesser stocks advancing. And I have my colleague Mika also joining us. Mika, what else is moving in the markets today?
I mean, I would like to pull up a nifty small cap 250, which is the clear underperformer in today's day of trade, seeing cuts of almost 0.8%. If you look, get a closer look on the small cap 250, you have 183 small cap counters declining versus 60 advancing. Some of the counters that are under pressure is the 361. It's seeing, cuts of 8%. Something like a JM Financial as well as Triveni Turbine and Anand Rathi all seeing cuts of 5 to 6%. This is followed by something like a Sterling and Wilson or a TVS Supply Chain. On the other hand, something that is doing pretty, well on the small cap, we could just, if you could just pull up something like, if you could just get the small cap 250 counters in terms of, what's gaining and contributing, we could just put that picture in. But even the mid cap, it is under pressure. But something I want to focus on is the nifty metal. Right. Now, we've seen, steel counters, have a positive reaction. We covered the story in the morning, something like a JSPL or a JSW Steel gaining in trade, and this was on the back of some domestic price hikes. And not to forget, the Nifty Metal Index was one of the strongest sectors today as well as last week. But to talk about more, there's a lot we can decode around here: domestic prices, potential safeguard duties, as well as just the commodity picture in general. We have Aditya Velakar, Senior Research Analyst of Metals at Axis Securities, joining us. Welcome to the show, Aditya. Let me start off with our current, our recent dealer checks suggested a price hike just recently over the weekend. And this is the second price hike that we have seen in about a month. Our dealer checks indicated 2,000 rupees per ton price hike, the earlier price hike at 1,000 rupees per ton. What are you picking up?
Yeah, so as you have indicated, the mills have taken price hikes. So it is based on a few factors. So number one is there is a speculation or buzz that the safeguard duty could come in. So that is one. Then the data from China, which has come last week, especially on the GDP growth of 5%, fiscal deficit of 4%, all this positive data has boosted the sentiments of the metal sector. And then there are some decline in the steel imports in the month of February. This might be due to the ongoing investigation from the DGTR. So all these data points pointed towards a building up of positive sentiments. Also, this Q4 is a seasonally strong quarter for metal sector per se and steel sector. So the mills have taken an opportune time to hike their prices.
But let me put it this way, in a scenario where we have hiked our domestic prices, but we still get overall, we're still being hurt by the cheap imports. How does that bode well for the company? I get that realizations, get an uptick. But in a scenario where the pressure from imports is still something that is being talked about, how does that picture play out?
So currently, the domestic steel prices are trading at a 2 to 3% discount to import parity prices, and the steel coming out of China for January, February this calendar year is still at a higher level, and that is almost, I guess, 17 million tons, which is up from 15.9 million tons over the same period last year. So the Chinese steel exports are not coming down. So that is one area of concern. But as I said, the imports in India has come down in the month of February because of this safeguard duty investigation. But yes, you are right. The broad level concern still remains for the sector in general, because the domestic demand in China is something which needs to be monitored, and which is something which is quite weak, and that has been an issue since last many quarters. And we have seen that the Chinese steel exports in the calendar year 24 have increased by 20%, almost to 110 million ton, which indicates the ongoing issues in China with respect to their property sector and all. Also, the recent CPI data from China is still negative, which also raises some bit of concern. That's on the flip side. On the positive side, there are indications from the Chinese media that they may cut the steel production for this calendar year by 50 million tons. Secondly, as we discussed, the imposition of the safeguard duty. So if that comes in, then the steel mills will have some buffer to raise prices. Some of the mills have already gone ahead and raised prices. But if that happens, then your import parity window opens up, and that gives us opportunity for steel mills to raise the prices. So, just to give an example for Tata Steel, if the prices increases by rupees 1,000 per ton for HRC, then the EBITDA increases by almost 4%. So that is the scenario which we have to work with. So almost right now it is a speculation when the safeguard duties will kick in, but that will be one positive trigger for the sector per se.
Got it. I know, when we spoke to, managements of different companies, they expected in Feb. Now we don't know when that's coming in. But another part of this, while these safeguard duties will be imposed with China and Vietnam, you have South Korea and Japan that still account for around 50 to 59% of our import mix. And with the US tariffs being imposed on them, while there's no direct impact on India because our exports are immaterial to the US, but could you see a redirection of these steel imports from Japan and South Korea to India, adding a pressure, from another end?
That probability could be there. The import, the safeguard duty imposition, whether it is restricted to China or Vietnam, or it will be for all importing countries, that is what we have to see. And as far as the tariffs from US are concerned, that is definitely it does not impact both China and India directly, because even Chinese steel exports to US in crude steel terms is not very significant. But at the same time, the steel containing material from China to US, that is a significant chunk. And if these tariffs continues, then that basically disrupts the supply chain and redirects the material flow to the ex-US market, which could be disruptive. So the space is in a flux, and we need to continuously monitor the data emerging out of the export market, the ex-US market. Also, there are ongoing investigations in Europe also for potential dumping. So that is also keeping the export market quite competitive. So Indian steel mills are staying away from the European steel market. So a lot of news flows are happening, and this trading window which have opened up recently was because of the positive news from China, as I just said, the fiscal deficit data and all that stuff. And the valuations were not very demanding. So that along with the speculation that this safeguard duty will come, so all these points led to the rally in the steel stocks. But the sustainability of that rally will hinge upon first the imposition of the safeguard duty, and then the continuous data coming out from China, whether the exports drop from the China. So that is, we will have to monitor.
Short on time, I have, last question. I'll put in two thoughts. One, what's your outlook on the base metal price movement and how that's seeing an uptick, especially aluminium up 5% in the past month? And if you could quickly give your top picks in the whole metal counters, whether that's ferrous or non-ferrous.
So coming to the second part of your question, our top picks are Hindalco. Then we like Tata Steel in our metal pack. We also like Nalco and Vedanta. So that is a pecking order. JSPL also looks good at these levels. So and then on the base metals, aluminium prices have withstood strong despite the dollar index moving up. Now the dollar index have cooled down, but still aluminium prices have stood firm, and we are constructive on aluminium prices basically because the demand supply scenario for aluminium is much better as compared to ferrous and steel, because the demand from renewable electric vehicles and all that stuff that will keep driving aluminium prices, that will keep supporting aluminium prices. Also, the supply is something which is not really picking up. So the supply demand scenario fundamentally for aluminium looks fairly stable, and that is the reason we are constructive on aluminum prices, and that is why it is reflected in the prices as well.
Okay, thank you so much, Aditya, for joining us and giving us that picture on the metal space. And definitely, as you said, that the metal space seems to be in a flux, but we will have to keep monitoring to sort of see a clearer path for this sector in the future. And thanks, Mika, for joining us. Let's now shift our focus to a story that will be closely watched by NDTV Profit throughout the day. Gensol Engineering is a stock that has been in focus last week on the back of sharp correction. In fact, the stock has shed almost 40% in the last 5 days. And this comes due to the ongoing debt crisis that has put pressure on the promoters who have recently pledged their shares, putting further downward pressure on the stock and severely impacting investor confidence. To tell us more as to what has happened with this company, we have Soumit and Mika joining in. Over to you.
Well, for Gensol, if you look at what has happened over the weekend, the company's promoter did sell close to 9 lakh shares in the open market. That is close to 2.37% of the stake and worth at around 30 crore rupees. But this, whatever the promoter is generating by stake sale is something that the promoter will be using to infuse back into the company. That's what they are claiming in the press release that has come out on the exchanges. And post this stake sale, the promoter holding stands at close to 59.7%. But the key question here is how is the promoter going to infuse these funds back into the company? Now for that, back in 2024, June 18, 2024, the company had issued close to 61.84 lakh warrants to promoters and other investors. Now out of this 61.84 lakh warrants, around 15.3 lakh was subscribed by the promoters, while the remaining was done by the other investors. Now as per the warrant subscription terms, 25% of the amount was paid upfront, while the remaining 75% the company had aimed to get this amount by December 2025. However, they might choose to prepone this fund infusion, and that's how the company and the promoter would infuse funds into the company. So if you look at this table, back in June 2024, when they had announced it was 61.84 lakh warrants at a price of 871, which means that they were looking to do a fundraise of close to 539 crore rupees. Of this, 25% is already received, that is 135 crore rupees, while the remaining 404 crore is something that the company is looking to raise from investors. So out of this 404 crore, nearly 1/4, that is around 100 crore rupees, is something that the promoters will be infusing in the company, while the remaining 304 crore rupees is something that they are looking to raise from the other 107 investors. And this will be done at a price of around 871, which is nearly 2.7 times the current market price. And 871 is a predetermined price that was decided back in June 2024. Now the company will hold its board meet on March 13 to decide on the fundraise. So that is something important to watch out for. And the most important question here is this 400 crore rupees, will it be sufficient for the company? Now if you look at the current debt of the company, that stands at close to 1150 odd crore rupees, and this 400 crore is nearly 35% of the total debt. So if the company is successful enough to raise this 400 crore rupees, then it seems that it might be sufficient for the company for time being to repay its debt and to fund its capital expenditure, given that it's nearly 35% of the total debt as of 31st December 2024.
Well, but you know, when you talk about a bigger picture in terms of what started this, well, the stock is down 57% in the past month. This is 1,600 crore rupees of market cap wiped off. Why? Well, the initial trigger was a credit rating downgrade by both CareEdge as well as ICRA ratings. All the long and short-term facilities were downgraded to a default rating on because of concerns of debt obligations, with ICRA even making falsification claims in terms of what they were receiving by the company. Now, there are certain key concerns. While the company has reduced debt in FY25 so far over 200 crores, their total debt stands at 1,146 crores versus a 330 crore EBITDA in the last 12 months, and leverage stands at 3.5 times. Now the cash flow from operations is also low. It's in the range of negative 98 crores to a positive 115 crores in the past 3 years, and 86% of the shares held by promoters are currently pledged, and the company also is in a challenging and competitive EV market. There are some positive or key triggers. They have an order book of 7,000 crores. They do plan to sell 2,997 vehicles for a total of 315 crores, proceeds from which will be used for debt reduction. They're also going to sell a subsidiary for 350 crores, aiming to reduce debt by 655 crores as per the latest statement. They also have pre-booked 30,000 EV vehicles. Production is expected in FY26, and they've secured 2 battery energy storage projects from GUVNL, which is also expected to be executed in FY26.
Let's now shift focus to another stock. Reserve Bank of India has allowed only 1 year extension to IndusInd Bank MD and CEO Sumant Katpalia after the bank sought tenure extension by 3 more years. Now the stock is currently down close to 3.5%, and Harsh is joining us to tell us what the brokerages are making of this matter. Over to you, Harsh.
Just 16 days left for the tenure to expire, and likely RBI's stance is cautious with regard to the way in which they've given the extension, but it's also keeping in mind that there's just 15 days left now. So very little that they can even do in terms of a replacement. But a 1 year tenure clearly is setting the context or setting up shape very well for an early exit for Mr. Sumant Katpalia as MD CEO. Mind you, he's been MD CEO as of date only for 5 years. And the typical tenure of the MD CEO in the banking space is capped at 15 years. And therefore, this kind of truncated tenure will definitely put most investors as well as analysts have put analysts in the cautious basket. Now, in terms of what analysts are suggesting, I'll start off with Macquarie. They're calling the extension a disappointment, the shorter extension. They say that it was shorter than even they had anticipated. It creates uncertainty with regard to the bank, and it also leaves the door open for an early exit for the CEO MD. It also could mean that a PSU CEO could come in, which could lead to a sharp de-rating in the stock, even though that's a low probability item. They've given it a 1210 rupee target price, and they've maintained their outperform rating. Mind you, most of these brokerages are maintaining the outperform because we've seen a 35% correction in the stock in the last 6 months, a 12% correction last week. The other one, Citi, what they're saying is that it clearly signals discomfort from the RBI. They're saying that all other banks have received extensions while IndusInd hasn't, and therefore just doesn't merit a good enough reason why the CEO extension hasn't happened, other than the fact that the RBI is cautious. Third is Goldman Sachs. They've maintained their neutral stance, target price 964. This is one where target price is below 1,000, one of the very, very few. And they believe that the management transition will be top of investor mind. Bernstein giving it a target price of 1,300, 1.3 times price to book is what Bernstein is valuing this at, FY26 expected price to book, and therefore believe that also that this is in general trading at a very deep discount to other players or peers, and that could be one of the reasons why a lot of brokerages have maintained the target prices and ratings.
So while most brokerages are sort of disappointed about the 1 year extension of the current CEO, the likelihood of a PSU CEO taking over could take the bank down south, and that will be something to watch out for. Now, speaking of Bank of America, it gave a mixed review on Indian auto sector. While it maintains their stance on most stocks, it remains, it has trimmed their target price on a host of automakers. Puneet is joining us with a detailed list.
Actually cut target prices on 6 out of the 10 stocks in terms of the OEM coverage, and that's one of the main points of this particular report, apart from 3 key highlights that they're mentioning. So in terms of certain cuts which have been seen in stocks like M&M, target price is now 3385i, but it's been cut from 3650 earlier. The same has been visible. It's a sharp cut for Bajaj Auto from 11,000 to 8,900 right now, and Tata Motors being the other one from 850 to 735 currently. Apart from that, they've been, what's interesting is they've maintained their view across these stocks, which was there before, but the target prices cuts have come right now. The main part they're mentioning is that, in this particular report is that two-wheeler volume trends have been very negative in the second half of the fiscal year compared to the first half. From roughly about 8 to 10% double-digit volume growth has gone to negative now in the month of February, and that's a key negative. They say that this is also because of tighter financing, which has seen because of what we've been seeing in terms of banking finance. Apart from that, the approval times have also been taking a lot of times. They mentioned that portfolio at risk has risen to 8% versus 4.7% the same time last year, so that's a key risk. In terms of the second key aspect they mentioned for two-wheeler volatility is The subsidy schemes which are there as part of the state elections that have gone away now, and those volumes are now dwindling. In terms of one interesting trend that everybody's been pointing out, that scooters have been doing better than motorcycles. That's why they prefer someone like TVS, and premium are doing better than the middleweight segment, and hence their preference towards Eicher Motors as well. They also prefer something like a Maruti. They maintain their view on the stock based on the three key aspects of SUV launches, the electric vehicle launch of the e-Vitara, as well as the export. And they say that while Tata Motors might have limited downside from the current levels, but the weak momentum across business continues, and with the tariffs, with JLR sales at 25% from the US itself, that could be one of the key triggers to watch out for. So M&M, Eicher and TVS are their top picks, with some positive view on Ashok Leyland as well. But across the other two-wheeler packs such as Bajaj and Hero, they maintain the negative view.
Right, Puneet, thanks for that. And now the Indian pharma market has seen a moderate growth of around 7.5% in February 2025. And while price and new launches, drove growth in this space, volumes fell a bit. My colleague Varsha, who closely tracks the pharma space, is here to give us some, very important data points on the pharma space. Over to you, Varsha.
Thank you for that. So yes, Indian pharma market growth slowed down to 7.5% in Feb 2025 as compared to Jan 2025. Now the price and new launches drove this growth, but volume fell. When I talk about the therapies, your cardiac, gastro, neurology and dermatology outperformed, while anti-infectives, respiratory and gynec underperformed here as well. Now the volume, if you see, volume decreased 0.2%, price rose 5.2%, and new launches, the growth in new launches was almost 2.4%. If you see in FY25, the IPM growth is expected around 7.5 to 8%. Now this is as per India Rating and Research. If I were to talk about who were the outperformance, so Zydus Life Sciences grew 12.7%, leading outperformers, while Ajanta Pharma and Torrent Pharma also showed strong growth. If you see the Mankind Pharma and Glenmark Pharma grew 7.8%, which was the growth was in line with the market, that is IPM, and Cipla and Eris Life Sciences grew slower, underperforming the IPM. While lastly, if you see Sanofi's India revenue decline as well.
Okay, Varsha, so Zydus Life Sciences clearly the winner as of now. Thanks for that. And now let's shift our focus to what is buzzing on today's trade. Anushi is joining us with her list of stocks. Over to you, Anushi.
Hey, thanks for that, Malika. So the first one on the radar is Tata Power. Now, Tata Power Renewable Energy has signed a MOU with Andhra Pradesh government, and this pertains to developing about 7,000 megawatts of renewable energy projects. This relates to a very big investment for this MOU which they signed, which stands at about 49,000 crore, marking one of the largest renewable energy investments in the state. The second one and the final one on the radar is IRIDA. This is after the company RBI denies company's request for equity investment for its hydro project. This is for the development of 900 megawatt of hydroelectric power project in Nepal. But again, the company will represent again to the RBI in this regard and hope for a positive development here. So these are the stocks in my radar.
Thanks, Anushi. So Tata Power and IRIDA, we will keep an eye on that. And viewers, that's all the time we had on this show. But do stay tuned to NDTV Profit for more news and updates.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. I'm Hiral Datia and with me is Puneet Javeri. Puneet, good afternoon. Clearly, if you see in terms of where markets are concerned, we are trading flat. However, 22,500 is that crucial level that the street is watching out for. Overall, that's the support level that we should be looking at. 22,587 is where we are at currently with gains of around 0.2% coming in there. Let's quickly pull up Bank Nifty on the screens as well because 48,000 has been that level that the street has been watching out for. We are way above that. 48,500 is what you're tracking in terms of Bank Nifty as well, but that is pretty much on the borderline as we speak so far. Let's quickly pull up the heat map in terms of various sectors and see what is it that is gaining and what's losing. FMCG, media, metals, good moves coming in on that front in that range of 0.4% to almost 0.7%. However, what is keeping the markets under check is consumer durables, which is trading under pressure. Oil and gas is down. Apart from that, if you see in terms of other sectors, you have the PSU Bank Index, which is taking a beating to the tune of almost 0.9%. Real estate trading under pressure, energy and auto, which are down and about in trade. Overall, if we can get the heat map with regards to individual stocks and the kind of contribution they are having to Nifty 50 as well, there you go. It's Reliance, L&T, Trent and a Titan. These are the ones which are contributing almost 60 points to the kind of cuts. But what's holding up is Infosys, ICICI Bank, HUL. These are the top three which are actually putting that positive pressure in terms of the markets. Let's look at the Nifty 50 heat map overall in terms of gainers and losers as well, because you have a Power Grid, HUL, Infosys, Bajaj Finserv. In fact, Bajaj Twins have been doing pretty well over the last couple of trading sessions. What is losing it is IndusInd Bank in terms of the management change. Trent is under pressure, ONGC, Titan, Eicher Motors and L&T. These are the names which have been dwindling. So clearly, no major moves, Puneet, coming in terms of where benchmarks are concerned. You have Bank Nifty, which is trading absolutely flat. Marginal up move coming in terms of Nifty 50, but it's more of stock-specific action that you're seeing currently. And the key is going to be as to what happens in terms of broader markets as well, because that's where the major rout is now.
Yeah, definitely. We've seen some pressure on the mid-cap and the small caps in general over the last couple of weeks. Today as well, in the mid-cap 150 down by about 0.5%. Let's also look at the small cap indices as well. That's also down by almost 1%. Let's just quickly put up the advance decline ratio, because that will tell us what has been the day like today. And while we had a couple of times where the advances were trying to catch up, but it's the declines that have taken forth, and that negative momentum has continued. Stocks like Reliance are also off their highs, and we've seen that negative trajectory come over the last hour or so. Let's quickly look at the Nifty 500 gainers and losers as well, because that will give us a key picture as well as to some of the key moves now. Adani Energy is up by about 4.4%. Solar industry is seeing some positive momentum as well, while JSW Energy is the other one. Avanti Feeds, has been one stock that's been doing very well in the markets, despite the steep correction that we've seen overall in mid caps and small caps. It has, got the positive pivot in the budget as well for its sector. But, on the other side, 361 WAM down by almost 7.4%, and trade Galaxy Surfactants another day of pressure for the company. And KA Industries, ever since the entry of Ultratech, the stock has been down. While some recovery was seen in the following week, I think it's not sustained. The other ones, Mahindra Life as well. But overall, Hiral, it has been a downtrend or so, which has been the continuation as a theme, and that's visible in the broader indices as well.
Absolutely. So I think, this is something which we need to wait and watch and see, because sustenance in terms of markets is going to be key from here on, because clearly sell on rise is the kind of strategy that analysts, traders and investors are adopting at the moment. But where from here on is our key aspect. But let's quickly look at the themes that we are focusing on. On number one, you have Gensol that is in focus. The struggles deepen on debt woes and rating downgrade. A KYC, Know Your Company special at 2 p.m. on NDTV Profit as well is what you would be watching out for.
Well, the second key theme will be the auto sector, which is in focus. Why is BofA, the brokerage firm, bearish on two-wheeler makers?
And you have pharma stocks that are in focus. Sun Pharma, Lupin, JB Chem, all of them in on the radar today.
Well, the fourth key theme is stocks like Neogen Chemicals after the company has cut its guidance after its Dahej plant fire, while Bodal Chemicals is in focus after India imposed anti-dumping duty on the products used for water treatments.
And big correction, big cuts. A look at stocks with the highest price cuts so far.
Well, IndusInd Bank falls after the CEO's shorter tenure extension of just 1 year versus 3 years that the bank had extended. Stock has been under pressure since the morning.
And orders will be a near-term trigger for Bharat Electricals, says Jeffries, maintains a buy on the company.
Well, Hira, you did talk about the orders, but another one which we'll be looking at is the domestic steel makers. The hike in prices indicating a strong uptick as well. Apart from that, orders for Bharat Electricals, says Jeffries, they're maintaining a buy on the company, and we'll take a deep dive on that as well. But first, for our theme one, let's focus on Gensol Engineering. This is one of the key stocks that has been focused even since last week on the back of sharp correction that the stock has seen. It's shed almost 40% in the last 5 days, and this comes on the back of an ongoing debt crisis that has put pressure on the promoters as well, who recently pledged their shares, putting further downward pressure on the stock as severely impacting investor confidence as well. To tell us more what has happened with Gensol, we have Somit and Mika joining in. What has been some of the key things, Somit, on this?
Well, for Gensol, if you look at what has happened over the weekend, the company's promoter did sell close to 9 lakh shares in the open market. That is close to 2.37% of the stake and worth at around 30 crore rupees. But this, whatever the promoter is generating by stake sale is something that the promoter will be using to infuse back into the company. That's what they are claiming in the press release that has come out on the exchanges. And post this stake sale, the promoter holding stands at close to 59.7%. But the key question here is how is the promoter going to infuse these funds back into the company? Now for that, back in 2024, June 18, 2024, the company had issued close to 61.84 lakh warrants to promoters and other investors. Now out of this 61.84 lakh warrants, around 15.3 lakh was subscribed by the promoters, while the remaining was done by the other investors. Now as per the warrant subscription terms, 25% of the amount was paid upfront, while the remaining 75% the company had aimed to get this amount by December 2025. However, they might choose to prepone this fund infusion, and that's how the company and the promoter would infuse funds into the company. So if you look at this table, back in June 2024, when they had announced it was 61.84 lakh warrants at a price of 871, which means that they were looking to do a fundraise of close to 539 crore rupees. Of this, 25% is already received, that is 135 crore rupees, while the remaining 404 crore is something that the company is looking to raise from investors. So out of this 404 crore, nearly 1/4, that is around 100 crore rupees, is something that the promoters will be infusing in the company, while the remaining 304 crore rupees is something that they are looking to raise from the other 107 investors. And this will be done at a price of around 871, which is nearly 2.7 times the current market price. And 871 is a predetermined price that was decided back in June 2024. Now the company will hold its board meet on March 13 to decide on the fundraise. So that is something important to watch out for. And the most important question here is this 400 crore rupees, will it be sufficient for the company? Now if you look at the current debt of the company, that stands at close to 1150 odd crore rupees, and this 400 crore is nearly 35% of the total debt. So if the company is successful enough to raise this 400 crore rupees, then it seems that it might be sufficient for the company for time being to repay its debt and to fund its capital expenditure, given that it's nearly 35% of the total debt as of 31st December 2024.
Well, but you know, when you talk about a bigger picture in terms of what started this, well, the stock is down 57% in the past month. This is 1,600 crore rupees of market cap wiped off. Why? Well, the initial trigger was a credit rating downgrade by both Carriage as well as ICRA ratings. All the long and short-term facilities were downgraded to a default rating because of concerns of debt obligations, with ICRA even making falsification claims in terms of what they were receiving by the company. Now, there are certain key concerns. While the company has reduced debt in FY25 so far over 200 crores, their total debt stands at 1,146 crores versus a 330 crore EBITDA in the last 12 months, and leverage stands at 3.5 times. Now the cash flow from operations is also low. It's in the range of negative 98 crores to a positive 115 crores in the past 3 years, and 86% of the shares held by promoters are currently pledged, and the company also is in a challenging and competitive EV market. There are some positive or key triggers. They have an order book of 7,000 crores. They do plan to sell 2,997 vehicles for a total of 315 crores, proceeds from which will be used for debt reduction. They're also going to sell a subsidiary for 350 crores, aiming to reduce debt by 655 crores as per the latest statement. They also have pre-booked 30,000 EV vehicles. Production is expected in FY26, and they've secured 2 battery energy storage projects from GUVNL, which is also expected to be executed in FY26.
Thank you, Somit and Mika, for getting us the details. In fact, also let's welcome in our guest Avinash Goraksakar. Avinash, good afternoon and welcome to the show. I'm not sure whether you cover a Gensol or not, but clearly from what Mika and Somit were telling us, how are you looking at the stock, and what would you advise investors to do?
Yeah, good afternoon, Hiral. See, my sense is that this company has been growing very rapidly, and I think the bigger challenge for them is that now funding working capital is going to be increasingly challenging task. In fact, the warrants which have been issued at 871 rupees, I doubt whether the existing investors would be willing to contribute to the warrants at the conversion price, considering the fact that the stock is now quoting around 300 odd levels. This money is important for the company because whatever order book they have, to implement these orders, they require a lot of working capital. They require infusion of funds urgently. And if this doesn't come, then I think we could see further challenges faced by the company. So my sense is that 13 March board meeting is important. How the investors respond to the warrant conversion is going to be critical, because in case the money doesn't come, I think a lot of other lenders are also clearly suspicious about the company. And I think despite the fact that the management has cleared that they sold some shares in the market to infuse funds in the company, the overall debt burden seems to be quite significant. So I think the markets would get a comfort only and until some investors put in the money. So till then, I don't suggest investors should actually think of buying the stock. It is in a competitive space. Both electric vehicles as well as the solar EPC business is all about a working capital kind of intensive business. So it's better to wait and watch and hope some positive surprise comes in the March 13 meeting. But till then, it's an avoid.
Got that view, Avinash, but let's also focus on a second theme, which is on the auto space. Now, Bank of America is bullish on some of the spaces in the auto pack, but it is heavily bearish on the two-wheeler space. Now, one of the key things is they've come out with a report on all 10 stocks which is under their coverage in terms of OEMs. And M&M, while it remains as key buy, and we can see on your screen, they've cut their target prices to about from 3,600 to about 3,300. And across these 10 names, 6 have seen target price cuts. Now, that has been one of the biggest things in this particular report. While they maintained a buy on M&M as well as Bajaj Auto, they've cut the target price for Bajaj Auto from 11,000 to 8,900. On Tata Motors and Hero MotoCorp, they've also again cut target prices from 4,600 for Hero MotoCorp to about from 850 for Tata Motors as well, seeing a neutral view. And they have an underperform rating on two stocks, specifically Hyundai as well as Escorts. There are three key stocks apart from something which they like, which is Maruti, Eicher Motors, Ashok Leyland as well as M&M. These are the four stocks they have a buy call on, and there are some very interesting trends that are coming into this particular report. Specifically, they mentioned that volumes for the two-wheeler makers have actually gotten negative in this particular month of February versus a double-digit growth that we saw in the first half of FY25. Apart from that, they're mentioning that this is because of financing norms which have now changed for the unsecured space as well as for the two-wheeler space, which is slightly riskier for banks in terms of loans. And they've also seen that the lead time for these loans have taken a larger time compared to the same time last year. They've also mentioned that portfolio at risk essentially has increased to 8% versus about 4.8% in the same time last year as well. The other key aspect is the elections. Now, earlier you had in the first half elections of Maharashtra, Haryana, Jharkhand as well as Rajasthan. There was some, subsidy tailwinds at that aspect, and that seemed to have gone away right now. They mentioned that they are lowering their forecast to 6 to 7% of growth versus 8 to 10% growth in FY26 for two-wheeler makers as a whole. And they mentioned that Maruti as well as could stand out based on the SUV launches, apart from the e-Vitara that they've launched, as well as a strong push in the export market. That's one of the key aspects on Maruti that they're bullish on. They mentioned that while Tata Motors has limited downside, the structural tailwinds for a weak business momentum continues as well. But Avinash, let me get you into this particular aspect. Any kind of auto names within the bunch of names I just spoke about that you like, specifically any segment within the passenger vehicles or the tractor space?
I think within the tractor space, I think we like frontline companies like Mahindra and Mahindra Puneet. Our sense is that Mahindra and Mahindra has outperformed the industry with stronger volume growth numbers, both on the UV as well as on the tractor market side. And quite frankly, the kind of initiative the company has taken on the electric vehicle market side, I think that is going to be the next trigger of growth. Although the market is quite competitive, we believe that the company has priced its products quite optimally. And considering the kind of order book the company enjoys, I would not be surprised that FY26 could be a year where the electric vehicle product bouquet could drive a lot of growth. The other stock which I think looks interesting is basically something like a Hero MotoCorp or Bajaj Auto. See, I think despite the fact that two-wheeler sales, as you mentioned, have turned negative, I think a large part of the demand is not yet come from the rural markets. Hopefully this year the monsoon is good. The rate cuts which have been announced by the government, by the RBI, and most importantly, the kind of exemption limit which the budget has given for the new taxpayers up to 12 lakh rupees. is all going to, obviously drive two-wheeler volumes over the next, say, 3 to 4 months. So I think, it's better to wait and watch after the March quarter. Hopefully, the April to June quarter would be a quarter which one would like to see how volumes pick up. But most of the two-wheeler companies are focusing both on the ICE as well as on the electric, the range kind of products. So I think we are positive on Hero MotoCorp, Bajaj Auto, and Mahindra. As far as Tata Motors is concerned, we believe the CV cycle has gone into a slightly softer cycle. Product prices have increased, but volumes are not very aggressive. And hopefully, this also could take a little bit of momentum push, only from the second half of FY26. So net, I think we continue to be cautiously optimistic on the auto sector, but Mahindra, even at the current levels, can be accommodated.
Right, so that's with regards to auto majors. One more stock from the auto pack, Avinash, we want to discuss is with the Hyundai. Now, clearly, if you see in terms of the stock, there is corporate governance and research and advisory firm SES. They've actually gone ahead and advised investors against voting in favor of Hyundai's resolutions for related party transactions. All of these are totaling up to little over 31,500 odd crores. Now, firstly, the company had filed the postal ballot notice on the 11th of February, and the final decision in terms of the ballot is going to be on the 13th of March, if I'm not mistaken. The related party entities include Mobis, Hyundai Motor, Hyundai Transys, Kia India, HEC India, Hyundai Motor Mexico, and PT Hyundai Motors. Now, SES is not in favor of all. There are a few they are in favor of, but if you talk about the other one, which is IIAS, they have given a thumbs up. So there is a divide in terms of the proxy advisory firm's, decision on this. But obviously, the shareholders' voting is expected. What's important over here is, Puneet, in terms of what do these entities or these transactions actually mean for a Hyundai as well, right?
Yeah. So essentially, there are two key entities here. The first one's Mobis, which has roughly about 12,525 crores, which the approval of Hyundai is looking for. And SES has only approved one entity out of the 7 entities, which is Hyundai Motor Company, which is the Korean counterpart. That amounts to roughly about 4,607 crores of related party transaction that Hyundai Motor India is trying to get an approval for going forward for business continuity as well. So SES has only given one approval out of the 7 entities, while IIAS has given approval for all 7. They say that it's business as usual. But the other aspect which they mentioned in their IPO was that the India entity sources roughly 37% of its parts and revenue from these related party entities. So this approval has to go through for business continuity, and that is one of the key figures. And this was roughly about 38% in FY24. So they have been trying to localize that aspect as well.
So if suppose this approval does not go through, any idea of what the impact will be?
It'll be huge because, even in this brokerage reports, Mobis as an entity has been one of the key aspects. The key reason being that it supplies after-sales services and parts to Hyundai Motor India entity. So going forward, in terms of service issues to not perk up going forward, I think the Mobis entity as well as that approval will be something to watch out for, because out of the 31,000 crores, Mobis alone has roughly about 12,500 crores in terms of size.
Right. So these are interesting points that Puneet is mentioning as well. Avinash, any view, what would you advise? Do you think, one, that this is just something which is in due course, you do see things like that with proxy advisory firms, and the investors would be probably voting in favor? What would you advise?
So I think, Hiral, these are entities which the promoter owns. So I think, as a corporate entity, I think what is the best solution is to ensure that, the listed shareholders get the benefit of such entities. So eventually, I think what the market would like is that, all these entities actually get consolidated in the Indian entity so that the entire value creation is available for Indian shareholders. And secondly, if the resolution doesn't go through, then it's going to create a little bit of hassle for the listed entity. Because as Mobis is a large entity which caters to the after sales and the component side of the business for Hyundai Motors India. But I think the bigger issue is, this company made a OFS. They did not raise fresh capital. And after that, if you observe, the performance has been extremely poor. In fact, not only the volumes have been poor, the financial numbers have also been poor. So the market has been thoroughly disappointed. So I think, these are additional, negatives for the stock in the near term. I think we'll have to wait and watch how the March 13 meeting materializes. Even if the management gets the approval for the related party transaction, it's unlikely to get re-rated in a hurry. I think the markets are looking at stronger volume growth numbers, from their product launches, specifically, the new electric Creta which has been launched has created a lot of hype. But I think how it gets reflected in numbers is something which the market would like to see in actual numbers. So I think it's better to wait and watch as of now.
Wait and watch on this one, but with Tesla also coming in, Avidash, now, how are you looking at it? Who will it give competition to, according to you? Because you have to look at the price points, right? So what would you have to say?
No, I think Tesla coming in the market is definitely good news for the Indian customer here. I think, a lot of people are expecting and waiting for the Tesla vehicle. So I think it's going to be a little more tough time for Indian automotive makers, especially in the electric vehicle market. Because today consumers have got a lot of choices, and I think players like Hyundai, Maruti, Mahindra are definitely going to feel the heat. Although on the face of it, these companies have said that it could take a couple of years for Tesla to stabilize. But I think the attraction and the excitement for Tesla in the Indian markets is very strong. So I think, we could see a lot of good days for the customer. And I think obviously more competitive times for all these auto companies.
Right. So that's with regards to where Hyundai Motors go. The stock is down. And if you talk about Tesla as well, that's going to be an interesting one for consumers. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
Welcome back to Profit Buzzers. The third key theme that we are focusing on is Pharma. After Sun Pharma acquires Nasdaq-listed Checkpoint Therapeutics, Varsha joins us with some more details on Varsha.
Thank you for that. So yes, Sun Pharma is going to acquire Checkpoint Therapeutics. Now the upfront payment is around $4.1 per share. The total payment will go around $355 million. There's also potential to add 0.7 per share dollar extra on the EU approval milestone on the product called Cosibelimab, which treats basically skin cancer. Now this deal is expected to close in quarter 2 of calendar year 2025. 4.1 $4.1 per share. The price is actually 66% premium to Checkpoint's last closing price, which is listed on Nasdaq. Now, Checkpoint develops cancer treatments. Sun Pharma aims to expand access to one of the products which actually treats skin cancer, and this product is FDA approved. And also, if you see, the transaction adds newer product. So how Sun Pharma will be benefited for this? So the transaction adds newer product to Sun Pharma's specialty offering. As we know that Sun Pharma, the next leg of growth for Sun Pharma is the specialty portfolio that company is being focusing on. Sun Pharma has focused approach to market specialty products when it comes to dermatology, ophthalmology and onco-dermatology, and the Checkpoint's product, that is Unloxic, adds special product in the oncology or dermatology space. And the Checkpoint therapy, if I were to talk about the financials, the 9-month period ending September 2024, the revenue for the company was around $0.04 million, while they incurred loss of around $27.5 million as a net loss in September 2024.
Well, thanks for that, Varsha. But Avinash, any view that you have specifically on Sun Pharma? The new specialty portfolio has been gaining momentum, especially in the US as well. Any kind of outlook on the same?
I think Puneet, outlook remains positive. I think this acquisition also is going to be a good earnings accretive kind of deal. But I think the impact of this acquisition is going to be felt only after a couple of quarters. Once the entire operations get stabilized, more importantly, the markets would get a hint of what kind of revenue and profit impact this would get in. But the segments in which this acquisition has been made is quite complementary to Sun Pharma's specialty product basket. So I think net it's going to be earnings accretive, and I think markets could get a hint of the earnings potential, the kind of earnings traction possibly from the second half of FY26 onwards. So I think net it's a good deal, but I don't think it's going to create a very strong impact in the short term. We could expect a stronger term kind of long-term earnings impact from this acquisition.
So Avinash, that's with Sun Pharma. Very quickly, your view on Lupin, because they have launched Rivaroxaban tablets, and US sales of Xarelto were almost $446 million. And if you talk about JB Chemicals, the US FDA has gone ahead and inspected one of their facility in Gujarat, and there have been no observations and no 483 that has been issued. Any call on both these stocks?
So in fact, Hiral, on both these stocks, we have a long-term hold. We like both the companies because they operate in niche markets, and specifically as far as Lupin is concerned, it's done remarkably well on the financial front. The US continues to be a big market, and we believe that despite the tariff, headwind, we believe that companies which operate in the US and which have got all regulatory norms in place are unlikely to face any key, market challenges. So I think, from a longer term perspective, these can definitely be kept on your portfolio. Any decline in the market should be used as an opportunity to accumulate further in both these stocks.
Moving on, the chemical space has been in focus as well. You have a Bodal Chemicals as well as a Neogen Chemicals. It's interesting news because there's a guidance cut coming on one end and a positive on a Bodal Chemicals. Let me also get Varsha again to get us more. Varsha, over to you. Both these counters, inverse reactions.
Yes, absolutely. So let me start with Neogen Chemicals, which is, the stock is under pressure. The stock is down almost 6%. Now, why? Because they've cut FY25 and 26 revenue guidance. Now, this is after their Dahej plant fire that was on 5th of March 2025. Now, FY25 revenue guidance have been revised to 765 to 8 crores versus earlier guidance of around 800 to 825 crores, while FY26 have been revised to almost 775 to 850 crores versus earlier guidance of 952,000 crores. So this is basically the main reason, the revision of guidance towards downward side, which has led to the pressure in the stock. The facility, the Dahej facility was established in Feb 2020 for inorganic chemicals. Warehouse and tank farms have extensively damaged and no casualties or injuries have occurred. The reconstruction is expected to take 9 to 12 months, and the company will shift production of critical specialty portfolio products to the other sites. Then on the list is Bodal Chemicals. While this is buzzing on the back of India imposes anti-dumping duty on TCCA imports from China and Japan. Now this product is used in water treatment and also food processing, and Bodal Chemicals is India's sole TCCA producer. Now this is expected to add 50 to 60 crores of revenue annually to the company, and the duty is effective for 5 years from March 7 of 2025.
Got that view, Varsha. Thanks for that. Avinash, not sure if you track Bodal Chemicals, but any view on either of the stocks, on Neogen as well as Bodal Chemicals?
No, I think as far as Bodal Chemicals is concerned, as Varsha mentioned, it's the only player which makes TCCA, which is a very specialized chemical input used in water processing, swimming pools, as well as, a lot of water applications. So I think, the ban which has come is now going to drive, local consumption from Bodal in a significant way. Of course, the stock has moved up by 16-17%, but my suggestion is that, if the stock corrects maybe after a couple of days, that would be a good time, because the stock still looks to be pretty attractive from a medium to long-term view. I think the overall capacity utilization also will go up, and I think possibly FY26 should be a lot better year as far as TCCA is concerned. On Neogen, I think one will have to be a little watchful here. My sense is that the stock trades at fairly expensive valuations, and I think unless the cycle turns significantly better, I'm not looking forward for a significant earnings upgrade, at least for FY26. So I think this stock can be avoided, but Bodal Chemicals maybe on declines, one could definitely nimble into it and accumulate it from a longer term perspective.
Right, so that's with regards to where Neogen Chemical goes. But moving on, another stock that is in focus today is the IndusInd Bank. What's interesting is the valuations of the BFSI space have come down significantly, and that probably is giving some comfort to investors as well, and the gauge for the overall market. But what's interesting with IndusInd Bank is that the Reserve Bank of India has now allowed a 1-year extension to the MD and CEO, that's Sumant Katapalya, after the bank sought tenure extension by 3 more years. So instead of 3, only a 1-year extension has been given. Harsh joins us to tell us more in terms of what brokerages are making out of this. Harsh, over to you, because the stock is down nearly 3.5% today. On Friday as well, it ended lower.
Just 16 days left for the tenure to expire, and likely RBI's stance is cautious with regard to the way in which they've given the extension, but it's also keeping in mind that there's just 15 days left now. So very little that they can even do in terms of a replacement. But a 1-year tenure clearly is setting the context, or setting up shape very well for an early exit for Mr. Sumant Katapalya as MD CEO. Mind you, he's been MD CEO as of date only for 5 years, and the typical tenure of the MD CEO in the banking space is capped at 15 years, and therefore this kind of truncated tenure will definitely put most investors as well as analysts have put analysts in the cautious basket. Now, in terms of what analysts are suggesting, I'll start off with Macquarie. They're calling the extension a disappointment, the shorter extension. They say that it was shorter than even they had anticipated. It creates uncertainty with regard to the bank, and it also leaves the door open for an early exit for the CEO MD. It also could mean that a PSU CEO could come in, which could lead to a sharp de-rating in the stock, even though that's a low probability item. They've given it a 1210 rupee target price, and they've maintained their outperform rating. Mind you, most of these brokerages are maintaining the outperform because we've seen a 35% correction in the stock in the last 6 months, a 12% correction last week. The other one, Citi, what they're saying is that it clearly signals discomfort from the RBI. They're saying that all other banks have received extensions while IndusInd hasn't, and therefore just doesn't merit a good enough reason why the CEO extension hasn't happened, other than the fact that the RBI is cautious. Third is Goldman Sachs. They've maintained their neutral stance, target price 964. This is one where target price is below 1,000, one of the very, very few. And they believe that the management transition will be top of investor mind. Bernstein, giving it a target price of 1,300, 1.3 times price to book is what Bernstein is valuing this at, FY26 expected price to book, and therefore believe that also that this is in general trading at a very deep discount to other players or peers, and that could be one of the reasons why a lot of brokerages have maintained the target prices and ratings.
Target price and ratings maintained on an IndusInd Bank. Let me also welcome in Amit Bhuptani. Amit, good afternoon and welcome to the show. What are charts indicating with regards to IndusInd Bank? Because 2 days of weakness is what we've seen. Are you seeing further selling pressure?
If you look at the overall setup, counter has broken down its important and major supportive levels on the weekly and the monthly chart. Now, while going ahead, I am expecting more selling can be witnessed on the downside towards 870 to 850 is a supportive range next for this counter. Currently, once the counter goes above 940 level, then only we might witness some stability. Till that point of time, more selling can be seen while going ahead.
Got the view, Amit. Another stock that is in focus today is Bharat Electronics. Now, the company has announced a 580 crore order flow and needs another 11,300 crores in March as well as April of 2025 to meet its FY25 estimated guidance. Let's get in my colleague Anushi now to know more as well as what brokerages are making of achieving the company's FY25 guidance. Anushi.
Bharat Electronics is one stock which is in focus after a couple of order wins and especially after the guidance it has given for FY25. Now, what's the clear picture here? So, the company had just recently announced a 580 crore of an order inflow. Jefferies on that had put out a note wherein they remain optimistic on this stock with a maintained buy rating and a target price of 325. So, the company has a guidance of 25,000 crore of order inflow for the current year, of which it has secured about 11,300 crore. So, the expectation is that in the next month or so that the company should be able to meet its guidance so far. Now, even if you look at what had happened in 2023, BL had announced 83% of its order inflow in March 23 and then met the annual guidance. So, management is optimistic on FY25 guidance despite achieving only 38% or rather 39% in the 9-month FY25. Even global news on the rising defense spend may be a near-term trigger for Bharat Electronics going forward. Even if you look at where the government defense spend where they rose about 87% YOY in Jan 25. Quickly, there was another defense note as well on Bharat Electronics, which was JP Morgan, wherein they have also maintained an overweight rating with a target price of 343. They've said that the 20% correction from peak presents a good entry for the stock and sees a revenue to PAT CAGR of 15 to 16% over FY24 to 27%. And also alongside that, they see a high possibility of BL announcing 12,000 crore worth of orders by 31st of March itself. If you look at the order book position of Bharat Electronics, order book stood at 71,100 crore, while order inflow stood at 11,000 crores. So it's a big task. It's a big target that we are seeing 25,000 crore in terms of that, in terms of order inflows that are expected over this month itself. In terms of FY26 picture, it expects a SAM order of 25,000 to 30,000 crore in FY26, which is quick reaction surface to air missile. Alongside that, in the next generation corvettes, they see orders worth about 14,000 to 15,000 crore. So it's all on the order expectations for the current month that we are building for Bharat Electronics and why brokerages are bullish on the stock now.
Well, thanks for that, Anushi. Avinash, let me come across to you first on the defense pack as a whole. We've seen BEL also seen some correction in stock price, while HAL was also down from its highs of about 5,000 rupees, currently trading at around 3,500. What do you make of these two names specifically?
No, I think clearly, the defense stock trajectory is going to continue. I think the government is very clear that they want to ensure that more indigenization of weapons is made in India. And I think as far as BEL is concerned, the track record has always suggested that March has always been a bumper quarter for fresh order inflows. So I think we'll have to wait and watch, Puneet. But I think clearly the markets are quite optimistic considering the fact that these are both companies, which will enjoy government patronage and which will obviously be having a large share of the domestic as well as the export market for defense products. So I think, one needs to take a slightly longer term view. In case of both the defense companies we mentioned, I would say that, we have to see yearly performances and not quarter-on-quarter numbers, because quarter-on-quarter performances can sometimes be lumpy. Execution can play a key role. So I would say that we are more positive on Bharat Electronics, considering the fact that it's come down to pretty attractive levels. And somebody who's looking at the next 12 to 18 months can definitely chip in and, add to their portfolio. So I think we are constructive on BL, but from a longer term perspective.
Right, so that's with regards to BEL. Amit, how are you looking at a BEL? Because yes, there is a lot of investor interest, but do the charts warrant a buy call now?
Definitely, setup is positive. The stock has created a base on the downside near 240 levels, but on the upside, double top has been created near 284 level to 290 range. So currently, 290 will act as an important resistance zone while going ahead. At 290 level, we are also seeing that the 200 DM resistance is also getting faced. So currently, this stock is likely to get consolidated between the range of 275 to 290 while going ahead. Once the stock gives clearance about 290 level, then we will witness a fresh buying opportunity in this counter towards the 315 to 320 levels.
With regards to where BEL goes, but moving on, you have steel companies that are in focus as well. Now, you're talking about anti-dumping duty, you're talking about the impact with regards to China, and now you already have Indian steel mills which have gone ahead and increased steel prices. Mika joins us to tell us more. Mika, firstly, a hike in terms of steel prices. Secondly, how does this actually impact businesses, and is this a positive or a negative? Over to you.
So we have Indian steelmakers who've hiked the domestic prices by 2,000 rupees per ton. So now domestic hot roll coil prices are around 50,000 rupees per ton. And the latest price hike marks the second one in around a month, like you said. The last price hike was around 1,000 rupees per ton, which was done at the start of February 2025. And this is all as per dealer checks. In terms of steel stocks last week, well, they were buzzing. You have Tata Steel that saw almost an 11% gain last week. And stocks like Steel Authority of India, Jindal Steel and Power and JSW Steel, all of these three counters rose 5% in trade last week. Now, in terms of the importance of a price hike, well, a price hike, one, it indicates a strong uptick in demand, but it's also positive for the realizations for a company which has a positive impact on their top line. And all listed players make flat steel products, which is what the hot roll coil prices are pertaining to. And flat products usually contribute 50 to 70% for Indian steel mills. If you look at Tata Steel, their flat steel volumes in FY24 stood at 16.6 million metric tons, which is 83% of their total volumes. For JSW Steel, it stood around 75% of their total volumes. For Steel Authority of India, it was 8.3 MMT, which is 45% of their total volumes. And for Jindal Steel and Power, it stood at 3 MMT, which was 39% of their total FY24 volumes.
Thanks, Mika, for getting us the details. Avinash, how are you looking at it? Tata Steel, SAIL, JSPL, JSW Steel, last 1 week also has been pretty strong ahead of the price hikes. From here on, again, the anticipation is that if they've taken a price hike, probably there is a good demand in the market as well. What would you advise investors to do?
So I think clearly, companies like Tata Steel or for that reason JSW, I think the market is definitely looking forward because these price hikes have come after a long time, and I think hopefully global prices also improve. Then I think that would be a big trigger. But I think the clear, focus and the immediate watch out factor for the markets for metal companies would be the tariffs. I think clearly in what way, is the tariff issue going to be resolved? I think probably after the first quarter of this financial year, that is FY26, things could get better, more clearer. But I think on the domestic side, companies like Tata Steel or for that reason JSW, I mean, clearly there is a volume kind of pickup. The government has been putting a lot of money on infrastructure projects. So I think it all requires, global metal prices to go up. And I think to that extent, how China's buying happens in the global metal market is also very crucial. So I think we have a constructive view on Tata Steel as well as JSW, but we believe that maybe another couple of quarters you could, take some time before all this, these positives get reflected in the numbers. So till then, it's a hold. I would not be surprised that these stocks would not be, running up in a hurry. They would take some time before the market discounts, the impact on their earnings.
So that's with regards to steel players. Amit, very quickly, any top picks from the steel names?
JSW Steel and Jindal Steel, these both counter looks positive. If you look at the JSW Steel consolidation breakout has been witnessed in this counter, and once if it goes gives closing above 1040 level, then almost around 200 points more momentum we can witness in JSW Steel.
JSW Steel, a strong one coming on Amit's picks as well. But let's actually look at one important aspect of companies which have seen a big price target cut from brokerages. Now, in the midst of an ongoing correction in the stock market, many stocks have seen their target price being cut by brokerages. Now, what are the stocks that have taken the biggest hit? Puneet has prepared a list and he's joining us at the wall with more details. Puneet, over to you.
Well, thanks for that. So definitely over the last 3 months, we've seen a sharp corrections over mid cap and small caps, and we've covered that in detail. From September onwards, these stocks have been impacted. But which ones have actually seen brokerage actions? We're getting you a list now. Now, 2/3 of the stock have seen correction in the target prices. When you look at both mid caps as well as small caps as well, we've also included the other ones which have at least analyst coverage from at least 10 brokerage houses. We get you the top 5 stocks which have seen the biggest cut in terms of target prices, but also the ones which have actually seen a target price increase as well. So let's look at the ones which have seen biggest cuts now. The first one's, of course, Prince Pipes. Now, the company has been, engaged, of course, in the piping business and has been impacted due to high PVC prices. That's, taken the gross margin as well as EBITDA margin downwards. It's seen a 34% correction in terms of price, which is the first column. Whirlpool has seen promoter holdings being one of the key challenges from its global parent as well, while Honasa Consumer's business momentum has been hampered ever since the first quarter itself, and that's continued going into Q3 as well, despite being a very strong quarter. That's been the YTD correction in terms of target prices by brokerages. Here we see which is the best target prices in terms of what the topmost brokerage has, and that's roughly about 390 rupees for something like a Prince Pipes. When you look at something like an upside as well, that's almost 40% in terms of the best target price, despite seeing a YTD correction in overall target prices by analysts according to Bloomberg. Now we see another one interesting list has been, Natco Pharma, which has seen roughly about 25% upside, despite seeing an overall correction of about 23% in the YTD target prices. But let's also look at the 5 other stocks that brokerages have actually been bullish on. And we see Laurus Labs, Paytm, SRF being one of the few names. Now, Laurus has the highest hike in its target prices by brokerage by almost 31%. While Paytm, while after the correction, brokerages have mentioned that the upside potential is huge post its new business model as well. For SRF as well, it's more of a valuation play with the conditions not being very suited for the chemical names. But essentially for SRF, the business prospects as well as being the best in terms of the chemical sector seems one of the biggest positives. And Muthoot Finance again being one of the gold finances as well. After the correction which we've seen in the MFI space, gold financing stocks had done well, and same for UPL as well. Sort of big correction in UPL as well. When you look at the return potential though, it's not a very pretty picture, and that's because some of those fundamentals have been baked into the target price as well. So overall, if you see 5 names which saw the biggest cut in target prices do offer some kind of return potential, while these 5 which showed some kind of increase in target prices, well, the return ratios and the return portfolio going forward as well might not be that much.
Right, thanks, Puneet, for getting us the details. Amit, very quickly, between Laurus Labs, Paytm, SRF, Muthoot Finance, as well as UPL, these are the stocks with the highest target price increase. Any preferences that you have where charts are strong?
My recommendation, SRF looks positive. Strong consolidation has been going on in this counter, which we are seeing that in the weekly chart, flag pattern formation is also being created. So currently, if any dips comes in this counter, we can create new long position for the target upside near 3,500 to 3,700 levels.
Sure. Any kind of stocks which have seen, the highest correction in terms of target prices, the likes of Prince Pipes, Whirlpool has seen a lot of promoter holdings going down as well. Any one of these names that's something that you like? Avinash?
Yeah, I think my sense is that, companies like United Phosphorus, or for that reason, something like a Whirlpool, I think there have been a lot of pessimistic kind of concerns from the market that Whirlpool might exit the company, or typically, the MNC company collaborator does not have any management interest in the company going forward. But I think, the fundamentals of the company remain to be quite solid. It's a debt-free business, has a very strong marquee kind of brand name in the, white goods market. So I think clearly somebody who's got a couple of years mind, investment perspective can definitely think of dabbling in this counter. I would not be surprised that the company would definitely bounce back. But yes, I think until and unless things get clearer, I think maybe the stock may remain in a sideways zone. In case of United Phosphorus, Puneet, the market, yes, last year for agrochemicals was extremely bad, but things are now gradually improving. The company is a very large player in the US. especially the Latin American markets. And I think hopefully this year, I think if the agrochemical market improves, then I think the stock has got all the potential to bounce back. So I think, these could be fairly contra bets in the near term. But in the longer term, I think these have got very solid business models which could add value. But I think it's only a matter of time. And I think investors who only have a long-term kind of time frame, at least a couple of years, can definitely think of investing here.
Well, on that note, Avinash and Amit, both thank you so much for joining us and giving us your stock views as well as outlook on the sectors that we spoke about. We look forward to our next conversation, but thanks so much for joining us today. And with that, viewers, that's all the time we have on this edition of Profit Buzzers. Stay tuned to NDTV Profit for more.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breading also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Soumit Sarkar, and my co-anchor Mihika. Well, Mihika, the market seems to be gaining. It's the fourth consecutive day of gains, but if you look at the broader market, both mid-cap and small-cap are trading down into it.
Yeah, that's right. Let me start with the benchmark, the Nifty 50. It is, in the green. It's seeing gains of 0.2%. If you look at the advances, you have 27 advances on the Nifty 50 versus 23 declines. Some of the counters that are doing well, it's a power grid. It's the top counter of the day. It's up 3%, followed by an HUL as well as a Nestle. All of these counters seeing gains of 1 to 3% in trade. Something that's not doing so well, it is an IndusInd Bank, after the bank only got a 1-year extension for the CEO tenure, and even you have something like an ONGC. This comes after oil prices have been slipping into bearish trajectory over the past week or so. We also have some weakness in trend, down about 2% in trade. But while the benchmark does well, you have the broader markets that are seeing pain. This comes after you saw majority of last week the mid cap and the small cap gaining. You have the Nifty mid-cap 150 down about 0.6% in trade, and then Nifty small-cap 250 seeing cuts of over 1%. Let me just pull up some Nifty small-cap counters. You have 194 declines, stocks declining versus only 49 advancing on the Nifty small-cap 250. Something that's heavily under pressure is a JM Financials as well as a 361 and an Upper Industries. All of these counters down over 6% in trade right now, followed by a Mahindra Life, Triveni Turbine, as well as a TVS Supply Chain, seeing cuts of 4 to 5%. If you look at some of the counters that are gaining, you have an Avas Financiers up almost 6.6% right now. You also have a DOMS Industries and Sanofi, Avanti Feeds, all of these counters gaining 3 to 4% in trade. Lastly, if you just look at the sectoral picture, and if you could have the sectoral indices, something that's doing well is a Nifty FMCG, followed by a Nifty Finance, as well as a Nifty Metal. Something that's not doing so well right now is a Nifty Oil and Gas, a Nifty Realty. Nifty Realty seeing heavy pain, down about 22% year to date, followed by the Nifty Energy and Auto Space. So, Soumit, that's how markets are faring right now.
Well, thank you, Mika, for that market check. Well, let's also get in Gaurang Shah, the head of investment strategist with Geojit Financial Services. Gaurang, how are you looking at market at this juncture? Do you see that the worst has been priced in now?
Well, thank you so much for having me on the show. Good afternoon to all of you all. So, I think it will be a little bit too early. Last week, we saw the markets turn around from Wednesday. Thursday, the rally continued. Friday was flattish. Today, again, we are trying to keep our head above the water. Whether to say that we have made the bottom at somewhere close to about 22,000 on the Nifty spot, little bit too early for me to say that. I think there will be a little bit of more choppiness and volatility. Clarity will emerge post our senses in somewhere around April, post 2nd. That's when the date US President Trump has mentioned about the tariff and the implementation of that. Reciprocal tariffs will be implemented, etc. So possibly we may see a little bit of selling coming into the market, but to say that we have made a bottom, I think it'll take a while before we decisively start moving further up.
Got it. Let's move on and put focus on the first stock that we're going to talk about today. Kotak Institutional Equities has released a note on trend, signaling potential downside risk and even retaining a reduced rating on the counter. Anushi joining us with the same details. Anushi, the stock under pressure, down about almost 3%. What does Kotak have to say?
Right, so Kotak has maintained its negative stance on this. They have the reduced rating here, but they have revised the target price quite significantly. The target price now stands at about 5,150 as compared to 5,550 earlier, which implies about a 6.1% of an upside from current levels. Now, a couple of factors that they have highlighted in their note. Firstly, the stock volatility that we saw in the prior week because of the exaggerated store count for West Side was something that led to the kind of volatility in the stock price. Along with that, the expected net addition, now that stands at about 11 for FY25. That's expected at 11, which is much lower than the FY22 to 24 picture, where we've seen about a 26, 14 and an 18 additions overall for these 3 fiscal years. Along with that, what could put the stocks throughput in pressure is something like their on trends revenue throughput is on the newly located stores, which could add to the pressure as well, and this is on the newly located stores of Westside and Zudio both. So they're assuming a flat revenue throughput for Zudio, while for Westside they've now trimmed their revenue. They've trimmed their revenue throughput for the same. So this revenue cut would impact the margins as well, and for this reason they have kind of given an EPS cut in the range of 1 to 5%. So despite having an overall positive view on the company in the overall retail space, they believe that the positives have been now baked in. So these are the factors that one should be watching out for, and hence we are looking at overall a reduced rating along with the cut in the target price.
Gaurav, thank you, Anushi, for giving us all those details. Gaurang, I'll come to you. Your view on Trent, do you see some, concerns or red flags in terms of the business?
Because my sense is, of course, we don't have specific coverage on Trent, so I won't give a buy, sell, and hold, but we like the sector that is the retail. And over there, we have coverage on Shoppers Stop. That's the disclosure from our side. Trent had been a flyer of a stock over the last maybe about a year and a half, if you actually go to see. There were news flows, tailwind positive, and now the stock is gone in a reverse mode. Possibly from a short to medium term, there could be pressure, but the outlook for the sector remains extremely positive.
Gaurang, thank you so much for that. But another stock that is in focus today is BEL. The company's announced 580 crore order flow and needs another 11,300 crores in the March to April 2025 period to meet its FY25 estimated guidance. Let's get in Anushi to know more on what the brokerages are saying.
Okay, so the order picture for the company is quite interesting, especially for the fourth quarter, considering that so far we've seen in the third quarter end that they've clocked in orders worth about 11,000 crores. So the expectation is almost of a 13,000 crore of a order inflows for just one quarter. That is what we are seeing for the company to achieve their 25,000 crore of order inflow guidance for the year. However, the management remains quite confident despite achieving just 39% of the stated guidance that we've seen so far. So now that they have come out with a 580 crore of an order win, what the brokerages have cited out. Firstly, we have Jefferies that have cited the 2023 year as an example, in which BEL announced about 83% of its order flow in March itself and met the annual guidance. So they expect that March should be a significant month for the company in terms of new orders flowing in for the business. Along with that, global news on, rising defense spend may also be a new near-term trigger for the company's stock performance, and also government defense spend has already seen about 87% of a growth in terms of growth in January 2025. So this is what Jefferies had to say. JP Morgan also maintains their optimistic stance on the company. They've maintained an overweight rating with a target price of 343. They say that the structural growth overall remains strong with strong order announcements ahead. Now, what they have pointed out is that they see a revenue to PAT CAGR growth of about 15% to 16% over the FY24 to 27 period, and see high possibility of BEL announcing about 12,000 crore worth of orders by 31st March itself. So it's kind of similar to what Jefferies was also stating in their note about March being a crucial point for the business in terms of order inflows. If we just want to get a sense on the order book of the company, that stood at about 71,100 crore by December itself, and order inflows stood at about 11,000 crore as earlier mentioned. Even for FY26, there are some big ticket orders in consideration, which includes the quick reaction surface to air missile order worth about 25,000 to 30,000 crore in FY26. Along with that, there's some next generation corvette orders also that the company expects, which are going to be in the range of 14 to 15,000 crore, which should be in focus. So this is the overall picture that we are building for Bharat Electronics, March being a crucial point for the business in terms of the company meeting their FY25 annual guidance of 25,000 crore.
Gaurav and Anushi, thank you for giving us details. Gaurang, I'll come to you. What's your outlook on something like a BEL?
The entire space looks very attractive, the defense, Mika, and on BEL, to give a disclosure, we have a recommendation and our targets are somewhere close to about 335. My sense is that this sector is going to be in the spotlight for many, many years, given the kind of government spending and the order book the sector has. And BEL, my sense is that for the next couple of years, the order book is only going to grow going forward.
Gaurang, thank you for giving us that outlook. But let's put the focus on something like a Gensol Engineering. Now, this is one stock that was in focus even last week on the back of a sharp correction. The stock has shed almost 40% in the last 5 days, down about 56% in the past month. And this comes on the back of an ongoing debt crisis that has put pressure on the promoters, who have recently also pledged their shares, putting further downward pressure on the stock and severely impacting investor confidence. To tell us more with what has happened with Gensol, we have Sujit and Vishwanath joining in.
That's right, Mika. To begin with, just a brief background of Gensol Engineering. It's a renewable EPC player, and it also has EV leasing business as a business segment. The company came out with an IPO to the BSE SME segment in 2019, and then subsequently in 2023, it was migrated to the main board of the National Stock Exchange, and then it became a multi-bagger from there on. It went to a high of over 1124 rupees in June of last year, and from there it has fallen nearly 72% from the 52-week high as we speak. If you look at some of the claims that has been made by Gensol, it had guided for a revenue of 2,000 crores in FY25. For the 9-month period of FY25, the total revenue stood at a little over 1,056 crores. So it's missing the revenue guidance which it has been giving to the investors in the last 2 years. This is the second consecutive year of miss for Gensol, because in FY24 it had guided for 1,200 crores of revenue, and it came out with a revenue of nearly 900 odd crores there. So and the second thing which has come into light is the kind of order book. It's been claiming that it has an order book of 7,000 odd crores. This 7,000 crore order book, 3,000 of which has come in the last one quarter, which is Q3 of FY25 and January of 2025 there. So last one quarter it got 3,000 odd crores, but most of them being a turnkey projects, it's not been able to convert many of them. It claims that the reason for not being able to convert is the clients or the developers have not been able to pass on or hand over the land so that they can start the EPC work, and they expect this entire project to be completed, or EPC orders to be completed in the next 18 to 24 months there. There are other misleading claims which is coming in from there. The promoters of Gensol in the earnings call have stated that they have sufficient liquidity to support operations, but what we have seen is that rating agency ICRA and CARE Rating have come out with a downgrade to default, which is D in the rating for all the bank facilities which is there. And in fact, ICRA went ahead and said that the Gensol has falsified documents to show that it was servicing debt. It has got a communication from the lender saying that the debt servicing is not normal, and there has been default in that, and subsequent to that, the two rating agencies have downgraded the stock to default there. And that happened on March 14 when the entire ratings for 2,550 crores of bank facilities, which is long-term facilities and short-term facilities, was put on default. Just to give a perspective there, in the limited review balance sheet of September 24, which is for the 6 months period of April to September, Gensol on a consolidated basis showed a cash and cash balance of 256 crores. A large part of that was lying in fixed deposits in the bank for a period of 3 months, and a large part from 3 to 12 months. What happened to that cash, no one knows, and the company has not been able to give us a detail of it. And Vishy is joining me to give the further details on the company.
Right, Sajid. So as you said about the cash that was lying in the accounts, as I was looking through the analyst call that happened in February, where the management actually said that nearly half of that 256 crore is available as free cash. So an important question to ask, where exactly the cash has gone. Now, of course, there's a flood of other claims that have coming in from Gensol. The company in its Q3 investor call had claimed that they received 140 crore from the warrants issue, which happened last year, and about 400 crore is likely to come in by December 2025. Now, these are obviously would have been funds that could have been used by the company for working capital and settling other debt. So that we are not entirely sure where that money has gone and whether that 400 400 crore is actually going to come towards the end of this calendar year. The other flood of claims include a deal that Gensol has been doing with Reflex, where they've claimed that 2,997 EVs will be sold to Reflex for about 315 odd crore, and that essentially this money will help in settling debt that they have taken against these electric vehicles, which would have been paid to Power Finance Corporation. So we're not entirely sure whether that deal is actually going to take place or when the money is going to flow in. At this stage, all the company is saying is that the deal is in the works. Another important transaction like that is that of Scorpius, which is a US-based step-down subsidiary of Gensol Engineering, where about 350 crore worth of funds were supposed to come in. That was on the basis of a sale of the step-down subsidiary. Again, not entirely sure who the buyer is or when this transaction is going to take place. The company is claiming that by March 2026, they should be able to close this transaction. But considering the way governance questions are being raised, we still need to see whether any investor outside is actually going to put that money into Gensol. Some of the other important numbers that we're able to see, Sajid mentioned that the promoters have been actively pledging their shares in the market. But interesting to note that back in September and October 2024, the promoters, Anmol Singh Jaggi, had bought about 12,000 shares and 26,500 shares from the open market instead of converting the warrants that they already held. So what they're talking about right now is a 2.37% worth of stake sale that they concluded last week. Those funds will be used to add, infuse money back into the company through warrant subscription. We're not entirely sure how that is going to actually take place. The promoters have so far sold about 11.5 lakh shares to raise the liquidity, and they say they are claiming at this point in time that the funds from the warrant, from the stake sale, will help in issuance or subscription of the warrant. Private credit funds is significantly tough right now, because remember that stake sale is only bringing them 30 crores. They need to bring in another 100 odd crore to actually subscribe to the warrant. So if they were to go through the private credit route, that is going to be very difficult. Nearly 82% of the stake is pledged at this point in time. So on what basis will private credit funds actually provide that money? We're not entirely sure. On top of that, you've seen the share price going down, which will prohibit the ability of the promoters to provide more security if the lenders demand so. So this is the situation where Gensol is at this point in time. But there are a few key questions that we are raising, considering the way things have panned out. The first of which is, where exactly did this 250 crore of free cash that they talked about, where did that cash exactly go? The second important question is, why did the promoters not convert the warrants earlier? Why are they talking about it now, considering that they did that open market purchase of shares in September and October of 2024. Another question is, what exactly prompted, if you see the next question, what exactly prompted the company to not actually take action on the allegations by ICRA? The allegations were of falsifying documents. So why exactly has the company not yet appointed a committee, which was something that they said that they would do, and why names have not yet been announced? Very important question again, if you think that that's such an important allegation to address. How the hell are they actually going to fund that 7,000 crore worth of order execution, right? How is that money coming in? Because debt at this point in time is going to be very challenging. With a default rating, you can't really go to any lender. And even if you go to private credit, again, you've got that issue of excessive promoter pledging that has happened. And the last question that we need to definitely see is whether the market regulator is currently watching the company closely, and whether any questions have been raised by SEBI with the way the disclosures have come out and with the way the claims are consistently being proven wrong from Gensol Engineering.
Thank you, Rishi and Sajid, for giving us, such a detailed, context, what's happening, what kind of questions we need to be asking the company and what answers we need. But Gaurang, I'll come to you. A lot happening with Gensol. I don't know if you track the company closely or not, but, what's your view on this?
I think, we don't have coverage, so I won't give a buy, sell and hold. But, when there are issues like this, as it was elaborated by both your colleagues, corporate governance issue and financial irregularities, you don't want to be a Robin Hood, and try to catch a falling knife. I won't give a buy, sell and hold because we don't have coverage, but investors need to be very, very careful.
Got it. Thank you, Gaurang, and thank you so much for joining us and giving us your outlook on the same. But moving on, just like booking a cab or ordering your lunch, you can now book ambulances online. At least that is what Zenzo is promising following the launch of 25,000 fleet. The network includes 25,000 ambulances, some of which are 5G enabled. And my colleague Charu spoke to Shweta Mangal, co-founder and CEO at Zenzo. Listen in.
We've been running ambulances in India for the last 20 years, largely with the government. We run the 108 ambulance service. Of late, what we have seen is a lot of e-com player or cab aggregators, they have started services and they're delivering everything in less than 10 minutes. And after the pandemic, what we saw is a huge rise in the demand for ambulance services. But people still are confused on what number to call and what to do in an emergency, because emergency is an event which does not happen often. It happens probably once in a lifetime, and when that event occurs, people don't know what to do. And as co-founders of Zenzo, our aim is to make sure that one, people remember the number to call when they need an ambulance. Number two is to make sure the ambulance reaches them in less than 15 minutes. And third is to train people across India on first aid and CPR so that even while the ambulance is on the way, immediate medical help can be delivered to the patient.
Ma'am, talking about the logistics of this initiative, how many people are you, bringing together? How many people you are employing or getting on the platform? How is that working out?
So, as a company, we have 12,000 employees in the company. So, we run 4,000 ambulances for the government. Now, for this initiative, we have aggregated partners. So, we have 25,000 individual ambulance owners who have come on the platform. We also have few of our own ambulances because we also want to showcase the latest technology on ambulances. So we have 5G enabled ambulances which we run on our own. But our initiative is that we want to encourage all the players to slowly come onto the 5G platform as well. So currently we have aggregated individual ambulance owners on the platform.
And will there be other staff members present inside the ambulances apart from the aggregated drivers or the ambulance owners?
So in an ambulance, typically the ambulance are of two types. One is a basic ambulance, one is a cardiac ambulance. In a basic ambulance, you'll usually find a driver and a paramedic. And in a cardiac ambulance, you'll find a driver, paramedic and a helper. So when we say ambulance providers, they usually have this team. So what we do is ensure that the team is trained. So when we say we've created this network of 25,000 ambulances, we've ensured that they are validated and they are trained people.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
Hello and welcome. Today is perhaps the first time we're going to do 2 KYC shows in a single day. Well, for those who are unfamiliar, KYC is a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. And as I've mentioned, this is the second KYC we are doing. The second KYC is going to be on Gensol Engineering. Now, we have been talking about Gensol Engineering quite a bit through the course of the day. So let's start by taking a look at all the highlights around which we are going to have this discussion. For this, we have with us Mihika and Somit joining us to take us through that. Well, both of you, take it away.
Well, firstly, starting off with the business segment. So what does actually Gensol Engineering do? It is engaged in solar consulting and EPC business. It has also an arm which is into EV leasing. It recently also entered into battery energy storage. So basically, these are the business model of or the businesses of Gensol Engineering at this moment. But in the last 1 month, if you see, the share prices of Gensol Engineering has fallen more than 58%. In fact, from peak, if you look at, the share price fall is more than 70%, and the 1 month market cap loss is close to 1,600 crore rupees. So what went wrong here in the last 1 month? Mihika, please tell us.
Yeah, well, the company is in focus for all the wrong reasons. The initial trigger was a rating downgrades to the long and short-term bank facilities to a default by both Carriage and ICRA ratings. Now, as per Carriage ratings, the ratings were revised on account of ongoing delays in servicing term loan obligations as per feedback from the company's lenders. And ICRA ratings stated that no default statements shared by the company on its debt servicing track record are falsified. Now, this raised concerns on the company's corporate governance practices as well as its liquidity position. Now, if you look at the debt and liquidity picture, a key question that NDTV Profit is asking is that if the company had the liquidity of 250 crores as stated in its Q3 con call on Feb 13, why are the rating firms calling the debt payments as defaults? Now, in terms of where did the money go? Now, who can answer this question? Well, the company's management declined for the interview. Suresh Surana and Associates LLP, the auditors of the H1 FY25 performance, and the now resigned CFO of Gensol Engineering. If you look at the total debt picture lastly, it's 1,146 crores as per the latest statement. This compares to the last 12-month EBITDA of just 330 crores. Leverage of the company now stands at 3.5x. But there's also another trigger, Sumit. What is that?
Well, in fact, more than trigger, they're also, I guess, trying to address the liquidity issue here. Now, what the promoter has done recently is they have sold close to 11.5 lakh shares. In fact, on Friday, they sold close to 9 lakh shares and they derived around 30 crore out of this. But they are planning to infuse this 30 crore back in the company going forward. That is what the plan is. But how they will do that? Now, last year, they had issued some warrants of around 61.84 lakh warrants to promoters and to other investors as well, and this was done at around 871 rupees per share. Now, out of the 61.84 lakh warrants, 15 lakh were subscribed by promoters, and only 25% of the warrant subscription money had come in the company, that is close to 135 odd crore rupees. So the remaining 404 crore is something we believe that the company could call upon from the investors and the promoters. Now, out of this 404 crore rupees, 100 crore is something that the promoter has to put in the company. So that is how the promoter will look to infuse the funds in the company, while the remaining 304 crore is something that they will get from the other 107 investors. Now, the key question here is, will the 404 crore rupees will be honored or get devolved, since current share price is much lower than the conversion price. In fact, if you look at the conversion price of 871, it is nearly 2.7 times or nearly 3 times the current market price, which is around 300 to 310 rupees. And also, will this 400 crore will be sufficient enough for the company to meet its liquidity requirement?
Because the 400 crore balance is only 35% of the total debt, but the company has lately announced 2 divestment schemes in which it aims to reduce 665 crore debt, taking its net debt total debt to equity to 0.8. Claim 1 is to sell 2,997 EVs to Reflex for a total of 300 crores. The update on this deal is it will take another quarter at least to be completed. The second claim is to sell the US arm for 350 crores. However, the transaction is only expected to be completed by March 26. And even though one of the, you see a 7,000 crore order book, but there's a problem with this order book, Sumit. What is it?
Well, as a 7,000 crore order book on the books looks very much high for the company. But you need to remember that out of the 7,000, nearly half of it was the orders that the company received in the last quarter, that is the third quarter of FY25. However, they also mentioned that this order execution has been stalled due to land acquisition issues or land transfer issues with the developer, and now they are expecting these orders to be executed over the 18 to 24 months. Earlier, the order execution time period was much lower, and now this has extended to nearly 2 years by the company. So though the order book is very high, around 7,000 crore rupees, the execution time period is also over a period of 2 years nearly.
And lastly, we'll talk about the income statement. Their FY25 revenue target was stated at 2,000 crores. 9-month FY25 of reported top line stands only at 1,056 crores. And it looks like the company may miss its revenue guidance for the second consecutive fiscal in FY25.
Okay, well, Mihika and Soumit, thank you so much for joining us and taking us through that. I will make a very quick addition to some of these claims here. Besides the fact that we've spoken about the shareholding being sold into, we've spoken about the current debt and how the company may or may not be able to retire a lot of that debt, and of course the current order book picture, and there are some challenges with respect to execution of this order book. One aspect related to that is the revenue recognition bit, because over the past over the past few months, the management has suggested that they're likely to make 2,000 crores in terms of its top line in FY25. In fact, as on the 9 months ending December 2024, they have only been able to manage about 1,000 odd crores, which means that they'll need to do another 1,000 odd crores in terms of execution in the ongoing quarter. That's another big question mark, whether or not that can come through or no. But we've been actually talking about this particular story through the course of the day, and well, I now have with me Sajid as well as Vishwanath, my colleagues here, who have a lot more in terms of insight into what's going on. So Sajid, I'll start with you. What more have we come to understand here, and what are the important questions that still need to be answered?
The first question, as Mika mentioned, there was 250 crores of cash in the books. If you look at the audited limited review balance sheet, which came in September of 2024, it gave clearly marked out that roughly around 220 to 30 odd crores of money was lying as fixed deposit in the banks. In the Q3 earnings call, they categorically stated that there is an operational cash flows which are coming in and they have enough liquidity for operations. Remember, this company is not only undertaking EPC, which requires a lot of working capital, but also is undertaking a capex program, which was to set up a manufacturing unit for the EV electric vehicle, which they are trying to come out with. And so they were of the view that they already have the liquidity there. And certainly, we have two credible credit rating agencies on March 4th coming and downgrading the stock to D, to a default status. And further, ICRA went ahead and said that the company has been falsifying documents which on a monthly basis, stating that they've been current with all the debt service which is there, which is not the case, because the lenders have approached them and they've told them that there is an issue with the debt service which has come in. So where did the cash go out? Second thing is that just look at the P&L of the company. For 9-month period, it had a finance cost of 180 odd crores, which is there. Company in the earnings call said that we have a debt of 1,150 crores. Now we are talking about a gross debt of 1150 crores and an annualized interest or finance cost of roughly 240 to 50 crores. Which basically means that it's not the lenders which are giving them. There's a private credit which they have been taking about it. Though the rating agency has, rated roughly 2,000 odd crores of the band facility, which is long and short facilities. There is extra lending or borrowing which has happened off books, which has happened, for which they are doing it. It's in my opinion. And why I say that is when you look at the encumbrance of this or the pledged shares, the shares have been placed to private companies and not to private public lenders, basically. And so that's the reason why the shares have been placed to those companies, and they've raised money from there. So that is the multiple questions with respect to liquidity of this company and what they have stated, actually it is true or not.
Right. So Vishy, you spoke to the management. There were some clarifications. How much of it helps all the issues that have been raised by Soumit, Mika and Sajid right now?
To be fair, Agam, this conversation was not exactly clarifying anything more than what the company has already clarified to the exchanges, right? Like first of which is the fact that they claim it's not a default that has happened. But the rating agencies are very clear. A 0-day default regime is what we have right now. If you've not paid today, you're in default. You may turn NPA 90 days later as far as the bank number is concerned, but you are in default. And that part, the company claims that they will clear very soon. Debt obligations are being handled anyway. There's probably one more that is left that we will clarify. We'll clear. We don't know what the status of that is, because even the rating agencies didn't know till March whether there was such a default in place or not. The other clarity that they were providing is that we had originally pledged only about 50 to 60% of our shareholding to lenders for loans against shares, but we had to pledge more because share prices started falling, and therefore the margin requirement came in, and we had to pledge more shares with the lenders, and that's why the number is looking so high. Otherwise, it's not so bad. They believe that they can bring it down to a zero pledge company. Anybody's guess when that will happen, and how soon the company will be able to raise funds enough to release the pledge on their shares. Another important part of this conversation was why the debt was taken in the first place. Now, according to the company, they've taken about 250 crore worth of debt from PFC. This was to fund their EV business, and that is why that pledge exists. And now that they are actually going to go ahead and sell about 3,000 vehicles to Reflex as part of one of the deals that Mika was talking about. That will bring in about 315 crore, and therefore we can release the pledge that exists. Now, they are saying that the deal will happen next quarter, at some point in time next quarter. We don't know when or how soon that transaction is going to take place, whether Reflex has the funds to actually release that pledge or not, and whether the lenders are going to be okay. Because remember, if you've borrowed money, you need a lender's NOC. To actually make that transfer. So whether the lenders are okay with that or not, we don't know right now. And in any case, this is 4 months later. This is not today. Right? As part of the debt reduction plan, another thing that the management has repeatedly said is that they're going to sell this US-based subsidiary, Scorpius, for 350 crore. We don't know who the buyer is. And that transaction is at least a year away. So when will that transaction take place? Will that transaction actually take place in 12 months from now? We don't know, and therefore we still await the some more clarity. We had actually sent out some of these clarifications or questions to clarify these points to the management. The management just declined to come on the channel to clarify these points. But it's important to note that without these clarifications, the statements don't on their own hold a lot of water, especially because statements are consistently being proven wrong, and transactions are being taken place which are different from what they were originally pictured to be.
Right. Absolutely. So just to add to it, they came out with a preferential warrant issue in June of 2024 at 871 rupees per share. And the regulation says that they have to pay 25%, remaining 3/4 has to be paid within 18-month period. So that comes into play in December 2025. 871 was a price. Today we are at the price is around 300 odd rupees. It's uncertain who will come and convert the warrant into shares. No one would like to come and convert a warrant into share at 871, pay the money and take a loss of 500 rupees on the books. Unless it's a tax harvesting which is happening at this point in time. So that is a big issue which is there. So the promoters claim that they will convert their portion of it, but if that was the case, in September and October they bought from the open market, they should have converted the warrants and infused money into the company. But that didn't happen. It was an open market purchase which was undertaken by the promoters there. So there are multiple questions of why they have acted in a way they have, and there is a limited answer which is coming from them with respect to liquidity, where the liquidity went and how they will be able to. They're depending solely on two major diversification or divestments. One is a Reflex one, and the other one is a Scorpius. But both of them will take at least a quarter to a year to come. Until then, there's a liquidity crunch, and they will have no other option because the lenders are not going to lend further.
I want to add, they're going to do this board meeting come Thursday, right? Where they're going to discuss some kind of equity fundraise. They're also going to, they're also, I think, deciding on a stock split that is likely to come in for the company. Now, interesting to note that whether you do a equity fundraise decision by the board, you have about a year's worth of approval in place, but who are you going to go and sell it to, and where are you going to? A lot of your own shares are currently pledged with the lenders, right? You're already sitting at about 82% odd of your holding is pledged with other lenders. What are you going to sell to a potential investor? And you're also consistently selling equity in the market, whatever is freely available with you. You're selling it to address day-to-day costs. So important to see whether an investor actually turns up, whether there's a white knight in the picture, and if they do come into the picture, then what do they do with the promoter's position? Now, according to the clarification the management has provided to me during my conversation, they believe that the promoters will remain in control and they're not going anywhere. But I'm yet to see an investor who will walk in and look at the kind of governance questions that are being raised and the kind of financial difficulties that they're in, why would they want to take only 5-10%, right? Like, probably you would want to take a significant chunk of it, in which case there's going to be a rejig on the board.
Right.
And just to add, he spoke about the pledge one. The pledge data is as of December end.
Yeah.
Post that, there's a huge stock fall which has happened. So there will be more pledge which needs to come into place.
Right. And of course, the stock split aspect, it really doesn't help the company because it's not going to mean anything for the balance sheet. There's been a mention by the promoters, they want to provide liquidity in terms of their stock trading and all. It doesn't work that way, even if the stock split does come through. But that's another minor point that I want to make a mention of. That said, we do have with us Aditya Shah. He's the founder of Hercules Advisors, who also joins us to give us his perspective. Aditya, you've been tracking the stock for quite some time. You've also been talking about the fact that this particular stock has run up for no apparent reason over the past many months. Of course, notwithstanding the recent correction that we've seen, and eventually a lot of that has come through and played out. I want your view firstly on the several aspects that we've spoken about and in terms of the position at which the company is right now. What can you tell us?
So, good afternoon. Gensol is a classic case of cash flow mismatch that is really happening. The company, according to one of the rating agencies and one of the lenders, has not paid its debt obligation since 2 months. Mind you, Gensol's debt obligation per month is about 10 crore rupees. And it has not been servicing that obligation for the last 2 months. That's what we are given to understand from one of the lenders. So what is really happening is they were very, very aggressive in their EV business, manufacturing of EV, and that's a very cash burning business per se. And the company does not have any cash flows per se. So if I were to summarize within few words what happened at Gensol, cash flows were really very poor. They went into a very capex heavy business, and on top of it, they kept raising equity. At some point in time, that equity will die down. At some point in time, the investors will say that you're diluting way too much. And slowly and steadily, as the cash flows continue to dry up, problems started at Gensol per se. Mind you, the corporate governance is not is something to take note of in Gensol. They kept issuing press releases. They kept saying that we have 7,000 crores of order book. That all is okay. But if the company does not have access to cash flows, it is but obvious that there's going to be a problem. Now, once a rating agency downgrades a stock to D, no lender is going to touch them. They will have to continue to do equity infusion per se. And now the massive problem starts for Gensol. So in my opinion, this is a downward spiral that the company is going through, and the seeds were laid already by the management by not focusing on cash flow, cash-rich businesses, and they tried to diversify into too many businesses per se, which were cash burning per se, particularly the EV manufacturing business. So net, poor corporate governance, poor cash flows, limited access to capital, and now promoters pledging them out, and time and again trying to put out statements which were not exactly a true picture of the company. Mind you, one of the rating agencies does say that they have evidence of falsified information being shared with the rating agencies. So there should be an investigation as to why the rating agencies did say this, and SEBI should get involved and the MCA should get involved and understand what is going on in this company. Right now, the situation is very precarious for the company per se, and investors should be really very careful on this.
Aditya, Vishwanath here. Let's talk about the corporate governance issue a little later, but I want to first talk about the business dynamics here. Is this a classic EPC story where what we've seen maybe in the last, maybe 10 years ago, where a lot of EPC companies were just not able to roll over their debt or be able to execute any of the projects, and that led to the demise of a lot of those companies. Are we sort of seeing similar trends?
Exactly, Vishwanath. We are seeing that the cash flow, the EPC business was pumped up in 23 and 24 on the basis that it is a renewable energy business and it will do pretty well. But what really happened is the cash flows were not chugging in for Gensol. And mind you, with their Blue Smart business also, that was also a cash burning business per se. So what you really find here is most of the businesses for Gensol were cash burning businesses, and no business per se was bringing in cash flow that could help in day-to-day operations. As a result of this, Gensol has gone on a cycle of equity dilution time and again. Over the last 2 to 3 years, it has diluted about 4 to 5 times per se. And this sort of dilution just points out to one fact that the company does not have money per se to run the day-to-day operations per se. Given with that fact, uh, uh, and the ability of the company to not service debt right now, it is a problem. And as you rightly pointed out, this is a classic case of cash flow mismatch, and the company has no control over its cash flows per se. So, from my perspective, I had pointed out this in 24, whole of 24, that cash flows are not there, and constant equity dilution is a big red flag in a company.
Okay, I wanted to add one more question here. So the cash flow issue now, according to the company, this is a temporary issue, a small amount which can be addressed soon. Let's assume even that is even right at some point, right? The next logical question is, what about all of these corporate governance questions then? Because even if you stabilize and you normalize your debt situation and somehow come back into doing business, the corporate governance questions still remain. The point is that you led the market to believe a certain financial position, which was not true. You led the market to believe that actions you're taking are towards liquidity, but you failed to mention that the issues are far deeper than what you were looking to address. Those questions will still remain, right, irrespective of where the financial position ends up being.
Absolutely. Vishy, so no rating agency writes in their research report that they believe that they have evidence of falsified information. If ICRA would have had some concrete evidence, only then they would put that out in writing. I believe now this is the time for SEBI and MCA to get involved to protect the interest of minority shareholders, to figure out what exactly has happened, how the rating agencies find out that the financial position was falsified to them, and steps should be taken in order to stop this. And if promoters had falsified that evidence, then they should also be questioned, why did they do that. In my opinion, what seems to be happening is that the CFO, the entire blame has been put on CFO, and the CFO has been asked to resign per se. But a thorough investigation must be done. On top of it, Vishy, over the last 1 or 2 years, Gensol has been continuously putting out positive press releases on the social media. The promoters are celebrating the rise in the stock prices. I believe if it's a good company, these are things that promoters should not really do, and the promoters should focus solely on running of the business. Outcome of the stock price is solely the discretion of the stock market and not the promoters per se. So in my opinion, there must be a thorough investigation as to what happened. SEBI and MCA should get involved, and then lay out in front of investors what is going to happen. And mind you, with all of this episode, neither they will have access to debt products, neither they will have access to equity product, unless and until they have a white knight who says that I see the potential in the business and I am going to buy over the business entirely. So now Gensol is a very, very big problem. Yes.
Right. So Aditya, speaking of the white knight, I think that is the only solution at this point in time, right? Because the two positives that could potentially play out for the company, one is that they do realize the revenues from Reflex in, say, about a quarter down the line, for which we have no specific timeline. And also, 9 months later, potentially we will see their US subsidiary sale come through, for which once again we have no confirmation whatsoever. I'm assuming that even if these two events do play out in favor of the company will still be in a lot of trouble, because in the near term, even over the next 3 to 4 months, cash flows are just not coming in, which means that in any which way the company is in trouble. Is this a correct way of looking at things?
Absolutely. So Agam, to reach 9 months, first you have to operate for 9 months. And today with the debt servicing rating of D, as Vishy already knows it, D means that no lender is going to touch you whatsoever. Your equity infusion with cash burn of around 20 to 40 crores would mean that you will survive for 1 or 2 months. How will the company survive after that? It can only survive if it works very, very rapidly to upgrade its rating from D to BBB minus or something of that sort. So the real problem for Gensol is how it is going to go through the next 3 to 6 months with no solution on their funding per se. Equity capital, they cannot keep raising equity capital. Today, the market cap of Gensol is about 1,200 crores. if they're already diluting about 10 to 15% of the company right now when they're raising 100 crores. And now again, if they go in for one round more dilution, there's a bigger problem for existing shareholders that their equities continuing to keep getting diluted. So now there's a massive problem of how will you go into the funding phase. Once your rating is downgraded to D, you are practically handicapped per se, and tough questions should be asked from the promoters per se as to what they were doing and why were these defaults not notified to the exchanges and to the investors that they were not paying their loans for 2 months per se. So a lot of questions, difficult time, but then that's how it is.
Well, fair enough. Aditya, we leave it at that. Thank you so much for taking the time out and speaking to us here at NDTV Profit. And of course, thank you, Vishy and Sajid. Yes. Yes, Sajid. Yes.
The CFO which resigned lately.
Yes, that bit. Yeah.
Yeah. He was appointed on October 7th, 2024.
Right.
So within a quarter, he has resigned.
He resigned, yeah. Yeah.
So you can't even blame him for
whatever has happened.
Absolutely.
Simple as that.
Absolutely. Well, fair enough. Of course, we'll await for more from the management themselves, but this is all that we have for this special edition for KYC. We slip into a short break. On the other side, we continue the coverage. Stay tuned in, and we'll be back in just a minute.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the
Well, thanks for tuning into India Market Close right here on NDTV Profit, and it's it's a day which is on tenterhooks. I think that's the best way to put it, because if you just look at how the markets have turned in the last few minutes of trade, not the prettiest. Now bring up the European markets first. I just want to mark what the world markets are up to, just to show the nature of the color on almost all markets. So the European screen will come up. Flattish to marginally lower. Asia was similar, by the way. Asia wasn't the strongest in the session today because the Dow futures too were trading in the red when we started off the trading session today. So in some sense, there is a problem. By the way, the US futures are now down a lot larger or a lot more than what they were about 4 hours or 5 hours ago. So it's a week which is interesting because of a lot of moving parts, and it's showing in the way our markets are reacting. The market breadth, weak. It's a yawning gap between the advances and the declines, so bear that in mind. And then let's get the Nifty 50 heat map going, just to show you the the weightage going to show you the 4 or 5 stocks which must be, because this heat map is a bit illegible, just showing that there's a lot of red. But if we get the weightage points contributor going, you will see that L&T, Reliance, Trent, essentially the principal culprits. Infosys on the other side because of the brokerage notes doing well. There's some bit of strength in HUL and ITC. And similarly, if we can pull up for the Nifty 500 before we go to our guest, just to show you what's happening at that end, that side of the market too. Aavas Finances is a good move. Solar, JSW Energy and a few others doing okay. On the flip side though, capital market plays are really taking it on the chin, with both 361 and JM Financial really hurting in trade amongst the top losers. Let's get in our guest to try and understand what to do in a scenario like this. Emin Kapadia of DR Choksi FinServ on the technicals joins us right now. Emin, good having you. As always, of course, thanks for joining in. But if we were seeing a fair degree of outperformance, Emin, by the broader end of the spectrum the whole of last week, today's a bit of a reversal of sorts.
A very good afternoon, Neeraj. Thank you for having me on the show. Always a pleasure. Well, couple of things, Neeraj. VIX has gently moved up to 14. We moved up 650 points in a jiffy. There were two bearish gaps, Neeraj. I think we spoke earlier also. One got covered up, the other one is left. And like you said, Reliance was the culprit, but Reliance moved $100 in 4 days. See, these are recoveries, not rallies. So the laws of gravity had to catch up. So I believe that it's a normal profit booking correction simply because the stocks, some of the stocks, mid-cap, small-cap didn't. Some of the stocks and the Nifty moved up sharply for 4 trading sessions. Now, this is expected. Some of the mechanical indicators on the intraday charts give a crossover sell toward the close on Friday. And it has spilled over to today, Neeraj. Now the thing is, Bank Nifty showed relative strength, didn't go much below the low of 27th Jan, which the Nifty did. But now the Bank Nifty is looking weak. Succinctly put, we gave a bounce. Now we're going to come back and test the lows. I believe the lows would hold. The lows don't hold of last week. I think there's going to be mayhem. But too early to say that, probably won't. But yeah, if you make a higher bottom, then the next anticipation would be a higher top. So I guess it's like you're making a U-turn on a signal, Neeraj. You'd go from the third gear, second gear, first gear, then scale it up to second and third that way. So takes its own sweet time whenever there's a turnaround in the market, up or down, Neeraj.
But you are not, how do I say, you are not are you going out and doing a short on the Nifty or the Bank Nifty today? On the Nifty, on the indices per se, index trade?
I gave a sell call on Friday on the Nifty to few clients, Neeraj. Today, no. The logic behind it is two important cogs in the market in terms of weightage and this thing. Reliance has bottomed out. I stick my neck out in saying Reliance has bottomed out. And I think the Adani group is bottoming out if it hasn't bottomed out. I believe this is just a flash in the pan. Things should, there's a holiday filled week. People would have trepidation, Trump, tweet, whatever. But I feel the market is on the turnaround, Neeraj.
Okay, so presumably not going short, I'm presuming. So in which case, are the stocks balanced out as a mix of a long and a short, Hemen, or do you have two longs?
I have two longs. I would prefer to buy on declines because the main trend, some of the mechanical indicators in the daily chart in the Nifty have given a buy, Neeraj. So that's not the main trend. It's a short-term move. But if the short-term move is turning bullish or turning technically positive, I will not short. Yeah, there are a few pockets. But yeah, so firstly, a buy on Asian Paints. These stocks have given a turnaround on the weekly chart also, not only on the daily chart. So buy on Asian Paints at 22.85, stop loss 22.35, target of 23.85, risk reward ratio of 1:2. Secondly, this is a slightly high risk one simply because I'm anticipating a turnaround. The confirmation could take maybe a day more. But yeah, a buy on Policy Bazaar, deeply oversold, positive divergences, volume spikes at lower levels, a turnaround is around the corner. A buy on Policy Bazaar at 1440, stop loss of 1410, target of 1500. Neeraj.
Okay, now, and we'll do more stock talk, of course, with Hemen, but let's try and stick to stocks and try and talk about some key stocks. So Neogen Chemicals, let's bring that stock up first for you. To our mind, it's one of the key stocks and one of the top stocks of the day today. In fact, we're calling it the stock of the day because it has cut guidance after the Dahej plant fire. India's anti-dumping duty on trichloroacid might be a boost for Bodal Chemicals, but Neogen in particular is the key focus area today. And Varsha John said to talk about this. Now, Varsha, markets don't like uncertainty. They've come out and said that it is all insured, etc. Loss of business is insured, but it's not helping the stock today.
Absolutely. And the Neogen Chemicals, if you see the buzz around Neogen was a company giving its guidance on the back of, battery chemicals plant. But now because of this fire, the guidance has been reduced for FY25 and 26 as well. So they've cut their FY25 revenue guidance after the Dahej plant fire, which was on 5th March. So the guidance has been revised to 765 to 800 crores versus earlier guidance of rupees 800 to 825 crore. While in FY26, the revenue guidance have been revised to 775 to 850 crores versus earlier guidance of 950 to 1000 crores. So this is the key reason why the stock is down. And as you said, that market doesn't like uncertainty. Maybe this may happen that there may be more revision to the guidance of the current guidance given in a downward direction. The Dahej facility was established in FF 2020 for inorganic chemicals. Warehouse and tank farms have extensively damaged, though there are no casualties or injuries occurred. The reconstruction is expected to take 9 to 12 months, and the company is expected to shift production of critical specialty products to other sites as well. So because of all this, because of the revenue guidance to the downwards direction, we are seeing the pressure. The stock is almost down 8-9% in trade today.
Okay, fair call. Varsha, thank you so much for that. But Varsha, stay on because I do want to ask you about Bodal Chemical as well, and because that stock quite the reverse in terms of the fortunes really. What's happening here?
So yes, so Bodal Chemicals, if you see, India has imposed anti-dumping duty on TCCA imports from China and Japan. Now this product is used in water treatment and food processing, and Bodal Chemicals is India's sole TCCA producer, and this is expected to add 50 to 60 crores of revenue annually, and the duty is actually effective for 5 years from March 2027, 2025. Now, I think, so as per me, maybe the revenue guidance that the company has given may go up, because considering the sole manufacturer of this product, and the anti-dumping duty will actually aid this product, because currently if you see, this product contributes almost 4% to FY24 revenue of the company.
Thanks a lot for that, Varsha. So interesting chemical names out there. It's very difficult to brand this as a bucket, Himen, but any thoughts individually on a Neogen or a Bodal chemical or any of the other chemical names, if you will?
Obviously, due to this fire, Neogen is completely different from where Bodal is, but one needs to keep in mind that over the last 6 years, Neogen has gone up from 243 to 2,400. Okay, there was obviously fundamental reason for this stock to come off, but we've already peaked a few months ago, so this isn't very recent. But yeah, having said that, 1450 is rock solid support. I'd be a bit surprised if, okay, I know that is still maybe a 10% away, but I'll be surprised if it breaks 1450. On the other hand, Bodal is looking good, deeply oversold, but turnaround is around the corner. And the funny thing is, we've been corrective as far as Bodal chemical is concerned for the last 8 years, Neeraj. So it's a completely topsy-turvy scenario. But yeah, I think Bodal is on the cusp of a turnaround right now. Is restricted to the short-term charts though.
So, a clutch of other chemical names, Aarti, etc., all of them are looking weak. Alkyl amines is down about 3%, but that may have to do with the fact that the broader markets have looked a bit wobbly in the session today. I think the ones which have corrected the most today are some of these capital market related names. So 361 is the top loser. JM Financial is not too far behind. So that bucket is looking slightly wobbly. Dixon is corrected quite strongly today, 5.5%, so that is looking slightly wobbly in trade. Railway companies like Titagarh Rail have also corrected very, very swiftly today, so that's the other problem. The gainers include Aavas Financiers, Godrej Industries, JSW Energy, as we spoke about. So those are one or two which have held out. The one stock though, and pull up HPCL as the next one that is there on our list, just to mark what that stock is doing in the session today. Down 2%. Unfortunately, the private sector CEO coming in hasn't quite lifted the spirits of the stock. So that has looked slightly wobbly in trade. Now, we'll talk about both of these things because joining me on the show today is my, of course, co-anchor Harsh, who joins in. And we'll talk about Aavas Finances with him. And Somit joins in to talk about the Herd on the Street segment. But before we get to, okay, since we played the music, since we've run the sting, let's talk about Herd on the Street first. Then we'll talk about Aavas, and then I'll request Somit to stay on to talk a bit more about HPCL because he tracks this space probably better than anybody else that I know. But Somit, Harsh, good having you. Somit, thank you for joining in.
Well, we were talking about Aavas. So Aavas is actually the first stock on
my
list.
is that so? Okay.
So what I understand is that this open offer was going on and it closed on Friday, and a lot of institutions were actually waiting on the sidelines to buy this counter, given the fact that there is an MFI recovery that is playing out, and hence we are seeing high kind of volumes and high traction on Aavas Finance. In fact, one can expect high delivery volumes also on this counter today. Second stock is IndusInd Bank. Now the stock is down today because of news that we have already talked about, but what I'm understanding is that long only funds are buyers when it comes to IndusInd Bank at lower levels. Valuations are cheap and they do not see any issues with respect to the bank as such, and hence this is the rationale behind long only funds buying this counter. Then there is ICICI Bank. Buy flows are seen on FI desk specifically when it comes to ICICI Bank, so keep an eye out for that stock. Power stocks as a whole, you talk about Adani Energy, Adani Green, Tata Power, Power Grid, NTPC, NHPC. Basket buying has been seen when it comes to FI and large HNI desk, specifically for power stocks. There are expectations of higher capex and order announcements coming in by the government side starting April 2025. And that's the rationale why we are seeing such kind of positive traction when it comes to power names. And lastly, a host of stocks that remain in focus: Coforge, Persistent, Kalyan Jewellers, Max Healthcare, Dixon, Paytm, Trent and Bharti Hexacom. Now what I understand from dealers is that a leading mutual fund has been seller in all these counters because in fact he has been selling a lot of stocks from his mid-cap fund. That is what I'm understanding. That's a leading domestic mutual fund, and these are few names which are among its top holdings and which are seeing selling pressure because of that. Now we do not have any clarity whether it's because there is redemption pressure in that mid-cap fund or it's just selling because it does not see any value going forward. So that is still not clear. But yeah, obviously I cannot name the mutual fund, but yeah, that's what I'm thinking about.
Very interesting, and would be lovely to see, because two of the names are amongst the better performing mid-cap IT names or non-large cap IT names, and there is some selling seen. So very, very interesting. Okay, so Amit, thanks for that. Now we'll have to hold on to both the HPCL and the Aavas point, because first I'm just very quickly gonna get in Siddharth Khemka to talk about mid-cap IT, then we are going to go to Puneet, my colleague who is waiting by, to talk about autos, and then we'll try and talk about Aavas Finances. Siddharth, thanks so much for joining in. We hear that maybe a leading MF could be selling into some of its holdings, which include IT names as well. I would love to know though, these stocks are down about 20%, 21% as the case may be from the peak. Would you be skeptical on the fortunes of these names, or are you an accumulator at lower levels of these companies like Coforge, Persistent, etc.?
Yeah, good afternoon, Neeraj. Thanks for bringing me on the show. I think if you look at the overall IT space, while the outlook remains positive, I think the near-term headwinds are something a bit challenging given the uncertain you can say trade environment, specifically with respect to the US trade policy, and that impacts not only us but the US, Europe, a lot of the key markets for Indian IT services companies. So I would say that yes, the mid-cap IT specifically, you are asking that the growth remains pretty strong, order book are healthy, and I would accumulate at lower level. These are opportunities because of a lot of macro factors, plus as I was hearing you, some mutual funds selling, I think some profit booking or some other pressure leading to that dip. What we like Coforge, Persistent. These are the preferred picks within the tier 2 IT companies, and earnings growth are pretty strong for the next 2-3 years, 20-25% earnings growth, and I think with the correction, valuations are again becoming attractive for these strong names.
Well, okay, thanks a lot for that. Siddharth, stay on. Hemant, stay on. Let's get in Puneet, our colleague, who is going to talk about the Bank of America note on the Indian auto sector. Puneet, give us the salient features of this note.
Well, surely. So, they've come out with an auto note across the 10 OEM players, and specifically, they have cut target prices on 6 of the 10 OEM stocks. So, M&M, they maintained a buy, and what's interesting is they maintained their rating across these 10 stocks. So, just the target price correction that's visible on your screen right now. So these are the top 4 ones. So M&M, of course, they maintained their buy but cut their target price. Bajaj Auto has also seen a very sharp target price cut as well. Apart from that, when you look at the other players such as Hyundai as well as something like a Tata Motors and Escorts as well, those are the 2 key underperformed stocks under the rating, and they maintain their buy rating on Maruti Suzuki, Ashok Leyland as well as Eicher Motors, which is the top picks, along with Mahindra and Mahindra. Now there are some 3 key points in this particular report. The first one is that the two-wheeler volume trends have taken a sharp U-turn. It's reported a negative volume growth in this particular month of February, and versus it was a double-digit growth in the first half. And they mentioned that certain reasons for this is, of course, the tighter financing of these particular vehicles. States have also, there was election in the first half, so there was a lot of subsidy tailwinds. That has also gone away, and hence the kind of demand momentums have shifted to scooters versus motorcycles, hence they prefer TVS. And the other aspect that they mention is that the premium motorcycles are doing well compared to the middleweight as well as the commuter ones, and hence they prefer something like an Eicher versus Hero MotoCorp. Finally, they mentioned that they're forecasting a lower growth of about 6 to 7% next year for FY26 versus earlier estimates of 8 to 9%. And they mentioned that tractors could stand out in this particular fiscal year based on what comments that M&M has made in terms of tractor sales. And they mentioned that Maruti could be one of the key stocks to watch out for in terms of EV launches, SUV further launches in FY26, as well as the higher export share. They mentioned that Tata Motors, again a stock, could see not too much downside from these levels, but weak business momentum as well as tariff pressure might be something that will weigh on the stock. So they maintain the positive view on Eicher Motors, M&M, as well as Maruti Suzuki, along with TVS Motors, but very heavily underperformed rating on Escorts as well as Hyundai Motor Corp.
Okay, thanks a lot for that, Puneet. And we'll take it to our guests on autos, but keep in mind that the market is very topsy-turvy right now, because while the Nifty is down 0.5% and a swift down move in the last 30 minutes, Sensex is 0.32, and the small caps have actually recovered a little bit from the lows of the day. So it's a very, very different market that we have at our hands right now. But autos, I wonder, Siddharth Khemka, anything on autos very quickly?
Yeah, so quickly, I would mostly agree or concur with what are the points of that report. The preferred pick for this year remains M&M on back of pretty strong tractors outlook, and M&M is far outperforming even Escorts, which is the other large tractor players. For the SUV part as well, and the new EV launches, they all put together put M&M in a very strong driving seat. So that's the preferred stock, followed by Maruti, where again the EV launches and the SUVs, which were a missing pack, they are getting launched this year, which should drive growth. In terms of two-wheelers, while the premium segment is definitely picking up, but we don't like much of names there. Hero Moto definitely valuation-wise looks attractive, but that discount is for a reason, because of the slower growth as well as pickup. So clearly we would like to avoid the two-wheeler space in the current environment.
Okay, Siddharth. Now the two stocks that we kind of highlighted first up on the show, time to focus a bit more on both of those. First one is HPCL, and Somit has been waiting by. Somit, HPCL, a private sector person at the helm of affairs, not very often seen, and in a scenario of lower oil prices. Is this a double bonanza of sorts for HPCL or not quite? The street doesn't seem to believe so.
Well, at least in the morning, the stock was up to 2.5%. It just could be because of the market weakness that we are seeing this kind of downtick. But obviously, a private sector person coming into the company could be quite positive for HPCL, because if you look at the history of HPCL compared to its peers, it has a weak execution track record and a weaker operational efficiency when compared to its other peers like BPCL and IOCL, and hence a private player coming in would definitely could turn around things. At least that is what the street is hoping to happen with HPCL. Now, if you look at the new chairman and managing director, his Vikas Kaushal, and he has been appointed for a period of 5 years. He was earlier a senior partner in Kearney, and this is the first instance, as I was mentioning, that a private player has come in. Now, before this, he was the chairman, he was the country head of Kearney for a period of 5 years, ending 2019. Post that, he became the chairman of the company, and what reports are suggesting that he has worked with several oil and gas and in fact power sector PSUs as well for some specific projects. So he has a working experience with PSU oil and gas companies. So how does he put that to use in HPCL will be something that we need to watch out for here. Now, this turn or this first appointment of a private player could also be because of the fact that now it's ONGC who's owning HPCL and not government directly, and hence this move could have been taken by the ONGC management to give the handover or give their operations to run to a private player. So it will be important to track how HPCL, whether HPCL in fact outperforms its other peers or not going forward.
Important points, Somit. Thanks so much for giving us that lowdown as well, and for what you're hearing on the street too, of course. So that's on HPCL. Now, of course, Somit, here's a thing or two about Aavas Financiers. Harsh, I'm going to take it to you. Aavas Finance is amongst the top gainers today.
Well, yes, and not surprisingly so, Neeraj. When you have such a large holder, getting an easy exit at a decentish valuation definitely gives investors as well as the street a bit of a comfort, and typically becomes the floor price. You know it more better than me. 1775 being that price, and therefore very unlikely that or very likely that this move would have happened in any case. But essentially it'll be interesting to see now on charts how this one is looking, and I'll probably take it to Himen for that one. Himen, how's it looking on charts at this point, Aavas?
Looks decent in a shaky market, rounding bottom. we've been consolidating and relative strength coming in. So I would say it looks surprisingly stable and yeah, it's still a bit far away, but above 1950, things should start working up even more. I have a feeling less to lose, more to gain.
Okay, so we'll slip into a very short break. We'll continue conversation on the other side, and we'll probably take views as well from Siddharth Kemka. Stay tuned, BTST plus other views, and we'll continue to discuss other stocks as well.
Also, bull versus bear segment, I hear.
A bull versus bear, a very interesting Kotak note on trend as well. So,
oh wow, and that stock is down today, so very interesting to hear that. Okay,
so we'll talk about all of that and more. Stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Welcome back. You're watching India Market Close here on NDTV Profit. Thanks for staying with us. Now, the big stock or the big mover in trade today is surely IndusInd Bank. We've tried to break down as to what's happening in the stock, what's happening on the counter, and we've kind of tried to present this in a bull versus bear kind of case. So let's pull up the first one. Now, essentially, it's a Nifty 50 counter. Its loan book has grown at 12% CAGR in the last 5 years, so not a bad kind of growth clip, especially given that there was COVID within that last 5 years. And, overall, IndusInd Bank well promoted and a solid bank in terms of name. But what's really happened, they've guided for an 18 to 23% growth guidance at the start of this financial year for the next 5 years. Unlikely to meet that right up in the first year itself. Of course, today the leadership change is the overhang, but just look at that, the right off the bat, not being able to keep up with that kind of growth clip that they've guided for. Now, what's gone wrong at this point? Stock down 35% in the last 6 months or so. Microfinance is the drag. Now, is the question really is, and the market today asking, is this the bottom where microfinance is concerned? And if it is, then you might see IndusInd actually bounce back fairly well, because that is the key drag with regard to asset quality for IndusInd at this point. So any kind of turnaround there could help. What's the bear case? Well, MFI issues in Bharat Financial, which is IndusInd Bank's subsidiary, has been the case for a very long time. It's been a big drag on IndusInd overall as well. In fact, they haven't been able to forecast asset quality issues very early either. Q1 of this financial year, they were guiding for a steady on-course financial year. Q2, you saw a turnaround with regard to asset quality. Q3, despite the elevated provisioning in Q2, Q3 was also elevated. So really, where is the light at the end of the tunnel where IndusInd is concerned, and whether they can turn around Bharat Financial in a big way is the question. The bull case, change in leadership. This is the big news which is moving the stock in trade today and has done so last week as well. May actually lead to a re-rating. I mean, a more capable leadership could well change the way in which IndusInd operates, as well as how the stock is perceived. But the 1-year extension given to the current MD CEO will mean that at least for the next year or so, Mr. Katpalia continues to lead the bank, and therefore could well continue to be an overhang. The leadership overhang will continue to remain next year as well. But at the same time, let's look at valuations. At 0.9 times FY26 expected price to book value, it's well below average, and it's well below peers as well. There's, of course, multiple overhangs. Asset quality, leadership being just two of the overhangs we've just spoken about. Growth is the other one. On a low base, not been able to grow. And therefore, whether that multiple can re-rate in a substantial fashion is really the question. And let me put that across to Siddharth. Siddharth, do you believe that there is a case for a large multiplier in terms of re-rating within IndusInd? How positive are you at this point on an IndusInd Bank? What's the target price and what makes you positive?
Harsh, I think you laid out the positives and negatives pretty clearly. I think if you look at the core business, I think last few quarters has been pretty muted, be it in terms of slowdown in growth, asset quality stress, subdued margin performance, and a bulk of this is already being factored in by the stock price, which is corrected 40% in the current FY25 YTD. Plus, I think the biggest overhang now remains with regards to the MD's term extension, which has contributed to the further derating. There is 1 year time horizon, but this 1 year will keep a lot of uncertainty with regards to change in management, who will get appointed, how things will move from here. While the valuations at these levels bake in most of the negatives, I think Q4 would be the worst of the quarter in terms of the washout quarter, another washout quarter for IndusInd, and I think that is where maybe the stock could make a bottom. Until then, we would clearly stay away from IndusInd, although the valuations look attractive. I think we'll have to wait for Q4 and some clarity. I think once the new management name is announced, once the new leader names is announced, I think that's the time when the street will start liking or taking a favor towards IndusInd. Until then, the stock could continue to remain under pressure.
And Hemen, your technical perspective with regard to IndusInd, what levels are you looking out for? A Nifty 50 name with likely the highest upside from a fundamental perspective. Do the technicals also align as much?
No, it's a dichotomy because if you look at IndusInd, many stocks, including maybe SBI, ICICI, Axis, even maybe an HDFC Bank, many stocks have made new highs over the last 4-5 years. The Bank Nifty has. Now, IndusInd Bank has peaked somewhere in August 18, 7 years and counting, and we are nowhere close to those highs. So it has been, I wouldn't say perennially, but have been underperforming for a long time, and that doesn't seem to have gone away. It fell off a cliff to 250, went back to 1700 and has resumed its downward journey. Rock solid support at 1800. If I were to stick my neck out and say something positive, it would be only at 1800, not at current levels. We've seen a distribution which has seen a breakdown. We've broken 920. There's a downward gap. Sorry to say, not very many high, except an oversold situation, which doesn't tantamount to much unless we see some follow-up buying. I don't see any technical positives yet, Harsh.
Okay, so that's the view coming in on IndusInd, the big one, 4% lower in trade and sustaining actually that weakness, not showing any respite. Let's switch focus though to metals. The steel sector is in focus today after the domestic steel makers hiked prices for the second time in a month. What could be the implication of yet another price hike? Mihika is joining in to give us a lowdown, a perspective on this one. Mihika.
So as per our dealer checks, Indian steel mills have hiked their domestic prices by 2,000 rupees per ton. Now hot rolled domestic prices are currently priced at 50,000 rupees per ton. And this latest price hike marks the second one in around a month. The last one was of 1,000 rupees per ton, which was done at the start of February 2025. We even saw steel stocks having a good run last week, an 11% gain for something like a Tata Steel. And you had SAIL, JSPL and JSW Steel all seeing gains of 5% last week. Now in terms of the importance of this of a price hike in general, it indicates not only strong uptick in demand, but it's also positive for the realizations of companies, and all the listed players do make flat steel products, which is what the price hike is relevant for, and they usually contribute 50 to 70%. For example, for a Tata Steel, in terms of their FY24 volumes, their flat steel volumes stood at 16.6 million metric tons, which is 83% of their total volumes. For JSW Steel, flat steel volumes were 75% of the total, and for SAIL and JSPL, it was comparatively lower at 45% and 39% respectively.
Okay, thanks for that perspective, Mihika. Metal index, one of the strongest sectors, in fact, last week. And there's still a lot happening in the industry too. Aditya Velekar from Axis Securities talked about his top bets in the current market. Listen into a slice of that, relevant in this context.
Top picks are Hindalco, then we like Tata Steel in our metal pack. We also like Nalco and Vedanta. So that is the pecking order. JSPL also looks good at these levels. So and then on the base metals, aluminium prices have withstood strong despite the dollar index moving up. Now the dollar index have cooled down, but still aluminium prices have stood firm, and we are constructive on aluminium prices basically because the demand supply scenario for aluminium is much better as compared to ferrous and steel, because the demand from renewable electric vehicles and all that stuff that will keep driving aluminium prices, that will keep supporting aluminium prices. Also, the supply is something which is not really picking up. So the supply demand scenario fundamentally for aluminium looks fairly stable, and that is the reason we are constructive on aluminum prices, and that is why it is reflected in the prices as well.
Okay. Himen, what do you make of metals at this point? Strong outperformance last week. What's the expectation like now going forward?
Like you mentioned, Harsh, I think, frankly speaking, if you look at the Nifty Metal Index, it's one of the few sectors, or maybe only sector, which seems to have signaled strength on the weekly charts, Harsh. Almost 7 weeks of a sideways move, and we get we actually give a mini break, a breakout of sorts above that at the end of the week. So what's happening today is simply because it's moved from 8,100 to 9,050 in 5 trading sessions. Maybe a couple of days more of adjustment, but metals are looking good after almost 8 or 9 months on the charts, Harsh. So I would be more positive than negative. Hindalco was obviously the better stock. It has moved quite a bit. So is Tata Steel. Maybe something like a SAIL needs to play catch up, and maybe a General Steel and Power. But SAIL hasn't done much, promised a lot, is promising a lot, but we need to close above 114. So Hindustan Copper looks promising, oversold, but it's in the ban list. So I don't think we can do much over there. But yeah, if I believe SAIL would be playing catch up to Tata Steel, I think it would, or maybe General. I would be more positive on metals in the market, Harsh.
Okay. All right. View on metals, Siddharth. The fact that we're seeing steel prices, the pricing environment get better for steel producers, at least domestically. Plus, you have the possible China factor also likely to play out. Of course, certainty not there, but likely to play out. What's your sense at this point? Is it a good time to add on to some of these stocks?
So Harsh, I think the view on metals is positive if you look at several factors. The first one is that in the earnings cycle, I think the metals is on the recovery phase with the likely improvement in realization. The risk of a China dumping is reducing, A, with the Chinese cut in production, B, with the talks of some government safeguard in terms of some safeguard duties from China. So those two are kind of supporting the domestic metal prices. And I think the other point is that there are news reports about how the China is looking at improving its economic growth as well as stimulus, which also bodes well for the metal stock. So I think all in all, with the improvement in earnings, realization as well as margins, plus the news flows, metals look good. Within the stocks, Jindal Steel is one of our preferred picks out there, followed by, if you look at non-ferrous, Hindalco is something that we like, with the Novelis subsidiary being a large portion of business within US. They are safeguarded from the tariffs, US reciprocal tariffs, and that makes it a preferred bet out there. Plus, Novelis, the value add in terms of the aluminum that they are doing, that continues to do well. The domestic business for Hindalco also is pretty strong. So within the metal space, the direct players, I think two preferred choices, Jindal Steel and Power and Hindalco. Within the indirect place, Coal India looks attractive given the good dividend yield, the stock price correction, and the gradual improvement in demand both from metals as well as from the power sector.
Okay, interesting. The other one buzzing in trade, viewers, is Trent. And you had a Kotak institutional note where they've maintained or retained their reduced stance on the stock. Anushi joining us to tell us. Anushi, plenty happening on this one. You had the whole saga with regard to branches play out on Friday. But what's that note telling us?
Right, Harsh. So one of the points that the note has started off with is the stock volatility that we saw over the course of last week after it came out with its count in terms of where the west side stores is, and then the subsequent revision which took place, which kind of led to the kind of volatility that we saw in the stock prices. So now Kotak, while they've retained their reduced rating, they've revised the target price to 5,150 as compared to 5,550 before, which implies for a 6% of an upside from the current levels. However, if you just see the target price change, that is comparatively higher. Now, what they've pointed out in their note is, again, the expectation net addition of 11 stores this year in FY25, which is lower than what we've seen in the last 3 years, which was a net addition of over 26 or 14 to 18 stores in periods between FY22 to 24. Along with this, they're seeing pressure on Trent's revenue throughput, and this is on the back of densely new stores added, stores which are being added across both the Zomato and West Side formats Zudio and the West Side formats that are there. So considering that, they're expecting a flat revenue throughput for Zudio, and they're trimming the revenue throughput for West Side. Again, this revenue cut impact is driving the EPS cut also, which is going to be in the range of 1 to 5%, because of which we are seeing the subsequent change in the target price of the stock, and hence the reduced rating which they continue to maintain. This is despite that the company believes, rather Kotak believes, that Trent Limited is one of the best performing stocks in the retail space, but now they believe that all the positives have been baked in. So it is these couple of factors which needs to be considered now, and hence the revision in target price that we are seeing.
Interesting. Siddharth, your views with regard to Trent, opportunity to buy, would you say?
So yeah, I think there are definitely some moderation in growth, and which is what the market is trying to factor in. So the new normal or the new growth base effect will take some more time to settle, and I think that's a good time to gradually accumulate a quality name like Trent. Pretty strong growth trends that we see. Yes, as I said, the growth has come down from the earlier 40-50% to now around 30%. But we believe that the long term and especially this year, the consumption trends overall looks good. So we expect a good second half of FY26, and that is when the stock should do well. So we continue to remain positive on Trent. We have a buy rating, but in the near term, stock could be under pressure on back of the lower growth expectation. But that would be a good time to add to a quality name like Trent.
Okay, interesting one. Let's though switch focus. Sugar companies, and we have an NDTV Profit exclusive. Sugar companies in focus, as ISMA is planning to meet OMCs at Nitin Gadkari's residence. Hiral joins us to tell us more. Hiral, what can we expect? When is the meeting, and what could the possible buzz be about?
Thank you, Harsh, for that. So this is sources to NDTV are indicating that ISMA is going to meet OMCs on Tuesday, that is tomorrow, and this meeting is to be held at Nitin Gadkari's residence. Now, the meeting is mainly to discuss policies with regards to ethanol blending, and they are seeking clarity in terms of the ethanol policy and the pricing and ahead of the new sugar season. Now, Nitin Gadkari, Prahlad Joshi and Hardeep Singh Puri, they will be present as well for this meeting. Clearly, we know that the prices of ethanol from B-heavy and sugarcane juice had been kept unchanged in January. Only ethanol produced from C-heavy molasses was increased from 0.88 from 56.58 to 57.97. Plus, the blending currently is at around 19%. So overall, this is what we are picking up from our sources. The stocks, though, are trading under pressure in today's session. Let's see what comes out tomorrow, whether it will be in favor of any of these sugar companies or not. Over to you. But Harsh, one more thing that we need to address right now is with regards to what's come out of the Maharashtra budget, where, what they've indicated right now is that the tax that is going to be coming in, now they're proposing to increase motor vehicle tax by 1%, and this is on CNG four-wheelers, and any motor vehicle which is above 30 lakhs, that will be taxed at 6%. And this is going to be big news with regards to companies like M&M, Tata Motors. To some extent, you can look at a Hyundai and Maruti as well, but this is going to be contributing to almost around 625 odd crores to the state revenue. This is the numbers that we're picking up so far, but we will get you more details on this, but this is something, Harsh, that we need to pick up pretty closely now.
Wow, yes, very interesting. Flashing at the bottom of your screen, correctly put, Hiral. A 1% increase on CNG four-wheelers. likely to impact names like a Maruti. Let's pull those up, try and see what's happening on some of those counters. And then you have a large 6% on EVs, 30 lakh plus. Siddharth, just give us your quick take on this one, this latest development that's coming through. In your sense, Maharashtra is of course a large market for some of these players, maybe lesser for Maruti than some of the others, because you'll start to see an impact, right? 6% is a large amount, especially on EVs.
Yeah, Harsh, I think if that news is what we go by, I think the initial judgment would be that it is definitely negative for EV players. Tata has a large presence in the passenger vehicles EV space. Also on the CNG side, I think some of the LCVs where the CNG Bajaj Auto in the three-wheeler space has a large presence in the CNG space. M&M also in the three-wheeler space. The mini LCV space. I think these are all initial negative news flows for the auto sector by and large.
Interesting. Maruti has just fallen off a cliff. Anything you're catching on charts, Hemen, within auto on the back of this?
I thought Tata Motors was something which was looking good, but that's not probably gone the way that I thought it would. Okay, Bajaj Auto, Hero Moto, they're all oversold, deeply oversold, even Tata Motors. But somehow the spark is missing. A turnaround is not yet quite visible on the chart. So maybe they want to take some more time to adjust. So nothing looks particularly exciting. Yeah, having said that, Maruti was another one which was threatening to make a new high. That's also, it's in the past tense. So nothing very compelling at this point in time. Yeah, deeply oversold, so maybe the downside would appear relatively limited in at least some of the stocks.
Okay, very interesting. Siddharth, we'll let you go on that note. Hemen, and thanks so much for joining us this afternoon, Siddharth. Always a pleasure speaking with you and getting your perspective. Hemen, quickly back to you. BTST, that time of the show, what's your recommendation today?
I have a STBT on Bajaj Zenzo, but I would advise our viewers to avoid doing anything simply because all technical parameters showing a sell on the hourly, 2 hourly, half hourly charts, everything looks not good. Gut feel says it's not going to go down much. So I say if you can avoid a trade in today's market, avoid. But yeah, I have a STBT on Bajaj Zenzo at 1842, stop loss 1850, target 1826. It's just a very small STBT because there's a weakness on the intraday charts, Harsh.
Okay, all right. So that's one stock to keep on your radar. But essentially, Hemen being cautious, saying do nothing rather than. But if you really have to pull a trade, that's the one he'd pull. But stock on our radar, Jubilant Food. Jefferies is maintaining the buy stance on the stock, sets a target price of 1,000 rupees on this one. Stock, of course, was in the green briefly, but currently sitting in the red. Mika's here with all of the details on that one.
Yeah. The 1,000 rupee target price implies a 66% upside, and Jefferies has highlighted Jubilant Food as a conviction buy and the best idea in the retail as well as discretionary space. Now, while the slowing consumption is certainly a worry, Jefferies believes that a series of initiatives undertaken in the past few quarters will help the company with its momentum in the coming quarters, and they do not see the recent Q3 as an aberration. A key concern was the margin guidance of 200 basis points on a consolidated PAT level, but the brokerage is saying that the management is being conservative and they expect EBITDA margins will expand over 250 basis points. Jefferies also likes the franchises that with the focus on growth, and they believe profitability will follow the growth coming forward. And lastly, the promoter acquisition of Hindustan Coca-Cola holding deal also appears to be structured in a bid to avoid any significant outlay at one go.
Okay. Thank you so much for that, Mihika. Hemen, tempted to ask you Trent first before I take Jubi. What's the call on Trent at this point? 4% lower.
The way I see it, it's 40% lower over the last 6 months, but anyway, the whole market has been that way. Support at 4,200. This is not the time to get brave, because anything that bounces might not sustain, because 4,200 is where that medium term and even longer term support. And yeah, whatever we see is restricted to the short term chart. So the medium term picture still remains shaky and wobbly.
And rather than a Jubi, he may not rather much take context or take your view with regard to the index as a whole. Sustained weakness suddenly creeping in over the last hour or so. We're 0.5% lower odd on the Nifty, and we're near the day's low, at this point. What should one expect from the rest of the week? It's a truncated week, just 3 trading sessions more to go, but they seem already like it's going to be a long one.
Yes, Harsh, I wish you would have got a holiday for the whole week, but that's what I'm thinking. I think Harsh, a small rounding top on the intraday charts doesn't augur very well. We've been down for 1, 2, 3, 4, 5, 6, 7 hours in a row, not looking very pretty. Support at 22,400. Having said that, it's giving a downward key reversal or bar reversal. Without getting too technical, we've had a 5-day bounce and we've reversed that. 22,300 is important. Tomorrow doesn't seem like a good day, but I have a feeling we'd recover from lower levels. But 22,300 needs to hold, because a higher top, higher bottom scenario is needed for a market to turn around. So tomorrow could be a bit iffy, but I believe we might end positive tomorrow.
Oh, okay, very interesting. Okay, so maybe some bit of green tomorrow, but at least today we've broken a 3-session gaining streak that we've had prior to today. So certainly not looking too pretty. And look at the mid-cap and small-cap indices now, seeing some real pain all of a sudden, right? But what to watch out for? You have the Euro group meeting up, and that's one thing. The China National People's Congress and Japan GDP data coming through, nothing major per se. Corporate actions, you'll have one dividend expected from BEL, again nothing material there. And then there's a stock split, IOL Chemicals in focus on the back of the record date. 5:1 is the split that is expected. Some stocks, again, I want to quickly try and mark out, which may be moving in trade within the mid cap. You're seeing a KEI Industries, which is down 6% odd, a Dixon Tech down 6%, Kalyan Jewelers down nearly 6%. Let me, Himen, ask you with regard to your views on KEI, because that's one space which has somewhere over the last couple of weeks gone silent. Polycab, KEI and the like. What's the sense at this point on a KEI Industries, down 6% today?
5-year up move. I mean, this is just the first year, so I believe the correction should spill over to the next calendar year. Very strong support comes in at 2,800. But yeah, if you were to look at it from without a trading point of view, I think it's a avoid for some time. It's not that it's going to go down one way, Harsh, but yeah, 5-year up move, a couple of years can be expected, and that's what we are undergoing. And I don't think it's going to end in a hurry. Bounces, yes. Recovery, yes, but no.
Okay, so an avoid there as well. That's, I believe, just the mood and the texture this afternoon. Thanks so much, Himen, for joining us this afternoon. It's been a tough one, at least the last hour or so of trade. But appreciate all the views and appreciate you joining us. Very quickly, on the Nifty, we're seeing around 0.5% shaved off. And you pull out the intraday chart, you largely see that it was back-ended, that move. From around 1 p.m.-ish, we've seen quite a gradual fall at first, and thereafter a steepish kind of fall at around 210-ish. And we've closed near the day's lows, 0.5% lower. We've again broken 22,500. We're 100 points down, and currently holding, trying to hold 22,450. That's broadly the texture, but we made the day's high at 22,670. So we've fallen quite a bit from that point, 230 odd points from there. So some bit of pain clearly visible from those highs of the day. Let's look at the heat map as well, try and see how it's shaping up. Just about 10 stocks advancing within the Nifty, but where's the pain? Trent, IndusInd. Trent, a note by Kotak. IndusInd, of course, the leadership overhang continues. Bajaj Auto is down 2.5%, and some auto names really seeing pain. ONGC is the other one, which is down nearly 4.5%. So some pain in those pockets. Let's look at the heat map on sectors as well. Try and zoom out, look at sectors in particular. Only the FMCG index, the defensive, looking okay. Realty index again seeing pain, 2.5% lower. PSU banks 2% odd lower. Nifty auto down 1.4%. Mind you, we marked out quite a few names within the auto pack which is seeing pain. But that's the one. And you had a BOFA note as well, which came out today. The Nifty Pharma is also down nearly 1%, and the Nifty IT around 0.5% thereabouts lower. So largely in line with the index. We've closed for the day. Let's look at the broader end, and let's look at the advanced decline first, because the breadth doesn't look good at all. And look at how sharply it's worsened as the day has gone by. We closed at nearly 1900 declines to just about 350 advances right at the bottom end where we've closed the day. So again, going to be interesting to see how tomorrow starts to play out, because today has not been a particularly great day, especially the latter half of today where the pressure is really mounted. Let's pull up the Nifty Midcap, down 1.7 now, giving up last week's gains. The Nifty Small Cap, real pain here, 2.22%. We've closed at the day's lows where the Nifty Small Cap is concerned, and from the highs of the day, 14,750. We've closed at 14,270, nearly 460 to 470 points shaved off on a single day from the high point of the day. So quite a bit of pain. Otherwise, 280 points down, nearly 2% lower. A bit of a bounce, still some volatility there. So we'll have to wait and watch where exactly does that close, but roughly 2% lower. So pain clearly visible. Some stocks flying around. Let's pull up the BSE 500 top gainers, top losers. That kind of caps off. Solar Industries within the defense pack, Power Grid within the Nifty 50 was up 3% on a day like this, definitely positive. But look at some of these names. Within the financials pack, JM Financial 361 down 8% each. Triveni Turbines is the other one hurting. KEI, we spoke about that just a few minutes back, down 6% odd. So some real pain within the broader markets. But with that, we're out of time on this edition of India Market Close. But let's go across to Tushar. He has something breaking for us. Tushar.
So good afternoon, Harsh. So according to the Maharashtra budget that was announced right now, the motor vehicle tax on CNG cars has been increased by 1% for a various number of vehicles. So if you look at how CNG cars are taxed in India, 9% of a CNG car will be taxed at 9%. If they are more than 20 lakh rupees, 8% tax if it is between 10 lakh and 20 lakh rupees, and 7% if the price is up to 10 lakh rupees. All of this will increase by about 1% going forward in FY26. Secondly, Maharashtra government has proposed to increase the road tax on EVs to 6% across for EVs costing more than 30 lakh rupees. This was across the board. It was so far 5% according to the national policy that we have for electric cars in India. Immediate impact for the CNG revision or tax revision will be on Maruti Suzuki, Hyundai as well as Tata Motors, all of which are draw about 25% of their volumes from CNG cars. In the EV space, Tata Motors and Mahindra are not likely to be impacted immediately because their current offerings are still below 30 lakh rupees. Those who will be impacted are BYD, the Chinese car maker, and all the Germans, Audi, BMW, as well as Mercedes. Their EV offerings will get now impacted by about 1%. Last year, the number of CNG cars sold in Maharashtra was about more than 2 lakh units. EVs, we don't have a picture as of now. As when we have it, we'll just share it with you.
Okay, Tushar, thank you so much for that context. Of course, it's an evolving story and it's fast evolving. That was very, very quick in terms of a breakdown, but we'll keep getting you that. Thanks so much, Tushar, for joining us this afternoon. But out of time on India Market Close, at least today. It's been a tough day for markets. Stay tuned. Tomorrow, And it's a truncated week, so just 3 more trading sessions to go. It's going to be an interesting week going forward for sure. Stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very integral part of the market.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. Viewers, benchmark indices end the session lower. The Nifty ends below 22,500 mark, whereas the Sensex ends below 74,200 levels. Broader markets underperform benchmarks. Now, all sectoral indices barring FMCG end with cuts. Realty index cracks the most, followed by PSU banks and auto. The rupee ends weak by 45 paise after opening sharply lower. This comes amid the dollar weakening to a 4-month low on global tensions. IndusInd Bank cracks to multi-year lows after the Reserve Bank extends tenure of Sumant Katpalia as the Managing Director and Chief Executive Officer for a shorter term. The banking regulator on Friday approved the reappointment of Katpalia as the managing director and CEO of the bank for 1 year with effect from March 24, 2025 till March 23rd of 2026. IndusInd Bank had sought approval for his position for a period of 3 years. This is the second time that the RBI has approved his extension by a shorter term than what was sought. In 2023, the regulator cleared only a 2-year term for Katpalia. The big story is Gensol Engineering. The stock melts over 56% in just over a month, wiping off 1,600 crore rupees of market capitalization. The free fall in the stock was induced after the promoter sell 9 lakh shares or divest 2.37% equity worth 330 crore rupees. The first trigger came on March 3rd when rating agency Brokerage downgraded the ratings of Gensol Engineering's long and short-term bank facilities to a Care D. The credit rating given to issuers who are in default or expected to be in default. Another credit downgrade from ICRA raises concerns on the company's corporate governance practices and liquidity position. This is one of the reasons why the stock tanked between March 3 and March 5. CLSA upgrades Infosys to outperform with a target of 1,978 rupees on the stock. The company's discretionary demand revives across verticals. While a weak Q4 seasonality is priced in, the on-ground demand resilience intact. Tariff-related uncertainty could lead to wider growth guidance for FY26. Bank of America bets heavily on auto giants M&M, Maruti and Eicher. BofA believes that two-wheelers have made a sharp U-turn and markets don't like the share loss at all. On the other hand, four-wheelers slip into a slow lane as Tesla grabs all the attention. Tata Power's arm, Tata Power Renewable Energy, signed a Memorandum of Understanding or the MOU with the Andhra Pradesh government to develop up to 7,000 megawatt of renewable energy projects. The estimated investment in these projects are for 49,000 crore. The investment amount makes it one of the largest renewable energy investments in the state. In a big blow to IREDA, the RBI declines the company's request for equity investment in the 900 megawatt Upper Karnali hydroelectric power project in Nepal. The company said that it will submit its request again. Morgan Stanley is betting big on Reliance. The brokerage firm maintains overweight on the company with a target of 1,606 rupees. RIL's earnings have seen multiple legs of recovery since last quarter. Morgan Stanley thinks that the company has seen more evidence of recovery at refining and certain chains of chemicals. RIL's attractive valuations and earnings recovery makes the company a top pick. Jefferies is bullish on India's defense capex trend. Indian government ramps up the capital expansion with 87% growth in defense. Capex ex-telecom and the Department of Economic Affairs is up 10% year-on-year versus 5% revised estimates. Jefferies believes that the government will closely monitor industrial stocks given the weak first half. Now, speaking about the BEL, Jefferies maintains a buy stance on the company with a target price of 325 rupees. The buy stance comes amid higher orders from the company. Jefferies says that the company announces 580 crore rupees order flow and needs another 11,300 crore rupees in March to April 2025 to meet its guidance. Now, Jefferies is of the view that the global news on rising defense spend may be a near-term trigger for the company. Now for metals, Jefferies maintains buy on Tata Steel and Hindalco, maintains a hold stance on JSW Steel. The positive view comes amid a variety of reasons. Stock outperformed driven by optimism on China recovery, expectation of safeguard duty on steel in India and aluminium prices holding up well. Asian Steel spread remains 20% below long-term average and has scope to expand. Jefferies thinks that any safeguard duty can provide support, boosting margins and valuations. Vascon Engineers launches residential project called Vascon Orchids in Mumbai. It has an expected gross development value of 300 crore rupees. The project will comprise 3 wings featuring 2 and 3 BHK homes. Infosys partners with Sectoral, SaaS-based cybersecurity products and technology company. As a part of this partnership, Infosys will offer disruptive vulnerability management services for its clients through SecPod's Center Now CVM platform. Now, through this partnership, Infosys aims to help enterprises overcome challenges such as delayed risk identification and increasing backlog of remediation and inefficiencies caused by siloed products in vulnerability management. The company's appeal court, NCLAT, upheld the delisting of the ICICI securities from stock exchanges, dismissing appeals by Quantum Mutual Fund and an individual investor. ICICI Securities shareholders in March 2024 approved its plan to delist from the stock exchanges and merge with its parent, ICICI Bank. Quantum Mutual Fund had approached NCLAT in September to oppose ICICI Securities delisting, citing concerns over its impact on the minority shareholders. Earlier, the Ahmedabad bench of the NCLAT had approved the delisting, dismissing the fund's objections. Schneider Electric will be investing 15.8 crore rupees in South Bihar Power Distribution Company for capacity addition of ring main units. The partnership actually aims to modernize and enhance the state's power distribution network as part of a joint effort. The deployment is to enhance distribution power reliability and 550 volt passage indicators, that are the FPIs, on overhead lines to improve fault detection and response times. IT employees in Bengaluru affiliated with the Karnataka IT States and or the ITES Employees Union protested at the Freedom Park on Sunday, demanding a better work-life balance and no overtime. This followed recent comments from IT leaders endorsing 70 to 90 hour of work weeks. Protesters burnt posters of Infosys CEO Narayan Murthy and Larsen & Toubro's Chief Executive S.N. Subramaniam after involving in a scuffle with police officers who were opposing burning of the posters. Workers chanted slogans, Narayan Murthy and Subramaniam, "We will burn your greed in the streets. We are workers, not slaves, and we will crush the greedy corporates." Coforge announces the launch of a generative AI center of excellence in Greater Noida in a partnership with ServiceNow. The initiative combines Coforge's AI framework, Quasar, with ServiceNow AI agents to help organizations leverage AI-driven insights and improve operational efficiency. Now, the COE will enable customers to develop and scale AI solutions for industry-specific challenges across financial services, insurance, healthcare, and travel sectors. SEBI will hold its board meeting on March 24. This makes the first board meet under new chairman Tuhin Kanta Pandey, who took charge on March 2nd, according to people familiar with the matter. All departments have been asked to submit their proposals by March 5. While the agenda is yet to be finalized, the people said that adding discussions are expected to focus on improving the ease of doing business. SEBI has been working on simplifying regulations to enhance efficiency and transparency for market participants, including investors and companies. The meeting may address streamlining process and reducing compliance burdens. Mumbai's Ring Road project receives funding commitments worth $2.5 billion. The largest lenders on the deal are REC, NBFID and IIFCL. Disbursement of the credit facilities will happen in stages and the road construction will start in the next financial year by April. Maharashtra Finance Minister Ajit Pawar presents the state budget in the Assembly for financial year 2025-2026, reiterates the government's stance on this being a big bang budget for the state. Amid green lighting key projects, the Maharashtra government proposes new industrial policy to focus on 40 lakh crore rupees investment and generation of 50 lakh jobs. Additionally, the state budget proposes motor vehicle tax of 1% on the vehicles below 30 lakh rupees and 6% on vehicles above 30 lakh rupees announced in the Maharashtra budget. Zenzo, an ambulance service company, announces partnering with Zomato to provide emergency medical services. With a massive network of 25,000 ambulances operating much like cab aggregators, this innovative fleet includes some 5G-enabled ambulances, aiming to integrate all vehicles onto a 5G platform for enhanced connectivity and efficiency. Now, the network offers both basic and advanced, that is the cardiac ambulances, ensuring the medical assistance is just a call away. Regardless of the situation, the Zenzo's platform aims to provide emergency services within 15 minutes. To prevent overcharging during emergencies, Zenzo has implemented a fixed pricing model for ambulance services with no surge pricing, ensuring fair and transparent cost for all the users. Now, with new therapeutic cancer vaccine, autogene cevumeran has been developed to treat pancreatic cancer. Unlike preventive vaccines, this personalized treatment is given to patients who already have a tumor. It uses mRNA technology to train the immune system to attack cancer cells, potentially reducing the risk of recurrence after surgery. The study published in Nature highlights promising early results. A study published in The Lancet warns that nearly 60% of the world's adult population could be overweight or obese by 2050 if no action is being taken. Researchers from the Institute for Health Metrics and Evaluation found that obesity rates have surged from 929 million in 1990 to 2.6 billion in 2021. Without intervention, this number could reach 3.8 billion by 2050, making obesity a major global health crisis. Mumbai Metro 1 is set to introduce a shuttle service between Andheri and Ghatkopar to improve frequency and ease of congestion during peak hours. A recent trial run showed promising results, with officials analyzing data to optimize future operations. The move comes in response to commuter feedback, as 87.5% of the peak hour passengers travel on this busy stretch. Indian pharmaceutical market has delivered marginally lower revenue at 7.5% year-on-year in February 2025 compared to 8.7% year-on-year in January 2025. Overall growth in February was driven by growth in price and new launches, while volume growth continued to remain muted at negative 0.2% year-on-year. Now, year to date in FY25, IPM reported growth at an average of 7.3% year-on-year, led by price growth at 5.5%, new launches growth at 2.7%, and volume growth at negative 0.8%. Now, among the top 10 therapies, cardiac, gastro, neuro, CNS, and derma outperformed in the IPM growth, while weak growth was seen in anti-infectives, respiratory, and gynec therapies in February. Lupin launches generic heart drug in the US. Rivaroxaban N tablets is used to treat and prevent deep venous thrombosis, a condition in which harmful blood clots form in the blood vessels of the legs. The generic is bioequivalent to Janssen's Xarelto. The US drug regulator inspects JB Chemicals and Pharma facility in Gujarat. The inspection that took place between March 3rd to 7 concluded with no observations and no Form 483 was issued. Neogen Chemicals slashes growth outlook for FY26 amid fire at the Dahej plant. The company revises the FY25 revenue guidance to 765 to 800 crore versus guidance of 800 to 825 crore rupees. Now, FY26 revenue guidance revised to 775 to 850 crore rupees. The earlier guidance for FY26 was 950 to 1,000 crore rupees. Bodal Chemicals jumps after the anti-dumping duty on imports of trichloroisocyanuric acid or the TCCA. Bodal Chemicals is the only producer of TCCA products in India. The anti-dumping duty imposition will add 50 rupees to 60 crore rupees per annum in total turnover starting from financial year 2025 to 2026. Shah Rukh Khan has won a legal battle against the Income Tax Department, with the Income Tax Appellate Tribunal ruling in his favor. The dispute stemmed from taxes related to his 2011 film Ravan, with the authorities challenging his declared income of 83.42 crore rupees and rejecting his foreign tax credit claims for taxes paid in the UK. On the 16th day of rescue efforts, authorities recovered the body of one of the 8 men trapped in the collapsed Sri Shalom left bank canal tunnel in the Telangana. The victim, identified as Gurpreet Singh from Punjab, had been stuck since collapse on February 22nd. Chief Minister Revanth Reddy announced an ex gratia of 25 lakh rupees for his family. Vizianagaram MP Kalisetti Appala Naidu has announced a 50,000 rupees cash incentive for women having a third child and a cow for those delivering a boy, funding it from his salary. His offer made at an International Women's Day event has gone viral. The move aligns with Chief Minister Chandrababu Naidu's push to boost population growth in South India. He also announced that maternity leave will now apply to all women regardless of the number of children they have. Double blow for Air India. In the first, an Air India flight en route from Mumbai to New York was forced to turn back after receiving a bomb threat in the morning. The flight AI 119, which was carrying 322 people, including 19 crew members, safely returned to Mumbai after a potential security threat was detected mid-flight. In the second incident, another Air India flight from Chicago to Delhi was forced to circle back to Chicago due to a technical snag. Alternative arrangements were made in the time for the passengers to take them to their destination. A total lunar eclipse or the blood moon will occur late Thursday, turning the moon a deep red for over an hour. This will be the last total lunar eclipse visible in the US until March 2026, making it a must-see event for the sky watchers. India and the European Union will begin their 10th round of free trade agreement negotiations in Brussels today. With the deal targeted for completion this year, talks will focus on resolving key issues amid concerns over potential US tariff hikes under the Trump administration. After more than 9 years in power, Justin Trudeau is stepping down as Canada's Prime Minister. Former central banker Mark Carney has won the Liberal Party leadership race with a decisive 86% of the vote, defeating Chrystia Freeland. Carney now faces the challenge of navigating a trade war with the US under President Donald Trump while preparing for an upcoming general election. Ukrainian President Volodymyr Zelensky made a sarcastic remark about his attire on Sunday while speaking at an award ceremony. The event took place weeks after a tense exchange with the former US President Donald Trump, who had criticized his choice of clothing during a White House meeting. In a video released by the Ukrainian presidency, Zelensky ended his speech by jokingly saying, "Sorry, I'm not in a suit," which was met with smiles and applause from the audience. Israel has ordered an immediate halt to Gaza's electricity supply to pressure Hamas into releasing hostages. A week after blocking all aid to the region, Hamas condemned the move as blackmail. Despite sporadic violence, both sides have avoided full-scale war since the truce ended on March 1. Hamas is calling for immediate negotiations to reach a permanent ceasefire. US federal immigration authorities have detained Mahmoud Khalil, a prominent pro-Palestinian activist and recent Columbia University graduate. Khalil, a US green card holder of Palestinian heritage, played a key role in last year's campus protest. His arrest marks a sharp escalation in President Trump's crackdown on what he calls anti-Semitic campus activity. Khalil's lawyer has vowed to challenge the detention in the court. A man who scaled London's Big Ben while holding a Palestinian flag was arrested after spending 16 hours on the landmark. First spotted early on Saturday morning, he remained barefoot on a ledge despite police and emergency crews urging him to come down. His identity has not yet been disclosed. Russia launched 119 attack drones on Ukraine overnight following a deadly weekend of aerial assaults that killed at least 24 people. Ukraine's Air Force intercepted most of the drones, but strikes hit multiple regions. In response, Ukraine launched its own drone attacks into Russia, prompting airspace restrictions in several cities. Another gem has been added to the Indian cricket team's crown. Men in blue defeat the Kiwis in the ICC Champions Trophy final, winning it for the second time. Captain Rohit Sharma was awarded the man of the match. He scored 76 runs out of 83 balls. After winning the title, Indian team captain Rohit Sharma announced that all rumors which are going of his retirement announcement are false, and he is going to play the one-day internationals. Under his captaincy, India won their second Champions Trophy title. Previously, they won in 2013 under MS Dhoni's captaincy. Well, with that, it's a wrap on Market Express. Stay tuned to NDTV Profit as there's more lined up ahead.
very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
The Nifty Sensex end the session lower and broader markets underperformed the benchmarks. All sectoral indices barring FMCG end with cuts. Realty index cracks the most, followed by PSU banks and auto. Gensol Engineering in the hot seat again, with its stock plummeting nearly 40% in just 5 days and over 56% in a month. The sharp decline comes as the company grapples with a growing debt crisis, which has put immense pressure on its promoters. Two flights of Air India make a U-turn mid-air. One because of a bomb threat, while the other circled back after 10 hours in the air after most of the lavatories clogged and became inoperable. Zenzo launches a 25,000 ambulance network for easy online booking, ensuring emergency help within 15 minutes. Staff are trained, pricing is fixed, and no surge charges apply. Maharashtra Deputy Chief Minister Ajit Pawar tables the Mahayuti government's budget for the 2025-26 fiscal. He unveils plans for Mumbai's third airport, a bullet train station near Vadhavan Port, and a metro linking Mumbai CST with Navi Mumbai International Airport. And the Maharashtra Budget 2025 also introduces a revised motor vehicle tax structure. Vehicles priced below 30 lakhs will now be taxed at 1%, while those costing above 30 lakhs, including EVs, will be taxed at 6%. Mark Carney has won the race to succeed Justin Trudeau as Canada's Prime Minister, and in his victory speech attacks Trump over tariffs and says Americans should make no mistake, in trade as in hockey, Canada will win. Good evening, you are watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest, not just on markets, but as well as international and national news. And on to our big story of the hour. In a significant move, the Maharashtra's coalition government, in its first budget since coming to power, has proposed key changes to the motor vehicle tax. A 1% increase has been announced for CNG four-wheelers, while EVs priced above 30 lakh rupees will now be taxed taxed at 6%. These changes are expected to generate 150 crore rupees in revenue for the state in the next year. My colleague and auto sector expert Tushar are joining us to break down the impact of this new tax and which players, Tushar, will be the most affected by this.
Good evening, Sanjana. So the Maharashtra government has announced a 1% hike in CNG car prices, for the road tax on CNG cars, which means that CNG cars priced above 20 lakh rupees, which were taxed at 9%, will now be taxed at 10%. CNG cars priced between 10 lakhs and 20 lakhs, which were taxed at 8%, will now be taxed at 9%. CNG cars priced less than 10 lakh rupees will be taxed at 8%, again 7% earlier. Remember, electric cars, all of them were so far exempt from any tax, road tax under the Maharashtra EV policy that was introduced in 2021. Now, electric cars priced above 30 lakhs will attract about 6% road tax, but below that, there will be no tax as such as per the EV policy. Now, the companies will be impacted will be for CNG, Maruti Suzuki, Hyundai, as well as Tata Motors, the mass market players. For electric cars priced above 30 lakh rupees, it will impact the Germans, BMW, Audi and Mercedes, as well as BYD, and it will isolate Tata Motors and Mahindra as of now.
Understood. So, Tushar, what are the potential effects of this tax revision on the overall cost of vehicle ownership, if we're talking about for consumers and vehicle owners or potential vehicle owners in Maharashtra, and how might this now influence purchasing decisions in the state?
See, while the price hike may not be a lot, it's just 1% across the board for CNG cars, but it serves as a dent to car buying sentiment, especially when we are seeing a downturn in car sales in the last couple of months. So while, yes, the price increase may not be materially high, but it does serve as a, like a sentiment downer for prospective buyers who are looking at the CNG space.
Absolutely, Tushar. Thank you so much for that crucial update coming in as the Maharashtra budget was presented. And the state budget, like we rightly said, also marks Deputy Chief Minister Ajit Pawar's 11th budget as the Finance Minister of Maharashtra. According to the pre-budget